investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Equities positive here, up 0.1% on the S&P, on the Nasdaq higher by about 0.49. The opening bell, of course, a few hours away. Before that, setting the tone for financial markets worldwide, 8:30 Eastern Time, 41 minutes from now. You'll get the payrolls report. Under surveillance this morning, waiting for the real numbers.
We have a jobs report coming out, the first since the BLS commissioner who you fired won't be there. Can you commit to saying the data will be credible?
Got safety.
The real numbers that I'm talking about are going to be whatever it is, but will be in a year from now. I think you'll see job numbers that are going to be absolutely incredible. You're going to see job numbers like our country has never seen before.
So here's the latest this morning. President Donald Trump forecasting absolutely incredible jobs for next year. While traders anticipate a tepid August payrolls report, the estimate in our survey expecting 75K to be added. Steve Asciutto of Mizuho has a more bullish call. He's looking for 90,000. Steve joins us now for more. Steve, good morning.
Good morning.
Would 90 be enough to derail that rate cut to this month?
No. I mean, Jerome Powell opened the door pretty wide at Jackson Hole. The market has walked through it. So now you kind of need a knockout punch. You didn't get it in the JOLTS data. The claims numbers certainly didn't change much at all either. They're still showing a healthy labor market. So now you need a knockout punch. And I think you'd probably need to see a combination of factors. You'd probably need to see payrolls in the 125 to 150,000 with no major downward revision. You'd probably need to see 0.4 versus 0.3 in hourly earnings. And more importantly of all those, you'd probably need to see the employment rate drop to 4.1%. instead of going up to 4.3 from 4.2, because it's the jobless rate that is the most political aspect of this report.
On the flip side, how low is the bar, or how high is the bar for them to cut 50 basis points?
That's a very, very good question. 4.4% unemployment rate would get you there quickly. 0.1% in hourly earnings probably wouldn't. Definitely a payroll employment number in the 0 to 25 range would certainly increase the ante of a 50.
So I want to have a battle of the Steves. We had Stephen Englander on earlier, and now we have Steve Asciutto. Stephen Englander saying that he actually does see justification for a 50 basis point rate cut because ultimately the revisions have been so weak. And when you take a look at the overall data and the modeling, you can actually see an even less exciting labor market than some people are saying. You don't think that it's needed at all and that the Fed could just remain pat. So can you square that difference, bridge that gap?
Well, it really comes down to how restrictive you think the Fed is. The market seems to be of a mindset that our start, which I hate that concept, is at 1%, which means 3% is neutral. And at 4.5%, effectively at the upper end of the range, the Fed is 150 basis points too restrictive. So if you start from that presumption, then you build the story that Stephen Englander produced. If you start from the view that you've got a 2% real rate, then you're 4% if you're credible on a 2% inflation, then you're 50 basis points restrictive against the financial market that's extraordinarily accommodative, against the financial market where the dollar has moved lower, and a market in which we're doing record numbers of corporate deals and they're 4 times oversubscribed. We've got excess liquidity in the system. Is 50 basis points too restrictive? That's really the rub between the two. It comes down to this theoretical construct of R-starred telling you whether policy is restrictive or not. And I personally believe R-starred should be equivalent to the underlying trend rate of growth in the economy, which is 2%, not 1%.
Which model do you think the Federal Reserve is running off, the Asciutto model or the Englander model?
Given the long-term Fed funds rate assumption in the last SEP of 3%, they're running primarily at the Stephen Englander model. And this has become the intellectual gravity well that everything falls to the SEP and the dots.
Any reason for that to change?
Well, they did change the forward guidance in terms of where monetary policy is going to be going. They've gone from a Keynesian approach back to a John Taylor type approach. And I think when you look at some of the former real doves like Austin Goolsbee and Williams of the New York Fed, who out in the last day or so were basically, pulling back from this thing that maybe we're very restrictive. And even the chairman said it himself at Jackson Hole that we're not very restrictive.
If they're following a model that you think is too dovish, that you think is ultimately pegged to an incorrect assessment of where neutral is, then why haven't we seen an increase in inflation expectations?
That is one of the hardest questions to answer, and I think is because for so long we have had a Federal Reserve that has been able to accomplish a 2% inflation rate, and you had such a little impact from the tariffs. You still have a global deflationary force out there, China, not Japan anymore, China, which is a very, very significant global deflationary force. You have energy prices, which have been moving lower, which are very, very akin to people's inflation expectations. So I think when you put all those factors together, I can see why the bond market has been more sanguine about it. And there's also this underlying bet that if push comes to shove, Bessent will do what's necessary at the long end of the curve to make sure long-term yields don't go up.
And long-term yields have been going down, at least so far this week.
Correct.
But to me, I just wonder, okay, well, then what's the trigger point? Do we start to see inflation under the Ricciuto model in a way that does push yields materially higher? Or can you bet on some sort of arrangement of issuance and purchases?
Might see this play out. They might actually test that theory. If they do cut interest rates down towards 3% over the next 12 months, we'll see.
I feel like we're all just staring into a black box and examining the black box from different angles and
Isn't that
saying,
what it feels
this
like
corner,
every day?
every single day. I mean, honestly, you're talking about mush. It's like every industry has its own macroeconomic backdrop, and we're trying to put them together, and it just feels a little bit like mush.
Just quickly, where do you think they do land next year? What do you think they're cutting rates down to?
Well, again, I mean, if you're in my camp and you think 4% would be neutral, 2% real, 2% inflation, if they're credible on 2% inflation,
They're not.
then you're probably in the 3 3/4 to 4 area.
Steve, appreciate it, as
Pleasure.
always. Credible arguments from Steve Ricciuto of Mizuho, as always, on the Federal Reserve.
I love Ricciuto versus Englander, the big battle of the
That was you
Steves.
trying to start that fight.
Well, no, I love it. Honestly, this is really the ultimate battle, though, on Wall Street. Are we heading into a reacceleration that is inflationary, and is the Fed going to juice that, or are we going to stave off some sort of downturn? That is the crux of the discussion, and no one has an answer, so don't look at me for one because I can't provide one.
I can tell you what I hope.
Yes.
Never mind the inflation story. I hope we are going into reacceleration.
Sure.
The subtle signs of new orders picking up in the ISMs this week, I really do hope for the good of the economy. That's the real deal going into year end.
The reason why this is such a confusing story, every CEO I've spoken to has said that they've been able to raise prices and raise them selectively because of low oil prices. So you put that together. What does that do if oil prices go up? What does that mean about persistent inflation?
The payrolls report just around the corner. More struggling, no doubt, at 8:30 Eastern Time. In just a moment, we'll catch up with the U.S. Commerce Secretary Howard Lutnick, plus Nadia Lovell of UBS, Stephanie Roth of Wolfe Research, and Jeff Rosenberg of BlackRock. The third hour of Bloomberg Surveillance, just around the corner.
A cidade estava sitiada.
Isso é o começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then what it takes, and if you're not going to do that, everybody's going to suffer.
Nisho talagi kon ahmalep ahmata chuara pangok ahmalep manchang lenya ay kon mamanya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
right. Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Hey, Big Banana, how you doing?
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Give me a couple minutes and we'll go over the news here.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Consumers are telling us pretty clearly that labor market conditions are deteriorating.
Looks like interest rate cuts are coming.
If they're cutting because labor markets are weak, I think that's negative.
The job market, it's in a state of stasis.
Things will break one way or the other.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your scores look like this. Coming into Friday at all-time highs on the S&P 500. Futures positive this morning by 0.1%. On the NASDAQ, we're positive by 0.4%. In the bond market, 2-year, 10-year, and 30-year. Really well behaved on the week. Yields lower across the curve on the week, down on the session. On a 2-year, new lows for the year, 358. 34 at the very front end of the yield curve going into this at 8:30 Eastern time. Now I say 8:30, but I don't know if it's going to be 8:30 anymore, because moments ago this headline just crossed the Bloomberg terminal. The BLS experiencing technical difficulties going into the payrolls report.
Evidently, we should have taken President Trump literally when he said that it was under construction last night. BLS saying that their data retrieval tools are not available on the website. We do know that sometimes when that 8:30 time rolls around, because so many people are clicking on the website, it takes a minute to load. This does seem to be a real question, though, about what's going on over there, as well as when exactly we will be getting this payrolls number.
Mike McKee is standing by. We'll cross over to Mike McKee in just a moment in Washington, D.C. But this is a tough one for this market. A lot hinges on this going into this Federal Reserve meeting later this month.
A lot of people say that the bar is pretty low for the Fed to cut rates. They will cut rates. The bar is pretty high for them to hold off. But a real question here about not only what the numbers are, but how accurate they are, how much the market is going to be looking to this as sort of the gold standard. The revisions, also very important at a time where Stephen Englander sat here just a bit ago this morning and said he sees 70,000 revisions downward as the normal trend.
So stand by. This is meant to happen in about 28 minutes' time. We'll see if it does. We can head down to the nation's capital where Mike McKee is standing by. Michael, what's your read on the headlines that just crossed moments ago?
Well, it's a computerized world, and computers have issues. We've seen this before with BLS.
All right, looks like we got
They
unemployment.
have loaded stuff into the computer, and it's gone out early.
U.S.
And other
unemployment at
times in which
8:30.
It has been delayed.
That's
They went
12
through a
minutes
process
away.
when they first went to all electronic releases of
U.S.
slow
non-farm
release times
payrolls,
because so many people were overwhelming their
U.S.
servers.
average earnings.
Don't know what the problem is here this time, but I'm sure they are working as hard as they can.
Average income.
We'll get the numbers as quickly as we can and get them to you.
Well, Mike, let's talk about the numbers we've had already. We've had a real step down, the 3-month average at 35K. The range today is pretty wide. The high is 144, the low is 0, the median 75. What's your approach to these numbers this morning?
I think I'm going to go with the folks at the Whisper number who are just going along with what the consensus is. We don't really know. And we need to separate out this month from what the revisions are that we're going to get, because we're going to be looking for the latest data. And while it may come in a little bit less reliable, it's still going to be as accurate as possible given the response rate that what they get, whatever they get. 75,000 is definitely a slowdown. It's in the ballpark of what several Fed officials have said lately is the replacement rate, the number of jobs you need each month to keep the unemployment rate from going up. The estimates were anywhere from about 30,000 to 80,000, so 75,000 would keep us in that range. We are looking at the possibility of the unemployment rate going up, but only by a little bit. So if we get that kind of number, it would imply to the Fed that we're sort of status quo, and the story about people not hiring but not firing is still there.
It's up to you. We listen to Bloomberg on the stream.
What we saw with the revisions last time.
That's up to you.
For them to change their mind.
Mike, you said something earlier this morning that made me smile, and I repeated it subsequently, where you said the expected number is 75,000 for the job creation, and the
hey Ronnie, how you doing?
75,000, which means that nobody knows nothing and nobody has an edge on where we are in terms of the median estimate.
We need that big juicy
steak.
steak.
From your perspective, whether the headline number.
All right, I got it. We got 8:30. We got 8:30 payroll numbers coming out.
The compass of markets.
Let's see here.
Oh, well, if you're going to ask about the compass of markets, I'd say the headline rate and the revisions are what people are going to be looking at today. The Fed prefers to look at the unemployment.
So if you're going to play the news game, you gotta pick your side now.
Remember, it is not
you gotta pick your side now.
So that's something they can hang their hat on. And if the unemployment rate is going up, as you remember a couple of years ago how we talked about this constantly, the Somm rule.
But I'm not sure how much of an impact it's going to be because they're fighting over if the data is actually accurate or not.
Then the Fed would really be worried about the economy slowing down. So that's
all right. I'll be back in a few minutes.
Rather than the headline number, but given the president raised all these issues, now people are looking at the headline and the revisions.
At the same time, Mike, it's not just the president. A lot of economists and even Fed officials themselves have raised issues about Bureau of Labor Statistics. Some of the old models of calling people on phones, landlines, at a time when a lot of people are responding to things more online.
Well, hey, 12 minutes till the launch. Falcon 9 is going to launch. It's on a countdown. 11 minutes, 50 seconds.
BLS in terms of changes to make that data more reliable and less, I guess, late, delayed, or even questioned.
Well, it's not so much what they expect from the BLS, it's what the BLS can accomplish given its manpower and its funding. They have switched over the past couple of years. Yesterday, Stephen Myron said they haven't been doing anything, and that's completely wrong. They've switched over the last couple of years to much more electronic filing, making it easier for companies to send in their data. They've simplified the forms, but companies are still not sending in the data as quickly, and the response rate for the first release has dropped. We're in the 40s for the last couple of months, 40% range. But over the next 2 months, the response rates have stayed about the same, about 95%. So eventually they're getting all the data in. Just a question of how the companies can be persuaded to move more quickly. And with the response rate that they get, maybe they get 42, 45%, they're still going to be accurate numbers based on the data that they have. They're not going to be manipulated. They're not going to be wrong within that data set. It's just that the additional data that comes in over the next 2 months is going to change what the overall picture is. On the household survey side for unemployment, they're still doing phone calls. They are still trying to figure out how to do perhaps some computerized stuff as well.
Mike McKee with the latest down in Washington, D.C. We'll see if we get the numbers at 8:30 Eastern Time. So this is the latest from the Bureau of Labor Statistics. It's saying it's experiencing technical difficulties, and Lisa, data retrieval tools are currently not available on the website.
Let's see how quickly they can get this back up. And we are now just about 12 minutes ahead of that report, or I believe 22 minutes.
22, Bramo.
Sorry, I always leave that to you to correct me in my arithmetic.
You know, this hour we struggle to count, apparently. All right.
I'm getting out my abacus.
8:30 Eastern time for the payrolls report. We'll see if it drops on time. Let's turn to trade. We're going to catch up with the Treasury Secretary, the Commerce Secretary, rather. We begin this hour, of course, with President Donald Trump signing an executive order putting his trade deal with Japan into place. The agreement will apply a baseline 15% tariff on nearly all Japanese imports entering the U.S., including automobiles. The government of Japan has also agreed to invest $550 billion in the United States. Joining us now, I'm very pleased to say, is the United States Secretary of Commerce, Howard Lutnick. Mr. Secretary, welcome to the program, sir. I know you wanted to talk about Japan, so let's do that. I want you to share with us the terms of this $550 billion investment fund, a core pillar, of course, of the negotiations that you've been helping to lead with the Japanese. Can you share with us the details this morning, sir?
Sure. So this is a completely different kind of trade deal that anyone's ever seen before. So the idea is the Japanese government will give $550 billion to Donald Trump to invest as the United States and Donald Trump sees fit in America. So the Japanese will get back their money, and 90% of the profits will go to the American citizens, the American taxpayer. So Donald Trump, I'll give you an example. We buy all of our antibiotics, generic antibiotics in China. So Donald Trump can say, let's go build generic pharmaceuticals in America. Let's build those antibiotics in America. The Japanese will fund it, and then we will have generic antibiotics in America. We'll no longer be reliant on China. So it's in his hands to invest. This is not ordinary foreign companies investing. This is not Mitsubishi building a plant in America. This is $550 billion by the Japanese government put in the hands of Donald Trump that he can then invest in America. It's amazing. I mean, it's the thing I am most proud of. It maybe it's the most proud I've ever been on a business deal I've ever done.
So it sounds amazing. Do the Japanese think it's amazing, and have they codified this agreement?
They have. So yesterday it was all signed. So the president signed the EO. I signed the MOU with Minister Akazawa in the Commerce Department. This is signed. It is written. So what happens is Donald Trump can select the project that he wants. We put a capital call into the Japanese. They send in the money, and we build the project in America. So if you think about this, $550 billion invested during Donald Trump's term is 0.5 point of GDP given to the United States of America's president by the Japanese government. I mean, this is amazing. In order to have a 15% tariff, and so they can keep making their cars in Japan.
Let's just stand the details, Mr. Secretary. So the timeline, you talked about the rest of the president's term. Is there a clear timeline here? And what's the enforcement mechanism to make sure it happens?
Well, two things. Number one, they've committed that they will meet the capital call. So when we're building a project, they will fund the project's building during the term. This investment lasts through, meaning they will put out the money through the rest of Donald Trump's term, so January 2029. And let's say halfway through and they've invested $250 billion, they stop saying, I don't want to send you any more money. The tariffs pop right back up, and they no longer receive the cash flow from these projects. It would all just stay with the United States of America. So there is just no way they're going to not fund these projects, and Donald Trump is going to deliver to the American people. And this deal is really, it's just, if you think about it, $550 billion of Japanese government's money in order to buy down their tariff in Donald Trump's hands for his availability to invest and build in America. Alaska Pipeline, scale, $50 billion, $100 billion. Donald Trump wants to unleash the Alaska pipelines. The Japanese will finance it, and it's great for America. It's fantastic.
Mr. Secretary, you'll appreciate we've got a number of topics to get through with you in a short amount of time, so I wanted to turn to other issues and India. This came from the president this morning on social media. It looks like we've lost India, and Russia for that matter, to deepest, darkest China. May they have a long and prosperous future together. This relationship between the US and India has clearly soured. You yourself said earlier this year that India rubbed the US the wrong way. There's an understandable tension that continues to build. But they're not the only ones buying Russian energy. The Chinese are buying Russian energy, and for that matter, the Europeans too. And I think there's a sense from the Indian side, Mr. Secretary, that they feel singled out, perhaps unfairly. What's your comment, your message for them this morning?
Well, remember, before the Russian conflict, the Indians bought less than 2% of their oil from Russia. Less than 2%. And now they're buying 40% of their oil from Russia. What they're doing is, because the oil is sanctioned, it's really, really cheap because the Russians are trying to find people to buy it. And so the Indians have just decided, the heck with it. Let's buy it cheap and make a ton of money. But you know what? That is just plain wrong. It's ridiculous. And they either need to decide which side they want to be on. You know, what's funny is, remember, the Chinese sell. The Chinese, well, we're always willing to talk. The Chinese sell to us. The Indians sell to us. They're not going to be able to sell to each other. We are the consumer of the world. People have to remember, it's our $30 trillion economy that is the consumer of the world. So eventually they all have to come back to the customer, because we all know eventually the customer is always right.
When you are talking with India, Mr. Secretary, I know a lot of companies in the U.S. have shifted manufacturing to India from China, so there's a real interest in this in terms of their costs. How much do you feel like you've lost leverage as a result of the court case that came out fairly recently?
We haven't lost anything with respect to the court case. If you look at the dissent, right, it was 7-4. Read the dissent. The current Chief Justice sided with President Trump. The former Chief Justice sided with President Trump. And the incoming Chief Justice sided with President Trump. And the smartest guy on the bench, which is well known who the smartest guy on the bench is, he sided with Donald Trump. So I think you are going to see the Supreme Court side with Donald Trump. And I don't think we've lost leverage. What we've lost is that India doesn't yet want to open their market, stop buying Russian oil, right? And stop being a part of BRICS, right? They're the vowel between Russia and China. If that's who you want to be, go be it. But either support the dollar, support the United States of America, support your biggest client, who is the American consumer, or I guess you're going to pay a 50% tariff, and let's see how long this lasts.
It seems like there's been a hardening of the line, both with President Trump as well as Modi, and a sense that there isn't really a coming together. In fact, that meeting with Xi Jinping and Vladimir Putin and Prime Minister Modi seemed to indicate a coalescing of the BRICS. Do you see anywhere in the next month, 2 months, any type of deal or backing down to a lower rate with India?
I would expect, like you saw it in Canada, right? Carney got elected with this term, elbows up, meaning let's fight with America. They put on retaliatory tariffs. They were all bravado. And what happened? Their GDP negative 1.6%, unemployment rocketing towards 8%. And what did Carney just do? He just finally dropped his retaliatory tariffs. So I think what happens is, it's all bravado because you think it feels good to fight with the biggest client in the world. But eventually, your businesses are going to say, you've got to stop this and go make your deal with America. So I think, yes, in a month or 2 months, I think India is going to be at the table, and they're going to say they're sorry, and they're going to try to make a deal with Donald Trump, and it will be on Donald Trump's desk how he wants to deal with Modi. And we leave that to him. That's why he's the president.
Speaking of making a deal, I understand the Swiss are in town. Just hearing that the Swiss vice president has turned up in the United States again. Is there a meeting on the agenda for today going into the weekend?
Yes. So I'm going to meet with the Swiss delegation. They're coming in to make a new proposal. And the Trump administration is always willing to listen. But you have to remember, you know, the Swiss like to say they're a small country of only 9 million people, a small, rich country. And how did they become so rich? They sell us pharmaceuticals like it's going out of style, all right? They make so much money off of America. That's why they're rich. So let's hear what they have to say. We'll discuss it with the president. You know, I'm not optimistic, but I'm always willing to listen, and Donald Trump is always
Why
willing
are you not optimistic? Traditionally, there's been a decent relationship there in the president's first term, relied on the Swiss a lot when it came to foreign policy and developments in places like Iran. What's happened this time?
Well, if you just consider trade, right? You know, the European Union, right? They open their market, 450 million people, $20 trillion economy.
Here we go. We got
They say,
liftoff.
Take our tariffs down to zero. You, the American exporters, can sell us everything. I mean, how fantastic is that? And they say, we'll pay you 15% and you pay us nothing. I mean, that is really, really attractive. Now you go to Switzerland, 9 million people. I mean, what are they going to offer the American
Falcon 9, 43 seconds into
the
launch.
size and scale by which they export and earn money off of us? So the idea is we need balance.
Financial
and fair
juice
trade,
hasn't reset
and
yet.
that's a difficult thing. Now you saw the Japanese. They decided to take a completely different path. And what they said is we will give Donald Trump the power to invest $550 billion at his direction for the benefit of America. Now that's a different way of thinking. Now if the Swiss come out of the box with a whole new way of thinking, I'm open-minded. But if they just say our rich companies are going to buy more of America, I mean, that's what Donald Trump is complaining about.
Yeah.
You realize in 1985, we, America, owned more of the rest of the world.
Doesn't even look like it's going straight up, does it?
150 billion of the rest of the world. And you know, in 2025, when Donald Trump takes office, the rest of the world owns 26 trillion.
Serial number on the first
more of us,
stage, and it is right now on its 27th flight. 27 reuses of that first stage. It's pretty impressive.
You're really watching close, you can see that the shutdown that is about to happen is staged. They will shut down basically two engines in sequence, and it's not all 9 engines at the same time. It's hard to spot, though.
The sequence shutdown goes along with sequence ignition, Adrian. We probably should have talked about this. They don't light all 9 engines at once, nor do they shut down all 9 at once. The reason why is because if you try to light all of them or shut down all of them at the same time, you're talking about shock, accel, and deceleration on the vehicle. It'd be like hitting the bottom of it with a hammer. You don't want that. Yep. There it is.
It's like a very gentle startup, basically. And that's the second stage MVAC engine that you can now see there from this beautiful track from Max. Who has it? Look at that. It's a hint of a jellyfish.
Yep.
Hey, yeah. Payrolls came out.
In the plume now
so
of the second stage, and we should see
we got
2 more dots popping up there.
U.S. unemployment rate was 4.3, forecast 4.3.
We were talking about at the beginning of the stream.
U.S. earnings over year 3.7.
Well, now there's a cloud, of course. But there's
nice.
SpaceX views.
Mm-hmm.
They gave us some beautiful launch today.
Yep, we can see the fairings separate on the right screen, left side.
I don't know. These numbers, they don't necessarily look good, right?
Thrusters on them, and those
see traders add bets on Fed interest rate cut in September.
The curved outside aerodynamic part of the fairing is going to end up being
this thing's flying, man. We're at historic highs on the ES right now.
Towards re-entry, and those fairings will be fished out and reused.
Absolutely.
We're all-time highs on the ES.
Crazy. And we are also getting serial numbers now here. We have serial numbers on the fairing SN 212.14, which means 14 flights of that fairing.
Average earnings year over year.
SN 155.29. So that
labor force participation 62.3. That went up.
Yeah, these numbers are
impressive.
I don't know. Overall, they must the market must like the information.
Yeah, I mean, that fairing has flown about 5% of the whole.
You want to make your eval today?
To give that like.
How close are you?
That is a non-insignificant number. It's pretty good.
That Fireman has flown more than Falcon Heavy and Delta for Heavy combined.
Oh. Oh. I don't know how to feel about that.
I'm
What
sorry.
happened?
Oh, you only got
I
5,600? That
transferred
should
Falcon
be
Heavy and
easy.
Delta
Are
4
you
Heavy in
working
the
the
same
NQ?
sentence.
Delta 4 Heavy is your favorite rocket of all time, Adrian. Why would you?
Yeah, but it is. But the
Well, it's easy if you wait for the right
the
setup.
fairing today, the 29 flight fairing.
If you're just
has
trying to
more
get it by
flights
just taking
than both
trades, then
Falcon
it's,
Heavy and Delta 4 Heavy combined.
you know, that's, you know what I mean.
I mean, yeah.
I just think that's impressive.
Yeah.
Hey, when there's it.
Oh, shit.
Man.
Yeah, man, go over the line. You know, once you have the PA, you don't have to trade it every
To
day.
their upper stage cameras
You know what
a
I'm
year
saying?
ago or so, and
You
those
can
are
just pay to
obviously
convert it and
migrated
just
down
take it
to
easy on it. Use
smartphones and upper
micros or
stages as
whatever.
well, as opposed to like
You know, and then you can practice on another eval. If you feel like you need practice or whatever, you can give the PA a break and go back to the eval. Once you have the PA, you don't have to pay anything anymore. And it doesn't matter how long you take, as long as you're you know, you got to trade.
I think
You know, you can't leave it inactive for months at a time, but you know what I'm saying?
Clear as I've ever seen a rocket on ascent from Pad A before. That was remarkable.
Yeah, you got to do the trading days, but they don't have to be in a row. You know what I'm
My
saying?
favorite part. This is my favorite part about Falcon 9. This is the entry burn.
You know, it's not like you're forced to take a trade every day. You know, I can make myself feel that way.
From the
You know, but it's
right there.
you shouldn't look at it
So
that
Falcon
way.
9 is going to fire one engine, and
Especially if you're just first learning. If you're just first learning,
engine exhaust gases as the heat shield.
you shouldn't put an expectation on yourself to get to the payout. You should be focusing on how long can I keep this PA without fucking it up. You know what I'm saying? That's what your goal should be.
Every Falcon 9 launch.
Yeah.
SSRP,
Like, don't get crazy, you know, and if it's not there, don't take the trade. If you get down to the end of the day and you haven't made your money, put it away. Don't try and play the MOC game and mess your account up. You know, that's the thing is if you get down to the end of the day and you want to take a trade, you know, buy another eval for $40 and just fuck around on that.
It's just enough.
You know what I'm saying?
To prevent Falcon 9 from burning up on the way down. I always thought it was cool using the exhaust gas as your heat shield.
It's all about management from here on
One of my
out.
favorite parts. That never gets old.
You know, and not trying to
I'm getting
force it.
fired up just from looking
And that's
at it.
really been my biggest problem. Is I just try and force
I
things.
always also love to look at the grid fence at this point. Like
You know,
love
I always
one
think in my
thing,
mind, if I can
like,
just
these
get here,
grid
I'll
fence
be
are
okay.
massive, right, EJ?
And then I put and I try and force getting
they're
there.
just casually steering and moving.
I mean, those
Yeah,
grid
well,
fans are
it's
about
kind
the
of
size of a coffee table
that's an
that you find
evolving
in,
thing.
you know, your living room. And they are one piece.
It's very hard
cast
not to.
Titanium. It's one of the biggest titanium castings ever. So if you're a machinery nerd and an industrial nerd like me,
Real
that's
work.
actually that's a super big deal. And we just see them, you know, on Falcon 9s pretty much every 2 to 3 days flying. Crazy.
Stage 1 landing burn.
And that is the start out of the landing burn. And
There it is. So right now, Falcon 9 is going to use its engine to slow itself down. And while the engine is being used to slow itself down, the grid fins are going to steer this thing out over the SpaceX's autonomous spaceport drone ship. It's called Just Read the Instructions. Now, you see when aerodynamics, when it slows down enough.
Yeah, it was crazy though. The candle before it took off was nuts. You would have got stomped on with an eval.
What is
You would
that?
have had to been like
That
have
was
one
that
eval
thing,
short,
and
one
that
eval
is
long.
The 500th landing of a Falcon booster.
Oh, you missed the rocket launch. Oh, I thought you meant the candle. Yeah, the rocket launch was like 2 or 3 minutes ago.
But I think that was just water.
I mean, it doesn't even look real, does it?
Wow. But
Yeah, the real
500,
rocket.
EJ. 500 times landing an orbital class rocket booster.
That is awesome. You know what I'm
Yeah, it
you
was
know
good
where
for
my mind just
scalping.
went? Good.
You
500
just had to
more.
be
Let's go.
careful. Have your take profits set.
This is, by the way, according to Alex spreadsheets. At this point, I trust more than some other, especially companies tracking.
Man, you got 500? That's good. Are you doing micros or minis,
apparently-
Big Banana?
He's
they're-
the sultan of spreadsheets.
They're offloading.
Yeah.
They're offloading tanks.
It's nice when you catch them like that and they ride.
Apparently, I've been told there's also a booster. Oh, there it is.
Look at that.
Wow.
Do they ever sleep?
No. Adrian, we are talking about the spaceport that never sleeps. Never. It's never stops.
I want to point this out because people could be like, oh, they're just doing this for show, right? They're doing all of this next to a launch to show up. No, this is just their constant activity. This is what happened. You could park Max at the Cape for 24 hours a day and he would spot things.
Crazy.
All day, every day. It's kind of like Starbase, obviously not to really that extent in terms of how much access we get, but it's more than just SpaceX here. It's also NASA obviously here by the vehicle assembly building. You have ULA over at 41 and everyone else moving down towards the South Cape side. So lots happening here, and the booster that you are seeing on screen is booster B1083, and I think this was its 14th flight, I think. And that one launched just a couple of days ago. So this is just business as usual for SpaceX, really. I would not be surprised if we see this one turn around within 24 or 48 hours.
Crazy.
The drone ship, at least.
Yep. Yeah. So actually, Max, that's a good point to bring up. Just in case if this is your first time watching, first of all, we appreciate it. But if you're wondering what you're seeing on the screen, it's like, wait a minute, I thought we were supposed to see a rocket launch here. Well, the launch did already happen. And Falcon 9's first stage did go out and it landed on an autonomous spaceport drone ship. But SpaceX has 2 of them operating off of the Space Coast. They have just read the instructions, which you just saw Booster 1069 land on. And then, as Max said, you have a short fall of gravitas here with which one was it, Max? 1083?
1083, yes, sir.
So that, one drone ship, that received a mission that had a Falcon 9 landed on it 4 days ago. It's being towed back, and you see one drone ship coming in, another one out probably, 400 miles off the coast that we just saw a rocket land on, and the other one's coming in. It's a never-ending train, right? And Max, like you said, they're going to bring that drone ship in there. They're going to bring a shortfall of gravitas in there. A crane will pull Falcon 9, lift it up off the ship, put it on shore, and then the drone ship's turning around and going right back out to sea for the next mission.
It's crazy. Like, they have this 30-day pipeline that just keeps on going. Like, a booster from launching to launching again is about 30 days right now. And now imagine the second stage production. Now imagine all of that fairing recovery operations and refurbishment abilities. Imagine a Merlin production. There's so much going on at this company, just on the Falcon 9 side. We talk a lot about the Starship side, but it's a masterpiece in an industrial planning that they are doing to have this pipeline constantly chugging and never have to wait on a booster, never have to wait on a fairing. It's honestly insane.
The industrial base that SpaceX has built out here just for Falcon should be studied. It's a case study in industrial engineering masterpieces.
They're lifting a booster at the Cape right now.
Oh. So,
and casually, there's a replay on the left-hand side of your screen with Falcon 9 flying by. Just the crane on the center of your screen. Falcon just is flying right behind that at the moment. It's very small on the screen and a lot more tricky to spot during the daytime as opposed to night, because obviously it's nowhere near as bright in contrast to the sky during the daytime. But there we are. I think this is Fleet Cam 1, I think.
So, just like we said, an assembly line, a drone ship's coming in with a Falcon. That Falcon that you guys see on the screen that the crane is lifting is one that's being processed to basically it's getting ready to be turned horizontally to head back to a launch site for another mission. And then we had one that we just saw land out on the drone ship. It is a never-ending assembly line here. That's crazy.
In this stream, you now saw 3 boosters.
It's crazy. I love it.
At Grainger, we have over 1 million products, including the ones that help keep your workplace safe and sound. Shop our vast inventory of safety products at Grainger.com. Grainger, for
how it functions.
And now imagine what will happen once Starship moves there, because we all know it's coming, right? Like Starship will start to move and commit more to the Cape.
I'm so excited, dude. I'm so excited.
And also, to be fair, I also want to mention New Glenn here, because New Glenn also has ambitious cadence goals, and I'm sure Blue Origin can go very, very, very much higher. So you will have New Glenn and Starship flying from the Cape on a regular basis soon.
What a timeline that we are currently living in, right?
Not too shabby.
It's pretty good.
Not too shabby. Not too shabby.
Yeah, it's pretty good. Yeah,
it's pretty good. I'm a fan.
I feel like rockets, you can see one or two. I always love when I started NSF, it was like, oh yeah, you have a good chance if you're at the Cape to see a rocket launch. Now it's basically guaranteed. Like if you're at the Cape 1 or 2 weeks, you will see it.
Heck, I remember, Adrian, I mean, I've been doing Twitch streaming for a long time. I remember 10 years ago, people were planning their vacations around rocket launches. Now, people are like, oh, if I go down, for this week and they want to launch on a Wednesday, will I get to see it? Like,
EJ, shh.
Nice.
Hey, Bob. Yeah, EJ, you were going to say sorry. We quickly.
Yeah, sorry, EJ.
Huh? What? I don't even know what I was talking about, dude. I'm sorry. I got distracted by the sound.
Cadence at the Cape and trying to watch a rocket launch.
You know what? The sound kind of just locked me in. I was just like, I don't even know what I was talking about. That sounds awesome.
Oh,
that sounds amazing. I want to hear more of that.
You were talking about how people used to plan their vacation around rocket launches and how risky that was, considering how often launches, I guess, scrub back then, and still kind of do, but nowhere near as often, especially with how often they actually fly. But nowadays, it's like it's borderline like plane spotting out of Orlando. Like you're almost guaranteed to see one, depending on how long you're here. But if you're here for a week and a half, you are basically guaranteed to see one, if not two.
Yeah, I guess the only phases in the last 2 years where you wouldn't see a rocket launch if you're there for 1.5 weeks is either when Falcon 9 is grounded or when there's like a major weather event. That's all.
Basically, yes.
So, insane. Okay.
Just another Friday, guys. Just another Friday.
I
love it. You love to see it.
I love it. I mean, I just love to watch Falcons fly. Falcon is such a machine.
Spaceflight's cool, isn't it? Spaceflight's just cool.
I agree. Let me thank some more people here because I fall behind here. Mark Spencer with becoming a Pad Rep member. Thank you so much. Apocalypse Cow with gifting 5 Red Team memberships. Thank you so much. And then we have Bite Forward with a $25 super chat saying, here we go, starting our day off right with a launch. Happy day, everyone. Indeed, Bite Forward. Happy morning to you as well. Wonderful. I think we done it. I'm looking at the back channel here, but I think it's time to say our goodbyes here, right?
Yeah, I think so. I mean, Adrian, I think we could sit here and watch Space Coast Live all day. Just watch the boosters.
If only we could do that, right? Like if only there's like a 24/7 Space Coast live stream that you could watch every single second of the day, EJ.
Yeah, I know. That'd be really good. Where can I find that?
Oh, the NASA Spaceflight YouTube channel, I heard there's a 24/7 Space Coast live stream where you can watch all the activity constantly every single day of the week.
Is it bad if I have like Starbase Live and Space Coast Live, and McGregor gets cut in on SPL, so I just have those on while I'm working? Is that bad? It's only slightly distracting.
I also have a dedicated screen for that. Like I have a dedicated space watching screen where they just run. Like you sometimes catch something, you sometimes see something. It's kind of cool.
Yep. Just sit there watching the work bit being done. It's very humbling, and it's a privilege to see it, to be honest. It's pretty cool.
Wonderful. Absolutely. So with that, EJ, thank you so much for getting up early in the morning and joining me here on the stream.
Finland, I mean, hi, yeah, I'm awake. Yeah. Hey, thank you for having me. I appreciate it. It's a privilege being on here, guys. And I do stream over on Twitch. I will be live in probably about 3 hours from now over there. If you like STEM stuff, you like playing STEM games like Kerbal, Stationeers, stuff like that, I'm your guy. If not, keep following over here at NSF. But Adrian, thank you for having me. It's a privilege being on here. I do appreciate it.
I appreciate you as well. And of course, you will also be on the Flame Trench later today. And
that's right.
Then we also had in the field Max Evans also rolling out here very early in the morning. Max, thank you so much.
It is a pleasure as always, everyone, and thank you as well for coming to hang out with us. I know it is very, very early for us here in the U.S., but it is always a pleasure coming out to see Falcon 9 fly, especially from historic 39A. So, and we will hopefully see you guys again in about 4 days for Monday's mission.
There we go. Couldn't have said it better. Behind the scenes, Jay Keegan was the operator for today's stream. Thank you so much, Jay. And I'm your host, Adrian Bile. I was also here on today's stream. And with that, let's all watch some Space Coast Live. See you there.
And here we go.
But we do know that there's significant crackdown from an immigration perspective that is likely having some impact, although it's very difficult to get a clean read out of the data. You saw the foreign-born employment fall 342,000 in August, 416 in July. It's hard to say that there's no impact from an immigration perspective. Of course, it's difficult to get the exact precise numbers out of the household survey because it is notoriously volatile, as Mike just mentioned.
Yeah.
But it's hard to say that there's no impact from immigration.
Getting a range of responses already this morning. This from Neil Dutta of Renmac. The Hawks have lost on their own terms. Employment growth is still cooling, and the unemployment rate is rising.
You have right now a 100% chance of a rate cut baked in for later this month. So it seems like they are agreeing with his assessment and that on their own terms, this would warrant a rate cut. Key question to me is, what is the depth of the weakness? And I keep going to, yes, the bond market response, but that's actually less interesting to me than the stock market response.
Sure.
The fact that there is this belief that this is not great, but it's not so bad that it curtails the cyclical tilt that we've seen. And that, to me, is really the big question.
Let's turn to Jeff Rosenberg on that. He joins us from BlackRock. Jeff, welcome to the program, sir. What do we always say? Yep. The first move isn't always the right move, and let's see if this sticks. But the first move is stocks higher. What's your take?
Yeah, the first move is stocks higher, and this is bad news is good news for the stock market because the Fed's going to ride to the rescue and cut rates, and the economy's not going to fall off a cliff. Financial conditions will help that. It's a little bit circular, but if the Fed is going to underwrite the risk rally, then financial conditions will hold up confidence, even if you're having a little bit of a slowdown here on the demand side. So, look, that's the initial read. You know, Russell 2000, NASDAQ outperformance is really quite notable. People piling into what has already been working because the Fed is going to be behind that. And I think that, you know, on top of what Stephanie and you all were just talking about, yeah, it's a weaker report, but it's a weaker report that solidifies 25, but it's really about, and I think this is where Lisa was about to go, you know, what's the path from here? Does this put October on the table? Does this put 50 on the table? But what it really puts on the table is a Fed that gets back in motion for cutting rates. And if the economy's not falling off a cliff, that's a pretty good combination for risk assets. And that's why you're seeing, at least in this initial reaction, bad news is good news.
You said something really important there, Jeff, that this is an indication that the Fed is going to underwrite risk assets at a time when there is enough weakness in labor markets to justify that. What gives you confidence that the weakness that we're seeing is fixable or addressable by a couple of rate cuts this year by the Federal Reserve?
Well, I wouldn't overstate that and say that it is, but the confidence piece of that is really the primacy of financial conditions. And so, you know, while we're worried about a lot of things, one of the things we're not worried about is financial conditions, and they are exceptionally easy. And this is what I've said on the program many times. You know, we focus on the economy, and it's this kind of debate. Does the stock market worry about the economy, or does the economy worry about the stock market? And I think it's more the latter, that it's about financial conditions. And the stock market is less about the economy and much more about AI and technology. And that boost to wealth is supporting consumption, and that's what drives the economy much more than anything else. And so I think that's what kind of eases the concern here around the slowing in the jobs market that we're seeing out of today's data.
If we've seen the hawks throw in their hawkish tilt and become more dovish on the Federal Reserve and rates, does data like this, Jeff, make you think that maybe you have to price in steeper cuts over the remainder of next year, especially with the changing of the guard, that maybe this market is underappreciating the risk of more significant easing?
Yeah, it's a really good question. And I think it's one that we'll turn our attention increasingly towards, which is, okay, to what end? Waller, gave a little hint in that in his interview earlier this week, 100 to 150 basis points. That seems to be what most consensus views around Taylor rule implies. So that amount is kind of priced in. I think the uncertainty that you're alluding to is, will that be enough? Do you end up pricing in, more than that? Right now, the kind of standard economic analysis, those Taylor rules, are arguing for a path of cuts, but it's a shallow path because policy is only moderately restrictive. And yes, the delta and the change here is to the downside, the deceleration on the demand side. But as Powell's highlighted, this is also still a labor market that is, not tremendously out of balance. These are small increases. Yes, there are increases in the unemployment rate, but the supply side and the demand side are both easing at the same time. And you see it in the strength in the wages. The persistent, one thing that didn't happen here is a big slowdown in the work week, something we'll keep an eye on. And so that'll hold up. How deep does this path have to get?
It's quite a move at the front end of the curve. Jeff, just to keep you up to speed on things, if you haven't got the Bloomberg in front of you, we're down 9 basis points at the front end of the curve, now trading at 340, 349, so into the 340s now, which is something we haven't seen all year. 10s are at about 4.09%, so we've broken down through 4.1. 30s are way off away from 5% at the moment at about 481. We're down 4 basis points on the session. So, Jeff, let's talk about the shape of the curve. There is a fear held by some, not all, but some, that we'd see a repeat of last year, that we'd see some weak jobs data, the Fed would come out of the gates aggressively, and what you'd see is the front end come down, but the long end would actually sell off. Yields would rise, and maybe we'd get the same kind of move that we saw last year. Jeff, do you see things lining up for a repeat of 24, or is this different this time?
Well, it's certainly different this time. And, the day's focus is on the labor markets, and it's a premier data point for the growth side of the equation. But next week, other data will come out, and we'll focus again on the other side, which is the inflationary side. And so this is really the tension that you see within the curve, that if the Fed is cutting and they're telling us, and Powell was pretty clear coming out of Jackson Hole, there's a primacy of, within the dual mandate, the growth side, the maximum employment side of that mandate. But it's happening at a time, and this is where the hawks have, kind of been, squawking a little bit, that, hey, the inflation piece hasn't really been solved, and the uncertainty of the pass-through of tariff inflation is still in front of us. Plus, all the other things that go into the back end of the curve, the demand supply, the fiscal, the deficits, it raises the potential here, and you're seeing it in the curve this morning, that you just lag the declines from what the Fed is doing in policy rates to the back end of the curve. And that view is, pretty consensus in terms of the expectations of steepening. And we've had a lot of that put into the curve already. So, that may get a little bit tired, and you've got some technical positioning. Everybody's on the same side of the boat, so that can have an unwind. But the fundamentals behind a steepening curve outlook, cutting interest rates in the face of still sticky inflation on top of all the fiscal concerns, do argue that the pass-through from policy in the short end to the back end won't be as strong as we would historically expect, absent, the big shock of an economy that really decelerates and brings back a specter of not inflation.
All right, guys, looks like we're looking at the grind up today. What time
Jeff,
is it?
appreciate it.
9:03.
Flaming
I
as
gotta
always.
turn
Jeff
my
Rosenberg
leads
there
on for
of
real
BlackRock.
work.
If you're just tuning in, you missed it. It dropped about 20 minutes ago, and it dropped. We're down to 22K. Big downside surprise on payrolls. The estimate was 75.
We have no real
Keep going
news
back
the
to the
rest of the day.
three-month average. The
It's
three-month
pretty open.
average, it's pretty dreadful.
So it's going to be our
28,000
normal trade
That's
plan.
a real step down in payrolls growth. And Bramo, that's why you're seeing this market start to price
We're going
in
to get set up
more
here.
rate cuts. We're down 9 basis points at the front end.
We're seeing this
Wait
pace
till
of
we got
job
the
growth
open
going
in
back
like
to the immediate
25
aftermath
minutes.
of the
We're going to let
pandemic
that filter
and what
in.
happened there. Question
10:15.
here is why this is
Trade box
considered
turns on, and then
for
we'll
risk
see if
assets,
the
given it is
NQ
a
and ES are
deceleration
organized or if we're in
As we
chop.
were just hearing from Jeff,
And then we'll
that the
start
Fed is
hunting
willing
our
to
entries
underwrite
and
risk assets.
looking
My
for
colleague
take
PJ,
profits.
Fixed income joins us now for more.
So that's
Mike,
where
welcome
we're
to
at
the
right now.
program,
No
sir.
real news the
It's
rest of the
another
day. I'll
downside
go over that
surprise.
with
You
you
were
real
looking for a
quick.
weaker economy. It looks
Everything's
like we've
pretty
got one.
much
How
in.
does this change the conversation?
Oil
on
rig
September
count at 1
17th for the Federal
o'clock, not a
Reserve?
big deal. Executive
Yeah,
orders,
Jonathan, I'm just glad the number came out. Right before
unless he
8:30
says something
the
crazy
market-
during the session,
We were looking at
we
the
should
bond
be pretty
market
clear there.
rallying in the front end, and the bond market
That's
was
about it.
turning from vigilante mode
Hopefully
to
we got a nice smooth
conspiracy
trading day.
theorist mode.
If most of the
right?
day is
So-
pretty
so,
smooth, we may have some more opportunity than we did yesterday. But let's see how long we grind up before we give ground back. We are at all-time highs on the ES. Still
for the
making
rest of this
all-time
year, meaning
highs.
1 in 12 days,
65.
and 1 in December to possibly cut it all
65,
3
38,
meetings, right? That's what's
75.
the transition that's happening right now in the
39.
markets, and
All-time
I love
highs
the
on
conversation
ES.
around the wealth effect, financial conditions. Is good news bad news, or is good news, or is bad news good news, or is it bad news? And the markets are kind of maybe the stock market's whistling past the graveyard a little bit here, thinking, oh, it's all good. The Fed will backstop this.
All right, guys.
Financial conditions are easy.
I'm gonna get real
Wealth
work
effect
turned
is
on.
real and powerful and persistent.
That's our plan. Pretty
But
standard.
the way
No
companies
more news the rest of the
manage
day.
through a
So
cycle, Jonathan,
happy
Lisa, right?
hunting after
First
about
they
10:15 to
reduce wage
10:30.
gains, and
I'll
we've
be right
seen
back.
that. Check that box. Then they start cutting the hours. Check that box. Then they reduce new hiring. Check that box. And the last thing they do is start firing people, right? And we're just kind of maybe on the precipice of that last box being checked. And companies do that to preserve margin, right? And I think you're seeing increasing evidence that companies don't have the ability to pass through these higher prices from tariffs, and they're starting to eat it in margin. So they have to use the labor line as the delta to maintain their bottom line earnings, and that's not great for the economy. So I do worry, whenever you have a recession, you always look back, because we always miss it, right? Everybody's always surprised when you have a recession, and you always look back and say, wow, how come I didn't pay more heed to these, yellow flags? And I think these are more yellow flags that are popping up. And, so I'm just, urging some caution that maybe the stock market, valuations, which are really, heady already, maybe are topping out here.
Mike, the idea of whistling past a graveyard, it isn't just applicable to stocks, it's also applicable to your world and credit. And what we've seen, particularly in high yield bonds, and how spreads have really compressed, and we have seen this rush into riskier assets. This idea that Jeff Rosenberg was talking about, is this a Fed willing to underwrite risk assets, or do you say this is a warning shot to lighten up on high yield, lighten up on credit risk, and go into duration?
Yeah, I mean, we've been doing that trade, right? Arguably, we've been early because, over the last 2 years, you should have owned as much risk assets, as much high yield as you could have. Defaults continue to be generally really low, but you are seeing continued concerns and pressure and credit deterioration among the weakest tranches of the high yield and the leverage loan and the private credit markets, where these high rates, these high borrowing costs, especially for companies that have floating interest rates, are really starting to hurt them, have a big negative impact. So I think there's kind of this sneaking, credit deterioration happening out there that's not hitting the headlines yet. So yeah, I think it's still a world where you're supposed to be a little long duration, have a curve steepener on, two positions, fortunately, we've been in, and stay very defensive on the credit side. I mean, talking about high yield spreads, Lisa, you see the headlines of, high yield spreads are just inside 300, but even there, it is somewhat bifurcated. Everything has done well, but we're selling, double B rated high yield bonds with double-digit spreads, Lisa, like inside 100, right? And so that is clearly a recipe for moving up in quality, where you can buy high-quality, investment-grade bonds and structured product, and even mortgage-backed securities in some cases at similar, spreads, or not giving up a lot of spread. So those are easy trades that you still have to be disciplined and do.
Mike, it sounds like you trust this data. It sounds like you're not worried about politicization of the Federal Reserve. Just quickly, is that true, that that's all noise to you? And you look at the data and this just indicates negativity?
Well, you look at the big picture trend, and that's what you have to do when you look at these data, Lisa. And, we went from 400,000 job growth a few years ago to 200 to 100 to 50. Our rate of job growth has been cut in half now for 4 straight years, and that's been the trend we've been expecting and looking to. Now you have this big change in immigration deportation policy, which kind of is a step function lower in terms of the labor supply. So now maybe 0 to 100 is not even the right level of natural rate of growth of the labor force. Maybe it's 0, right? It's the low end of that range, and we're kind of punching toward that. So this is a big supply problem. Yeah. I'm worried that the markets are kind of discounting the demand side too, that the demand side of labor is weakening. And yeah, granted, if the Fed cuts 3 times this year, 3 times next year, gets the funds rate into the high 2s, which is increasingly what's being priced in right now, the economy can certainly survive through that. Companies will survive through that. We won't have a recession, and that's a really good outcome for all of us.
Mike, appreciate it. Have a good weekend. It's good to see you, as always. Mike Collins there of PGIM Fixed Income. Stephanie Roth of Wolfe Research still with us. Stephanie, you've talked about that re-acceleration in the economy.
All right, guys. I think I got back in. I think got everything set up. We're in the groove for today.
I think they might, but that's okay because the economy has slowed down. To the extent to which we have a little bit of easing in financial conditions isn't the worst.
I don't know what we're doing.
Shock from both the supply and demand perspective, but the demand side.
I don't know what's going to go on today. Anyone have a bias yet for running higher or pulling back?
It's okay for them to cut a couple more times. Then we're going to see that re-acceleration, and it might be harder.
We're overbought right now. We got about 20 minutes till the open.
This isn't about a September cut. It's now about the Fed's path towards neutral.
Right now, we're looking at 3 rate cuts being priced into the market by the end of the year, including more than a full 25 basis point cut at the September 17th meeting. This is about neutral. This is about where we are in the economic cycle. And this will be about what the Fed will do even before we get a change in leadership. So maybe President Trump will get what he wants, even without any kind of changing of the guard.
Mike Collins just happy we got a number. That's how low the bar is right now.
Well, I don't blame him. Honestly, we were getting warning signs, big red flashing letters. We have a data problem. And then,
we've got some data. It's good news. Stephanie, it's good to see you. Thanks for being here. Thank you very much. If you're just joining us, you missed it. 22K on payrolls. Big downside surprise. 75,000 the estimate. 3-month average now 29,000. In the bond market, this is what it means to fixed income. Yields down at the front end by 10 basis points. 2s at 348. In the equity market, equities like it. Equities up by 1/3 of 1% on the S&P. All-time highs heading into the weekend.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
there is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in.
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were gonna probably just hit it, and so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is gonna get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I never doing that again.
In case you missed it, on the close.
Sweet Green, which has a kind of a similar business model to Kava, they're having some issues, and it's more about just the foot traffic. Maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What are you seeing?
We're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. In recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate any of the impacts of, say, tariffs and not have to pass along to our guests.
There's been a lot of talk about how do you reimagine stores like this. What do you want your customer to do?
If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk the line experience, see the food, smell the food, interact with our team members. Our mission is to bring heart, health, and humanity to food. So we want to deliver that humanity in the 4 walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
Don't miss The Close, live every weekday.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
All right, we are off to the races again, betting on a Fed cut after that non-farm payrolls number. 30 minutes until it started trading. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, a cooling labor market. Jobs growth was far weaker than expected in August, reinforcing the case for a Fed cut later this month. And the trillion-dollar man, Tesla, offers an unprecedented pay package to Elon Musk that could make him the world's first trillionaire. And the AI chip race continues. Broadcom teams up with OpenAI to produce an accelerator that puts the heat on NVIDIA. Danny, what are you watching?
Well, it's been a drama-filled morning, and it's only just 9 a.m. I am looking at that Broadcom story and the reaction in share prices, because check this out. 14.33% higher. That Broadcom deal with OpenAI puts it in direct competition with NVIDIA, which dominates the AI semiconductor market. Broadcom also said its AI outlook will improve significantly. That helps ease concerns about slowing growth. Matt, what are you looking at this morning?
Yeah, I mean, that I think is fascinating. Broadcom should always have been included in the Magnificent Seven. The Great Eight. Tesla is another one. Elon Musk is being offered a compensation package valued at over $1 trillion if he meets certain benchmarks over the next 10 years. It includes growing the company's market value more than 8 times to $8.5 trillion. Danny?
Meanwhile, some data drama also adding to the market moves this morning. The Bureau of Labor Statistics warned that it was experiencing technical difficulties with its website just 30 minutes before that jobs report hit. Commerce Secretary Howard Lutnick spoke to Bloomberg about the issue.
So they need new leadership in BLS, that's for sure. They need new tech in BLS, that's for sure. And Donald Trump needs to rely upon the numbers. America needs to rely upon the numbers. You can't have these bent former administration people who have a view and who want to harm the president. We need accurate numbers coming from BLS. And finally, we'll have new leadership to deliver it.
Well, we did end up getting the numbers, and it's a market that believes the numbers and is trading on them. Let's get over to Bloomberg's Michael McKee, international economics and policy correspondent. Mike, what did we get?
Well, we got a downside surprise, certainly, Danny. 22,000 jobs created in August, significantly lower than anticipated. We did see the July number revised up by 6,000 to 79,000, but look what happened when we got to June. The June revision put it in negative territory, down 13,000 on the month, which means it's the first month of job contraction since December of 2020. The unemployment rate came in at 4.324. If you take it out to 3 digits, that's almost a full percentage point above where it was in July. So that is a significant move on the month. The revisions, as I mentioned, show a negative print for June, and that may be what really is moving some of the markets in terms of the idea of a Fed rate cut, because they are expecting at this point that to drive the Fed to 25 basis points, and even some analysts are saying 50. I think that's probably a stretch, but it does suggest that the president's economic proposals are not panning out, at least in the short run, and we did hear him last night warn that we could have troubles. The biggest movers in the numbers were health and social services, which, as usual, is the largest gain, 46,000. Leisure and hospitality, 28,000. Retailing, 10,500. A bit of a surprise, although I guess we saw a reasonably strong back-to-school season from what the analysts are telling us. Manufacturing, the biggest loser, down 19,000 jobs. Again, reflecting poorly on the president's plan to bring back a lot of jobs to the United States. What really strikes as you look at all of these numbers is how many categories did lose jobs, but it wasn't a whole lot in each category. It's sort of like the beginning, perhaps, of layoffs, but 100 here, 100 there in most of these categories suggests that there is definitely weakness in the labor market.
So, leaving aside the president's claim that this economy is hot, which he's been making based on his policy changes, what about his argument that we need to cut rates, Mike? Because you have unemployment rising, you have average hourly earnings that are not rising as quickly, and you have PPI and CPI at the core 3.7%.
All right, guys, got about 10 minutes to the open.
So does it make
10
sense
minutes
to
to
cut
the
rates
open.
here?
It does make sense.
We're banging off all-time highs on the ES. It's insane.
At the labor market as a whole, and they're looking at the unemployment.
No more news today,
Which is their proxy for how
unless
the
Trump
economy
says
is
something
doing.
crazy while he's signing executive orders. So at the open, you guys thinking we grind up? Do we grind up, or do we give a little back, or I mean, what do we do today? Do we retrace?
They are going to be worried that this trend will continue.
Yeah, I mean, I think the open's going to set the tone for the day, to be honest.
Fiscal policy. And so it's definitely.
I can't imagine there's not anything baked in that we don't know about, like everything, all the,
It's just not going to be large enough to throw people off the track.
All right, Mike, thanks so much for joining us. Bloomberg's Michael McKee there out of Washington on this jobs day.
So I guess all of this, all of this is based on the rate cut.
Take on the NFP number and the rate situation. Let's turn though now to tech, because Tesla, the EV maker, has proposed a new pay package for the CEO Elon Musk worth.
I guess that makes us unsophisticated traders.
Now it does span 10 years and includes a series of benchmarks that Musk has to meet, including making a lot more money for his shareholders before he gets the full payout. So for more, we're joined by Bloomberg Tech co-host Ed Ludlow in San Francisco. And Ed, it's a striking number, but the benchmarks that he has to meet are also equally striking.
Yeah, the actual value of the award as it stands today is $88 billion. But over the 10-year period, if he hits those operational and financial milestones, the total value would be calculated to be around $1 trillion. There's some very heavy operational milestones. He needs to have sold 20 million Tesla vehicles, which is interesting in the context of the business model he has with Robotaxi. He has to sell or build 1 million Optimus robots, and there are market cap goals as well, taking Tesla's market cap to 8.5 trillion. There's also a consideration Matt, which I know you took interest in, right? Which is that in the latter part of the deal, the final 3
Yeah,
years,
we don't know what's going on. We got to wait for the whales to do what they're doing and just try and scrape a little off the top when the whales start swimming around. That's what I'm here to do.
That's really critical because he wants more voting power.
On day 2 of my PA, I still gotta do my journal entry. Hey, is Stakey out there? Steakmeister here?
And the other thing you pointed out, as soon as this proposed
I don't see him.
agreement came out, was the fact that they are asking
I'm gonna make a new category for the new PA in the trade journal section.
Yep, Section A51 in the proxy. This board basically says this is what our conclusions were. They met with Musk 10 times in negotiation and consideration of this package. And point number 2 is that they want to seek reassurances, and one would assume that they have, that he will wind down his political ambitions. At the same time, there's a very heavy suggestion in the filing that Musk's retort to that was, okay, give me the voting power. And so that's why it's structured in tranches over 12 years, with each of those annualized milestones giving him an additional percentage of voting power. It's really interesting. It keeps him focused. Same with the succession plan participation from Musk. It's very heavily centered on the final 3 years of the deal.
All right, Ed, thank you very much. That's Ed Ludlow. And tune into Bloomberg Tech at 11 a.m. Eastern. Former Tesla board member Steve Wesley will be joining the show. Now, on the earnings front, also speaking of Bloomberg Tech, chipmaker Broadcom reported a strong outlook. Shares, though, they're moving mostly higher on the news that it will build a semiconductor for OpenAI, taking on the likes of NVIDIA. Bloomberg Tech's other co-host, Caroline Hyde, joins us now around the desk. Caroline, just how big of a threat would this be to NVIDIA? Is this really them taking on the giant?
Well, this is what we've seen with the other key hyperscalers. Look, Google designs its own chips with Broadcom. Meta's been in on the action. You've seen similar moves coming from Alphabet and indeed Amazon. All of the hyperscalers have decided that they need to have custom designed chips that aren't just totally dependent on NVIDIA's supply chain. So yes, they look to Broadcom. Broadcom here really showing that their backlog is huge. They already have been talking up how much more business they're winning from the 3 key clients they already had. And now this open secret, we all kind of knew OpenAI and Broadcom were working together, but now a $10 billion order, that just shows that the AI scale and the opportunity for Broadcom is going up and to the right, and particularly showing that growth, as NVIDIA has perhaps been worrying investors with its growth plateauing a little bit. So more broadly, you are seeing Broadcom taking a bigger and bigger piece of that pie. Look, 10 billion is nothing to sniff at, and more broadly, we're seeing already shares up 30% year to date for Broadcom. That's better than any of the other Mag 7 names.
Well, if this chip is going to be powerful enough to rival Blackwell, or even, what's the next gen called after that? There's another Rubin. That raises, to me, the concern that Huawei or Chinese chip makers also could be on the same path.
It's interesting about how they are ultimately becoming more and more specific for individual clients. And this is where people start to think, okay, it's not just about training ever more impactful large language models. It's about the inference. It's about the use case. So this is why you want more specific chips designed for more specific customers. And maybe that's where people think, okay, is NVIDIA still going to hold that chunk of change in inference as it has done in training? And that's something overall Jensen Huang has been trying to tell the market that yes, they can, and they are still the #1 compute member of choice. But I think people want choice, and you can't be so dependent on NVIDIA. Broadcom here will be alongside NVIDIA. I think you are seeing more and more of these companies having to deliver. You're right. Overall, people are wondering, how is China managing to evolve? How is Huawei? How is some of the other Capricorn starting to step up and make sure that China can be less dependent on NVIDIA? It's exactly what you're seeing at home in the United States as well. But for most people, this is an and rather than or to NVIDIA.
I think investors would also welcome a lessening of concentration risk. Caroline, thank you so much for joining us. That's Caroline Hyde. And of course, tune into Bloomberg Tech at 11 a.m. Matt, a quick check on futures, because we are trading at a record high at this moment after closing at a record high yesterday, but maybe more of the dramas in the front end. Yields on the 2-year yield down to the lowest since 2022. Gold is also at a record this morning.
Yeah, I think a lot of movement based on this number, and certainly traders are increasing their bets that the Fed is going to be able to cut. Maybe more and more. If you see this unemployment number continue to rise, that's a really worrying issue that even the hawks on the Fed are going to have to throw up their hands and make a move.
At 4.3%, the highest figure since 2021, but do cuts actually save that.
Coming up, we're going to ask all these questions of one potential Fed chair, BlackRock CIO Rick Rieder. He is the CIO of Global Fixed Income there. He has had his name floated as one of the likely candidates. We'll ask him about that as well. This is Bloomberg.
All right, guys. 2-3 minutes till the open. I have no idea what we're doing after this level. We got support above. I'm sorry, we got support below, resistance above. We're caught right in between two fair value gaps, which is a little interesting. So I'm guessing we're going to challenge one or the other at the open. Stochastics are oversold, but they're pinned right to the top. So, you know, when you have this kind of move, that may not mean a lot.
Portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Jamar.
All right, here we go, guys. 9:30.
This is Bloomberg.
Oh, yeah, hold on. Sorry. Here you go.
Asia's biggest tech
I
news
was
and innovation.
I was adjusting the all-time high on the ES and left it there. We're banging off that all-time high on the ES anyway. All right, here's the open, guys. I got a real work call. Let's just see how this settles in, and no more news today, so we might be able to, as soon as we get organized, when the trade box turns on, we might be able to start looking for entry sooner than usual, depending on how the morning runs. I'll talk to you in a little bit.
To the lowest since 2022. Let's get the reaction now of BlackRock Chief Investment Officer of Global Fixed Income. That's Rick Rieder. Rick, great to see you this morning. Just your initial reaction to the data just under an hour ago.
Yeah, I mean, listen, it's a pretty remarkable, I mean, I always focus on the industry data to try and get a sense for what is the fabric of what's happening here. So if you look at the numbers, we got 22,000, but we talk about on the show all the time, 46,000 was in healthcare, not cyclical. You have a dynamic where if you strip out healthcare, you're running negative, what is that, negative 24,000 jobs. If you take the 3-month, 4-month moving average, we're looking at 29,000 jobs, with healthcare being 59,000. So if you strip that out and you look at what's happening to the broad economy, you have an economy you have an economy that's actually doing well. You have a job market that's actually soft today. And, I think it's pretty remarkable. We talk to a lot of companies. You hear the same thing. Top line revenue's pretty good. Economy's okay. Consumer's pretty good. But you're actually doing things with lower costs, with lower human involvement, which is a technology evolution of productivity. And you just see it play out. People think like it's going to happen 2 years from now. Listen, I think the labor market is soft, even though the economy is actually in pretty good shape, meaning the Fed's got to cut. And the Fed, I think the Fed could cut 50 basis points. I think they should cut 50. But I think the door's open. And, how much more data? By the way, you saw it in the JOLTS report as well. you look at job openings, and the area that's held up the job market has been leisure, hospitality, healthcare, and you're seeing those areas soft now. So it's time to move.
Rick, I can understand maybe cutting some jobs, especially with the advent of AI. Hopefully that's driving productivity. On the other hand, if the economy is growing, shouldn't employment growth be there as well? Shouldn't hours worked be moving higher?
So no, I don't think so. So you know what? If you look at one of the piece of data I love looking at. So the big 6 companies. So I take the Mag 7, you take out Tesla, and if you look at what's happening to their employment dynamic, those companies are throwing off. And by the way, we see it through earnings, we see it through capex and AI, and then you look at what's happening to their employment picture. They're actually, you see many of them actually cutting jobs. What's happening? You run a more efficient business. You drive higher free cash flow. By the way, you can buy back your stocks while these stocks continue to do well. The companies are doing fine. The economy's doing fine. We're entering an era that's quite frankly very different than anything we've ever seen before. There's a substitution effect for lower skilled. By the way, when you break down the employment report and you look at lower skilled, some of the minority data around unemployment, you see some real dispersion, and it's part of why I think if you look at low middle income in this country, they're having a hard time. It's why even though companies are doing well, even though the economy's doing well, even though wealthy are doing well, but who, by the way, benefit from higher interest rates, you have a low to middle income part of the population, which, by the way, it's not like 4%, it's 50% of the population that's having a hard time today.
Rick, I guess the question with all of this is if on the headline level the issue are things like productivity, why would a 50 basis point cut help with that?
So there's a couple of things that apply. First of all, if you take the starting point, Fed funds rate at 4 3/8, inflation expectations, so we follow 5-year inflation expectations, are about 2.5%. 4 3/8 is the wrong price. If you got the funds rate down to, let's say you got it to 3, 3 1/4, you're still above where inflation expectations are. There's no reason to keep it here. And I go back to the same point. If you think about what is your constituency that you're addressing when you're the central bank, if you think about what's happening, gosh, there's a little bit of inflation pressure from tariffs, which is goods inflation. Well, goods inflation tends to be a moderate regressive tax in terms of low income. Why would we charge them more for the interest rate? For whether it's home equity lines, whether it's for credit cards. Meaning if you bring that rate down, you won't stimulate more inflation necessarily. It's certainly not going to impact the tariff transmission mechanism. But you would help a lot of people in the country that are struggling today and are getting, a bit of a regressive tax from tariffs in the intermediate term or the short term. But you help them in terms of bring down their cost of borrowing.
Rick, I just can't help but wonder. I mean, we've heard the president argue that the reason rates should come down also is because the economy is doing well and things like the housing market. Are you saying that you agree with the president on that front? And if that's the case, what's the risk that the long end continues to rise and doesn't solve the problem that rate cuts are supposed to address?
So it's a great question. So the first thing I would say, the housing market is stuck. Whether it's building permits, mortgage applications, new home sales, housing starts, we're at levels in the 60s, similar to the 60s and 70s when the population is roughly double the size. Housing market is stuck. What does that mean? You create a dynamic in the economy where people, if you want job mobility in a tougher job market, it's harder to move because you can't sell your house, particularly if you have a 3% mortgage. We need to bring down housing costs. We need to bring down affordability of homes. By the way, I've argued this on this show many times. If through the funds rate mechanism, the mortgage rate comes down, I'll get to the other part of your question. If you bring the mortgage rate down, you'll actually build more homes in this country so home builders don't have to subsidize the mortgage. You actually bring down shelter inflation, which has been sticky. Your point is well taken. Listen, as an investor, we like the front of the belly of the yield curve because you have, like today, could you have a steepening of the curve? Listen, there's a series of tools that the Treasury can implement, a series of tools that the Fed can implement to be thoughtful about how do you manage further out the yield curve as opposed to just we move the funds rate in moderate increments. There's a lot of tools at play to try and contain where the back-end interest rates are.
I'm going to say, Rick, that the administration and Scott Bessent specifically have been watching you on this program or maybe just reading your research, but They seem to want to interview you for the top spot at the Fed. Treasury Secretary Bessent has said he's going to start those interviews today. Are you going to Washington?
So I'm going to focus on the jobs report and what I do day in and day out to generate return for clients. I'm focused on what I do day in and day out, and I'm not, I'd rather not comment on that.
I'm sure that that's a focus for you, but if your country calls for your service, how do you answer, Rick Rieder?
How do I answer? So I'm going to focus on, I'm just not going to answer that. I'm focused on what I'm doing day in and day out. And listen, whoever ends up being chosen, and I've seen some very good commentary from some of the candidates that are out there, whoever's chosen, there's a big discussion about Fed independence, and I'm a devout believer in Fed independence and what it does for currency stability, what it does for how people around the world think about investing in the U.S. I also think there's innovation and creativity and some thoughtful dynamics that I think the Fed can bring to the equation. Whoever that is, and I think there's a bunch of good candidates on that list, I think we're going to move to it in a direction that we'll see some more innovation, which I think makes some sense.
Rick, I'm just going to say Chair Rieder has a wonderful ring to it, and I will leave it there. Rick Rieder, thank you so much. You're going to stick around with us, and we're going to get more of the market action after the opening bell, so don't go anywhere. Still ahead, Labor Secretary Lori Chavez DeRemer joins us live from the White House as Kevin Hassett says that the jobs number will be revised up by almost 70,000 jobs. We'll have more on that, too. You're watching Bloomberg Open Interest.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life.
All right, guys. Let's see. Looks like we're drifting down into the VWAP.
How they might be able to change their conduct
Where are we at?
so that they can live a happier and
About
healthier
10
life.
minutes into
I'm
this
David
deal.
Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Hogwarts, you got a down bias today. Hogwarts has got the down bias.
The 3-month average for
I don't have one yet.
29,000. That's the lowest since the pandemic.
I'm not real
The
sure.
reaction is one to rally. We're off of the highs, Matt, but we are still
I'm usually like a perma bear. I always think the market's about to collapse because I just listen to so much news, and in my mind I don't even know how we're still here as a human race sometimes. So
and that doesn't seem to be taking too much wind out of the sails of a bet.
yeah, I know, man.
in
I know what you mean.
More next with BlackRock's Rick Reeder plus Labor Secretary.
I'm getting killed on my NVNI. I'm going to have to buy more now. I was about 59 or 60. It's at like 53. We got to pump that stonk. I'm going to have to buy more. Maybe next week I'll buy more. I'll see where it settles. Yeah. Yeah, you're gonna have to dollar cost average in another 100 shares for those 60 bones. Well, it's $53 now. I have 2,000 shares. I'm gonna have to buy another 2,000. Get me down to like the 56. But yeah, I don't know, guys. I really don't know. It's like every time I think, how can it possibly go higher? It just takes off again. That's how I got caught when I used to have a cash account. Thinking it couldn't go any higher. And then got caught in a long, got caught in a short for a month and a half or a month. Getting margin calls at night.
Expand our reach of fiber. You cannot wait until there is certain these have long lead times that require you to have.
I wouldn't be taking the short just yet.
Another bucket is,
honestly, I don't think I would take the short until we confirm below the VWAP. You know what I mean? I think I'd really want to be below the VWAP before I took a short. But, and if I took a short, I'd be moving to break even as soon as I could. Like I took a quick short yesterday. And as soon as I was green, I moved to break even and I didn't take any risk.
Confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look.
Yeah, well, there's gaps all the way down to close.
I really don't.
We got some work on the way down.
It doesn't matter the economic cycle. It is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course.
Who's this dude?
Remember, we are investing at record.
These companies pay to be on this show. They're pumping their stocks.
Deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hardern in Alberta, Canada, and this is Bloomberg.
Ooh, look at this candle. We're challenging this fair value gap. It's too early for me yet, though, guys. Way too early for me.
Miller, we had a very weak jobs number, less than a third of what we expected.
I'm going to pick up another eval. What's the special?
As a result, markets are rallying because they're betting on a rate cut. Odds on WIRP are over 111% right now.
Steakmeister here.
8.9% as the
Stakey. Stakey, you here? Nah, he's in Australia. You might be sleeping.
Of course, gaining 0.5%. They need a rate
He stays
cut
up pretty late to hang out with
on the
us.
New York Stock Exchange, you've got Elf Beauty, and they are happy for a reason. The stock is up 600% in the past 5 years. And wait, Hailey Bieber is...
the woman, Hailey Bieber with the glasses. I think that's Hailey Bieber in the front
Here,
row.
okay. Apparently that's Hailey Bieber. It does look like a small tattoo on her neck, so I would guess that's a Bieber-ish thing to have. BCP Investment Corporation ringing the bell at NASDAQ, also plentiful and smiling, even though their stock is down 16-17% year to date. Apparently, they're doing some kind of rebranding after a little bit of M&A.
It's still 90% off the bundles. But the 250K, they're not letting you do the 15 days. That's all right.
I have one stock that is decisively higher for us to watch this morning, and that is chipmaker Broadcom, up just under 15%. It's going to help OpenAI create a chip available in 2026, and that puts it in direct competition with NVIDIA. Broadcom also said its AI outlook will improve significantly, all of that helping to ease concerns about slowing growth, Matt.
All right, so Avgo on the run this morning. Tesla also rising. Stakeholders are offering Elon Musk a compensation package, or I should say the board offering Elon Musk a compensation package valued at $1 trillion, but there are some big ifs attached to that package over the next 10 years. It includes growing the company's market value to at least $8.5 trillion. So they would have to, he would have to raise the market value of Tesla by more than 8 times. We're back with BlackRock Chief Investment Officer of Global Fixed Income, Rick Reeder. And Rick, I want to get your take on these Kevin Hassett headlines that the jobs number will be revised up by 70,000. I know we've seen revisions very often to the downside. That's one of the reasons the president fired the chief statistician. Does this number look surprisingly low to you at 22,000? Do you think it should be more in the 90s?
No, not necessarily. I mean, listen, I think that, you think about the size of the economy, just think about the size of the population. I mean, we're talking, if you take a step back and you talk about the size of these numbers and the delta, what it means, it's actually, they're not that large that you could have these revisions up and down around the mean. I mean, I think the thing that we focus on, is what is your moving average and where are we? What's your 3 month? What's your 6 months? What's a trend look like? And the trend, by the way, we talk about it's a good economy. It's a really solid economy. The trend is a bit lower. I think one thing that you have to also reflect within these numbers is immigration has come down significantly. That was literally 100% of the supply of labor, what created in places like leisure and hospitality created a huge amount. So to see some diminution of hiring on the backside of that too, that's something you also factor in the equation. So, listen, I think what we're talking about is a moderate, an economy. By the way, it's not laying off a lot of people, but it's just the velocity of hiring is slow today.
Rick, though, I think part of what Matt's question also gets at is this isn't just a random market commentator, right? This is the director of the National Economic Council. If you have administration officials saying, don't believe the number, it's actually higher than it is. This is the first data point. We should also say, without the head of the BLS, does that concern you at all? Does it concern you either about the reliability of the numbers or about this market's willingness, getting back to our early conversation, to continue to fund deficits if there are questions about institutions in America?
So, listen, I mean, I will say one thing. I've been doing this a really long time. You think about, we're in the era of big data. I still am blown away that the markets focus on that one release, whether it's CPI, whether it's payrolls. So what do we do? What are we trying to do within our business? You can scrape the internet for data, credit card data, hiring data, et cetera. You can do some pretty incredible things around earnings reports. And so what we tend to do is you take the whole combination. Think about for years analyzing the data in places
Trying
like
to get an
China.
eval added
You have
here.
to go and look at what are your other sources, power, what's happening to the power supply, what's happening to the different parts of the economy. So, listen, what we try and do to evaluate is just think about the broad landscape. Listen, I think the data is, the data that's always been released, including surveys. I never understand why the markets focus so much on surveys. What we try and do is we use a ton of signaling data, AI data related help to do this, to try and understand what's the broad landscape look like. And you generally get a pretty clear picture when you take a lot of factors in the equation.
I thought it was interesting, Rick. I was listening to Tom Keene and Paul Sweeney on Surveillance this morning with Ken Rogoff, and he was talking about the importance of the non-farm payrolls number. I've always called it the granddaddy of economic statistics. Listen to what he had to say.
Jobs Day has always been the big number because it's the most reliable number that we get sort of in real time. Maybe now and going forward, it's not going to be considered as reliable, and I don't know what we're going to look at.
So Ken Rogoff, of Harvard fame, if you still trust that institution, and also the author of the new book, Our Dollar, Your Problem, which is on Tom's summer reading list, I think #1 rec. Rick, what do you think about that? Are we getting to a point where we can't trust our institutions?
So, I don't know. I mean, you could take a pretty cynical, by the way, I agree he's a very smart guy. I would take a couple of things in the equation. Yes, the payroll report, I've been doing, I don't know how many years, I actually calculated how many payroll reports where my heartbeat goes up and my blood pressure surges. It is the big number that we focus on. But like I say, I still, if you take a step back and think about, do we trust our institutions? Yes. Do you like living in the United States and think about how our ecosystem works that allows us, to tap into different sources and look at different pieces of data? So I don't know. I'm not that skeptical on it, but listen, do you want to see good data? And what he says is right. Payroll reports are really good. By the way, claims data is pretty good. The JOLTS data is pretty good. Listen, so you got to pull it all together and try and get what the broad fabric looks like.
Rick, while this is going on, we're also in the midst of Stephen Miron's confirmation hearing to join the Fed. A watcher writes in wanting to know your opinion on Miron yesterday, saying that part of the Fed's mandate is to have moderate long rates. What do you think that exactly entails? Is this a Fed that potentially, with more choices coming from the Trump administration, would do something like an Operation Twist, would buy long rates if they back up? What would that mean to have moderate long rates?
So, listen, I think there's a series of tools. I mean, the Fed has balance sheet, they have morals, they have suasion, they have a whole series of things that they can do in terms to effectuate where the curve is. By the way, I've always been blown away by how actually, just by talking, how you can influence where market pricing is according to what your forward opinion is going to be, where you're going to move things. So there's a series of things that you could do, and quite frankly, I think part of why I said you have.
All right, guys. So we're drifting into the VWAP. So for me, if I think we're moving down today, we need to confirm under the VWAP by about 10:30ish, and start rolling over and filling those gaps down below.
I mean, think about how we finance today, and think about the growth of private credit. How do we finance?
If it holds the VWAP, then we're probably going to continue grinding up. So that's kind of where I'm at. Yeah, I know. Sorry. Those are the security codes I was setting up. I'm going to copy an eval off the PA.
Moving the Fed funds rate at the front, the overnight funds rate 25 basis points at every
7 minutes until 10 o'clock. Let's see here. I can start working on
Rick, really thoughtful as always. So good to get your thoughts. We covered a lot of ground. That is BlackRock's Rick Reeder. Thank you so much. And look, there are still lingering questions about the data
journal
about
entry
the White House. Kevin
for
Haskett, as you
yesterday.
mentioned, saying 70,000 jobs would be added. We were hoping to speak with the Labor Secretary, Chavez DeRemer, about this. Unfortunately, she is no longer joining this program. I think I can speak for both of us when I say the Secretary is absolutely invited and welcome to join this program whenever she can.
Yeah, absolutely. And there's a lot to ask her about as well after the ProPublica report yesterday that suggested she has 2 mortgages listed as her primary residence, that she claimed primary residence for 2 mortgages that were 2 months apart. If that's the case, you wonder not only what she thinks about this jobs report, but whether or not she feels she needs to resign. Because as we know, President Trump's administration has said that can't be tolerated. No matter who you are, they consider that to be breaking the law. Certainly Bill Pulte has tweeted as much.
Yeah.
And no one, as he said, is above the law. And that would include, you'd guess, if it's true, Lori Chavez DeRemer. This according to ProPublica.
And a spokesperson did respond to ProPublica saying that it was her husband that had planned to retire there. But I guess what you're getting at, Matt, is this issue where it sounds like one rule for allies, another for enemies. We give her the benefit of the doubt. Should Lisa Cook then get the benefit of the doubt as well? So again, a lot of lingering questions, and we invite the Secretary to come join us when she can. All right, Matt, shall we get a check on markets this
Let's take a look at markets now after that jobs number came in so weak, but then the administration said it's actually stronger than expectations. We had a gain and still have big gains, 0.4%, a gain of 26 points on the S&P 500. Does that push us to a new record?
It would indeed, Matt, because we were at a record yesterday, so we don't really need to move that much to that upside to get that new record. So if you look at what's driving us there, it's the 2 stories we've been talking about all morning, right? It is Broadcom and it is Tesla. For Broadcom, it's developing chips for OpenAI. For Tesla, $1 trillion pay package for Elon Musk, the first $1 trillion man. Maybe he can help pay down some of the American deficit. Moving us lower is NVIDIA, maybe also reacting to that Broadcom news because they have a serious challenge now. In the face of that, Microsoft also moves to the downside. Let's just get a check on the sectors too. Again, about 10 minutes into your trading day, and only one sector into the red, and it is energy, with some headlines about maybe Saudi wanting to pump out more oil in the OPEC Plus decision. We're going to get that this weekend. Otherwise, everything is in the green, and it's the interest rate sensitive sectors. No wonder, because we are now implying that we will get that 100% plus odds that we will get a cut. So real estate does well, materials, consumer discretionary, Matt. Again, everything positive for a total return so far this morning of 0.4%.
Yeah, I think fascinating that you have NVIDIA down 2 1/3% because it's such a heavy stock right? It's worth 7.5% almost of the S&P 500, but Broadcom is worth 3%. So you could see that a 15% gain doesn't hurt much at all for that stock. Coming up, Lululemon slashing its outlook, disappointing investors for a third straight quarter. More on the yoga pants retailer next. This is Open Interest.
Okay.
At what point do you say we made a mistake and we're getting out? How long do you give it before you say this isn't working?
That's one of the most critical differentiators between great investors and just mediocre investors. Because on one hand, you have to have confidence and conviction in all the work you've done, the decision you've made, that if you have a little stumble here and there, if you immediately are selling out, you're never really going to fully realize that the depth of potential long-term success. And yet on the other hand, if you're stubborn and you refuse to admit I'm wrong, the more you continue to think.
All right, we're challenging the VWAP.
Then you'll get caught in some.
It's almost 10 o'clock. Got a call here in just a minute.
So that ability to have a fresh perspective, take in the new information, even when things aren't going the way that you'd expect or to hope, and to really understand from this price point today, is this still going to be one of the most compelling investments or not?
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on
All
Bloomberg
right,
TV.
got the fresh eval loaded. Let's get the trade copier going, and I'll make my call.
Time now for some top calls, some of the analyst action in focus this morning. First up, UBS has downgraded JB Hunt to neutral, suggesting that an inflection point in truckload prices.
So what I'm going to do is I'm going to set, I got the bundle of 10 or whatever it is, so I'm just going to trade copy one.
TKO Group with an outperform rating, saying it's well positioned at the intersection of key themes in the
And I'm going to set it at 3 times. So if I take 2 contracts, it'll hit for 6
highlighting challenges from tougher trade policy and cautious U.S.
on the
consumers.
eval.
Now, Lululemon CEO says, quote, "We're seeing fatigue with the consumer, particularly our high-value consumer who's been with us for longer." For more, we are joined by Bloomberg Intelligence Senior Retail Analyst Poonam Goyal. And Poonam, Lululemon shares getting absolutely destroyed in today's trade. Is this about a macro influence of weaker consumers, or is this just about the competition eating Lululemon's lunch?
It's about both and execution. I think execution is really key here. When you look at what's going on with the numbers and why the guidance was cut so much, it's because they don't have enough newness in stores. They're not moving as fast as customers would like. They really need to step up on that. And they say they're planning to, but it's not going to be till spring 2026 that we can see consistent newness at a high level.
Isn't this just how it goes, Poonam, when you're talking about fashion at this level? I mean, how long, even if, this company was a pioneer in getting women to wear yoga pants in public.
All right, it's frozen. It's just loading up the trade copier. We'll give it a minute.
Category that they created.
They're still dominating. I mean, clearly there's more competition, but if you heard them closely, they said that the performance business actually did well. It's the casual side of the business, which is about 40% of the mix, that is struggling. And that's where they need to really step up on innovation. Their Align, No-Line pants were a call out in the quarter. They've done really well. But when you listen to Scuba and you listen to SoftStream and Dance Studio, these are some of their casual lines. They just haven't been performing. It seems like what you see there is what you see everywhere, and that's not what consumers want to see. They want to see new things from Lululemon. They want to see innovation.
Poonam, if you live in New York City, you've been inundated with all things U.S. Open, and it feels like U.S. Open things have gone hand in hand with Lululemon. Lululemon seems to be putting a lot of dollars into marketing. I think they sponsor TFO. They've had this pop-up at the U.S. Open itself. Yeah. Is this the route forward for Lululemon to try to grab onto some of this viral marketing, or is that not enough? Is it the innovation piece that you're talking about?
I think they have to do both, right? So you need to be where the customer is. You need to be on social. You need to do pop-ups. You have to be at these sporting events. That's table stakes today. That said, it won't increase their marketing spend. They said that they're going to hold their marketing spend at 5% of sales. And then on product is still king in retail, in any retail. You have to have the right product to get customers in your door and shop.
All right, so the stock has been massively underperforming. If I look at a 5-year chart, it's down more than 50%. How much do you think with the right moves, Poonam, this company can recover?
I think if they can get the assortment right and the customer back in the door in 2026, they will stand to recover from what they're seeing. That said, there are still tariff headwinds, right? Much of the cut in the guidance that you saw yesterday was because of tariffs. They took their gross margin guidance down by 300 basis points, and that was 190 basis points more than they previously expected, largely due to the de minimis exemption that was taken away.
All right, Poonam, thanks so much for joining us. Poonam Goyal there, Bloomberg Intelligence, talking to us about Lulu as well as the state of the consumer and tariffs. Coming up, investors are piling into gold ETFs as the shiny metal hits a record high. That's next. This is Bloomberg Open Interest.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on what's going on in stocks at this hour. Right now, another record all-time high on the S&P 500, 65.30 there as the index rises more than 0.4%. Broadcom part of that story. Let me show you the stock in just a second. NASDAQ up almost 1 full percent, so 0.9 to 23,840. The small caps gaining more than 1% as well, as everyone is betting on a rate cut September 17. Now the question is 25 or 50 after that non-farm payrolls number that we saw showing only 22,000 jobs were added in the month. Although the administration says it's really more like 92,000. Actually, can't trust that data. NVIDIA right now down almost 2%, and typically that would be enough to drag the S&P to losses. But because Broadcom is up 12 or 13%, it's adding back most of that difference. NVIDIA worth 7.5% of the S&P 500, Broadcom worth 3%. Tesla gaining after the board approves $1 trillion pay package for Elon Musk. Google is up as well. Gold at an all-time high, and I think it's the 7th all-time high this month. $35.93, the level there for Troy ounce, and the Spider Gold Trust gaining. Obviously, when gold rises, you want to jump into that too, right?
Yeah, and I just love the irony of stocks at an all-time high and gold at an all-time high. I think that tells you something there. And as you point out, Matt, investors have been piling into gold ETFs more than any other asset class this week, with that precious metal hitting another record. Bloomberg Intelligence ETF analyst and ETF IQ co-host Eric Balchunas joins us. Eric, if you look at the demand for gold between central banks, between, I don't know, our parents going out to Costco and buying gold bars, and the ETFs, how much are the ETFs contributing to the record rise we're seeing in the spot gold price?
Yeah, they're a factor. You know, people, I think, overrate the ETF's impact because if you take all the gold above ground, ETFs own like 1 to 2% of it. So there's a lot more going on. That said, ETFs are the fastest thing, the first thing people reach for. They're very accessible. So ETFs give us a good sense of sentiment, and we've got $44 billion into gold ETFs worldwide. About $24 billion of that's in the U.S. So international also, this is a global trade right now. We think the big trade this year is to keep buying stocks, but you buy gold and maybe a little cash just to make yourself be able to sleep at night, given some of the geopolitical uncertainty, the administration. So gold and stocks rallying at the same time was the trade all year. And anybody who's been buying both is thrilled with the jobs report because it means Fed rate cuts, which is usually good for gold and stocks.
I wonder why, though, we have the big gains in gold, even though you mentioned the geopolitical uncertainty, even though we know this administration loves gold, at least as a decoration. Isn't it normally supposed to be a hedge against inflation? And if you don't think that we're going to see inflation, why would you buy gold?
Yeah, you know, gold's track record as being a hedge against inflation is a little shaky. I personally think a lot of people were buying it as a diversifier. You know, just in case the tariffs were worse than we thought, just in case World War III broke out. Like, I just think it was the hedge you bought while you kept buying stocks. And this is something we've seen in the past. We saw a little bit of this in 2020 as well. In fact, that was the record year for gold flows was in 2020, 34 billion US. So we're at 24 billion US, 10 billion away from breaking the 2020 record. We'll see if it gets there. But that's what I think it's for. It's more of a diversifier. It's not even a great stock hedge. It's zero correlated, and I think it does its job. And this year, like I said, if stocks go up and gold goes up, that's obviously positively correlated. So it's a very interesting asset, in my opinion, and I think people use it mostly just to diversify.
All right, Eric, thanks very much. Eric Balchunas there. Our Well, and your ETF expert. I think he's everyone's ETF
Literally the world's ETF expert.
This guy knows
Correct.
more about ETFs than anybody in the world. And that's why he co-hosts our ETF show. Bloomberg ETF IQ, you can see it every Monday at noon New York time, 5 p.m. in London. It's one that you don't want to miss.
Yeah, because the money is flowing into that gold ETF, and I wonder how much of that is also just not flowing into bond ETFs. He's talking about it being the hedge for stocks because treasuries haven't been working as the hedge for stocks, just the volatility there. But I should say that with this move this week, you actually have yields much lower on the week, significantly lower at the front end, the lowest since 2022 after that core data.
I should point out, Bitcoin is rallying today as well. Digital gold is up 2.5% to $113,000. So that line of code is also incredibly valuable.
Yeah, but my parents aren't going to Costco to buy Bitcoin.
No,
so just
they buy it on the app, right?
Yeah, of course. Yeah, my parents absolutely are doing that.
Coming up, we'll talk to former Fed economist Julia Coronado, get her take on this jobs number.
Let's talk about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin yang 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, a change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being, for the world.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. A new sign hiring has slowed way down. The Labor Department says employers only added 22,000 jobs in August compared to 73,000 the month before. CBS's Kelly O'Grady.
It's 4 months of slowdown. It is not great, but we are not in a recession.
The report also shows employers shed jobs in June for the first time since the pandemic. Economists predicting the Fed will act soon. Kelly O'Grady.
We are expecting an interest rate cut come that meeting mid-September.
That's something President Trump's been urging. Unemployment rose last month from 4.2 to 4.3%. Supreme Court Justice Amy Coney Barrett has a new book out, and she's spoken to CBS News in her first TV interview since she joined the court. Senior correspondent Nora O'Donnell asked about the court's independence from politics.
Does the reputation of the Supreme Court matter to you?
I want people to have trust in the court, and that's why I wrote this book, frankly. I wanted people to understand how the court works. I wanted them to understand how we get our cases and how we go about making our decisions, because the court belongs to every American. And I want Americans to feel like they have a stake in the court and they understand what the court does. Because what the court does is not the same kind of work that Congress does, and it's not the same kind of work that the president does. Those are the political branches. The court is not one of the political branches.
You can hear the full conversation on CBS Sunday morning. New York State Forest Rangers saved the day when some hikers got too high on mushrooms.
Talk about a bad trip. The 4 hikers got lost in the Slide Mountain Wilderness in Ulster County. They sent a 911 satellite text to forest rangers saying they had ingested mushrooms, and one of them was experiencing a debilitating high. Rangers found the hikers and guided them down the trail to a waiting ambulance where they were checked out. Along the way, one of the hikers had dropped their car keys. The next day, a ranger hiked back up the trail and miraculously found the keys under a log and some tall ferns. Michael Wallace, CBS News.
When you eat your meals may help you live longer. CBS's Michael George.
A study out of Turkey showed as people get older, they tend to eat breakfast later, and a later breakfast time was associated with depression, fatigue, and even higher rates of death. The impact was especially significant for older people. Researchers say this adds new meaning to the saying, breakfast is the most important meal of the day.
At the U.S. Open, women's final all set.
It's Amanda Anisimova in her second straight Grand Slam final of the season.
Anisimova will take on Aryna Sabalenka tomorrow. This is CBS News. A teenage fisherman in New Hampshire caught a big one.
Jackson Denio, at 13 years old, has made quite a catch. About 100 miles off the New England coast, he wanted to catch a shark, but ended up reeling in a potential record-setting halibut. It took him over a half hour to seal the deal. He's 120 pounds. The halibut weighed 174, and
it's 3 inches taller than me.
The International Fish and Game Association is in the process of confirming if the fish is the potential world record holder for a junior angler. Jennifer Kuiper, CBS News.
Kansas City Chiefs kick off their season against the LA Chargers in Brazil tonight, but when the teams touched down in Sao Paulo, the only thing reporters wanted to know about was Travis Kelce and Taylor Swift and that big fat diamond on her finger.
Ever since I've been dating Taylor, life has been fun. You know, it's been exciting. Obviously, a lot more eyes, and I accept that, but it's just I'm living life, living on a high, I guess.
Dream, dude.
Yeah.
Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Local Podcast, and that's where you'll find us. Coming up, we're going to check in with Amy Glazer, Senior Vice President with Adecco, on the jobs report. Carol Pepper, founder and CEO of Pepper International, give us her thoughts on these markets. Janet Lauren's going to join us. She's Bloomberg Higher Education Finance Reporter. The president of Northwestern resigned. Scarlett, I mean, the pressure on these higher education places
it's
is
working
pretty intense.
if you're looking at it from the Trump administration's point of view.
Absolutely. So we'll get the latest there from our friends out there at Northwestern. Liz Hart, president of Leasing for North America at Newmark Group, will get the state of commercial real estate. Is getting better out there. I know the office space probably is bottomed, is what I'm hearing from a lot of people, but we'll check that out.
Lower rates help.
Yes, lower rates will certainly help. Let's kick this whole thing off as we do with John Tucker in our Bloomberg Business Flash.
All right, guys. Happy Friday, by the way. This Bloomberg Business Flash brought to you by IBKR. Will September 2025 be the warmest September on record? At IBKR Forecast Trader, the S was recently at 11%. Start predicting today at ibkr.com/forecast. The last trading day for this contract is October 10th. It's not rocket science. The bets are on the Fed's going to cut the next meeting, at least a quarter of points. Stocks like that, bonds like that, so equities are higher, yields are lower. In fact, we have records, record for the S&P 500, a record for the Dow Jones Industrial Average. This comes after the weak jobs report this morning. Claudia Sahm at New Century Advisors, she reacted after the non-farm payrolls increased just 22,000, and the unemployment rate rose to the highest since 2021.
This ought to be able to convince people at the Fed who were on the fence about doing a rate cut. This really does speak in terms of it's time to start adjusting interest rates downward.
S&P 500 up 7 points, up 0.1%, 6509 in the index. The Dow Jones Industrial Average up 35 points. That's up 0.1%. The NASDAQ 100, 119 points higher. That's up 0.5%. The more policy reacted 2-year. Let's start there. 10 basis points lower right now at 348. Best performing stock in the S&P 500, that belongs to Broadcom, up 11.5%. Worst performing stock in the S&P 500, that belongs to Lululemon Athletica. Tesla proposing a new compensation agreement for Elon Musk, potentially worth around $1 trillion. Tesla shares right now 3.4%. Of course he's worth that. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Hi, Scarlett. Hi, Paul.
Hey, John.
John Tucker, thank you for that news
You
flash.
get paid $1 trillion as well?
Yes, it's all in his
close
package.
to it. No, I'll have to talk to the boss.
Exactly.
The negotiations will be starting soon.
$1 trillion with a T, not a B, a tree. All right, let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu, and we're joined by Bloomberg's Red Brown. Red, what are you looking at here?
Yeah, first one on my list is Lululemon. It's officially the worst performing stock in the S&P 500 index this year, so that's why we're talking about it. It's down 55% this year, another 15% today. So yeah, companies really kind of going through it this year. They cut their full year earnings and sales outlook for the year. And they're dealing with just a number of structural obstacles. Tariffs are hitting this company especially hard. They called out the end of the de minimis exemption, which is on orders below $800, will add another $240 hit to the company's bottom line this year. Having execution issues as well. I mean, I've gone through countless earnings reports, and I've rarely heard a CEO use strong language as they did in this one, saying that he's disappointed with their execution. So some changes really need to come for Lululemon for them to kind of return.
Where do they make their stuff?
I think a lot of it's in Vietnam and Asia. So, you know, the imports are hitting them quite hard. So, yeah, but really strong reaction. And analysts are kind of turning on the stock as well now. There's been a slew of downgrades this morning. So they're not really seeing a catalyst for them to
product
come
selection is a problem, too, because as we keep getting reminded, only boomers wear leggings. Everyone else is wearing wide-legged pants.
Right,
and that's not what Lululemon does.
Yeah, no, that's an issue, too, is like they don't have this like new and fresh selection for people to kind of get them back in stores. So, yeah, definitely a big issue for them as well.
Are you a Lululemon person, Scarlett?
I have 2 pairs, and they make them really well. I paid a lot of money for it, and so they haven't worn out. Like, they're great. They're in great shape.
Okay, so maybe there's some optimism. So for the
you're also looking at the chip sector.
Yes, Broadcom. So quite opposite of a situation for Lululemon today is Broadcom, ticker's AVGO. They were up as much as 16%, now trading around like 10, 11% at the moment. They had a really busy news day last night. So first they had the earnings report where kind of the results were a little tepid, but they gave it quite a strong forecast as well. So there is kind of a decent outlook for the demand. Earnings call, CEO was pretty bullish about 2026 as well. And then there was a big news that dropped that they will be working with OpenAI to help them develop some chips to compete with NVIDIA. And so we didn't get any financial details out of that, but obviously, you know, kind of deepening their relationship with OpenAI, the biggest AI company, can't be a bad thing. And kind of for what it's worth, NVIDIA was trading down a little bit this morning. So yeah, so some interesting things working out in the AI world at the moment.
Broadcom 52-week high today. AVGO is a symbol. I have no idea why that's the symbol.
It used to be Avago, right?
Yeah. Is that right?
Yeah.
Okay.
And then Hock Tan changed it to Broadcom.
Gotcha. Thank you very much. All right, very good. Anything else there?
Yeah, I'm looking at some of the home builders. So Lennar was trading up around 4%. DR Horton, Pool Corp as well. So all these companies that are kind of exposed to the home market are trading higher after we got the jobs report, or excuse me, the payroll data this morning. So obviously the feeling that rate cuts are a matter of when, not if. And yeah, you know, the sector has struggled this year. Lennar's been kind of trading down for large parts of the year, but it's really turned a corner in the last month or so as this conversation around rate cuts has really kind of gathered pace. So yeah, we'll see how that goes for the sector in the next month here. Maybe fewer mortgage rate buydowns like they were doing before.
Yeah, maybe. I'm looking at the 30-year fixed, 6.64%. I got my 10-year at like 4.08. I think that maybe it can come down some more.
That's a lot of people are thinking.
I need it. See, I got my mortgage on a Jersey Shore compound a few years ago, 6%. Thought I was the biggest chump in the world, John. But now, I mean, that's not too bad.
You're a real genius.
Well, Alex,
325, by the way, Scarlett.
Yep, that's what Alex has.
325.
No, me. Not
yeah.
Alex. Yeah.
So
right
there you go.
There.
All right, John.
I don't want to say what my mortgage rate is.
John's never leaving. So anyway,
you're stuck.
Yep, exactly. All right, Red, thanks so much. Appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's get into these markets here. Again, kind of mixed on the equity side. Yields coming in pretty darn sharply on the bond market here. Amy Glazer joins us, Senior Vice President at Adecco down there, Ponte Vedra Beach, Florida. I know it well. Lost many a golf ball down there. Amy, what'd you make of the jobs number today?
Yeah, you know, the headline numbers do appear to be soft, but I think it speaks more towards the stability in the labor market workforce, despite the ongoing headwinds. You know, we may talk about it cooling a little bit, but it still remains competitive, especially in spaces like healthcare, skilled trades, and seasonal hirings getting ready to pick up as well.
What does the wage picture look like? We keep hearing about how employees have less leverage than they did, certainly during and right after the pandemic, and employers have all the leverage and they can kind of call the shots, including telling everyone in the New York area and cities to get back into the office.
Well, we are starting to hear whispers of wage gains and those conversations taking place. Specifically as it relates to the blue collar workforce, they're looking at putting those wage gains in the hourly rate itself. That contradicts a little bit on the professional side, where we still see a bit of an appetite increasing for special incentives, retention bonuses, and ongoing increases in commissions. So you see a little bit different at play depending upon whether you're a desk worker or a blue-collar worker.
Any particular industries or any particular regions of the country seeing materially good or bad trends?
The Southeast continues to pick up and will with ongoing, weather. And as the holiday season approaches, we still see travel and tourism and hospitality kicking up there. Healthcare still remains the name of the game and being white hot. We are seeing employers focus a little bit less on hiring itself and more on retention, absenteeism, and upskilling their current workforce.
And how much does that cost them? I mean, it obviously is a time commitment, but I wonder what that looks like on the cost side versus just hiring more.
Well, they're trading quality for quantity at this point in time. So we are still seeing an appetite. Companies are still hiring, but they're being slower and more methodical in their hiring process. So they really are valuing quality over quantity and kind of slowing down on what we've seen over the past 5 years of this need for speed reaction.
Amy, talk to us about youth unemployment. I saw that it jumped to about 10.5%. That's the highest excluding the pandemic since 2016. I'm wondering if that's AI taking away some entry-level jobs. Talk to us about the youth employment market.
Super interesting. I always tell people you don't necessarily have to worry about AI taking your job, but you have to worry about losing your job to someone who knows AI and uses it better than you do. We have heard some rumblings upon recent graduates that they're finding difficulty in the marketplace. So we encourage them to continue. There are definitely gig opportunities. There's temp work. Take the time to really see where you want to go within a given industry, and don't be afraid to try something that you may not have majored in, per se.
So as we gear up into the year end, I mean, September is here now. The school year just began, but companies need to prepare for the year end. What does this mean for any kind of seasonal hiring surge that we might expect in November and December?
So I anticipate the September surge will be another real thing again this year, and looking for positivity next month. We also see employers hiring earlier and earlier every year. So historically in the past, really even pre-pandemic, you would see seasonal hiring really pick up in November. Right now we're seeing it starting to pick up in October in advance in some of those early holiday sales that we anticipate online. So employers are all over it. It's the name of the game, is how can they make sure they make their peak forecasts as early as October this year.
All right, Amy, thanks so much for joining us. Always appreciate getting a few minutes of your time. Amy Glazer, Senior Vice President at Adecco down there in Florida. I don't know. I think you go into I always make the joke, it feels like some meaningful percentage of GDP occurs within like coffee houses. You walk into a Starbucks or something, everybody's got the iPad, their computers open. I'm like, what are they doing?
They're being very productive, apparently.
I guess so. They're doing business, I guess. I guess that's the gig economy. But
that's the WFH people.
Yes. Yeah, I'm not familiar with that.
We don't know about it.
We don't know too much about the work from home here. So that's another thing. I guess we're at the new normal. Everybody's kind of back 4 days a week, 5 days a week. I don't know. We're back here. We're going to have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash being brought to you by Oracle. Attention, growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. The major stock averages, they've moved off their record highs, pairing some earlier gains. In fact, turned negative for the S&P 500 and the Dow. S&P 500 down 12 points. That's down 0.2%. Still 64.89 on the index. Dow Jones Industrial Average 151 points lower. That is down 0.3%. The Nasdaq 100 is up 0.2%, 47 points higher right now. Best performing stock in the S&P 500, that belongs to Broadcom, AVGO, up 11.5%. The chipmaker said to be helping OpenAI design and produce an artificial intelligence accelerator. And then you go to the bottom of the list, worst performing stock in the S&P 500. Again, Lululemon Athletica down 16%. Among other things, they cut the forecast. Job growth cooling notably last month. The unemployment rate rising to the highest since 2021. So for a lot of traders, that seals the deal for a rate cut of at least 25 basis points for the next Fed meeting. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Scarlett and Paul.
All right, John, you set us up perfectly for our next guest.
That's what I get the big money for.
There you go. Carol Pepper is founder and CEO of Pepper International. And Carol, you heard what John said about the jobless rate rising, and you also heard what he said about the 22,000 increase for the month of August, a fraction of what economists had anticipated. We talk about this 25 basis point cut being priced in completely. Is the door now open for a 50 basis point cut?
I wish, but I don't think so. I mean, given this feud that's been going on with the Fed, I think they're going to err on the side of caution, although I do think that 50 makes more sense given what the numbers are starting to show. And they probably will get a little bit behind. Maybe they'll have to do 3 cuts instead of 2 for the rest of the year, get us to 75 basis points before the year end. But unfortunately, I don't think they're going to get as aggressive as maybe they should.
So, Carol, in an environment where rates presumably will be declining, is it a time for this market to maybe broaden out and small caps, mid caps, something other than the Mag 7 can perform?
I wish, but we have headwinds. You know, we have tariffs. The tariffs are now hitting the smaller producers, the smaller cap companies, anybody who's shipping small packages. That's why we heard Lululemon is the worst performing stock today, unfortunately, because they're getting killed on the shipping and the tariffs on small packages. So that's going to continue. That probably will affect the Christmas shopping season as well for some of these manufacturers. So I wish it were the case that the rally will broaden out, but I don't frankly think that will be the case. I think you'll still see concentration on the Mag 7 and everybody else holding their own, perhaps, maybe not sinking that much, but really it's a question, can the cuts save us from the tariffs? That's the real question.
So aside from hiding out in the mega cap tech names, which are very expensive right now, even if NVIDIA does deliver on its results, where else can you find shelter? Where else can you be defensive?
Well, you can be defensive with defensive stocks. So as you know, some of the defense tech stocks are doing well. Some of the ETFs focusing on defense are doing quite well, up 36% this year. So that's an opportunity because unfortunately we're going to the Department of War. So it looks like we're going to continue to rearm the country. That's an opportunity. I would say anything that is more, not so much consumer driven, but manufacturing related to the data centers or the AI or the technology. So perhaps we'll get a little bump in industrial real estate, not sure yet, because certainly, as you know, I manage money for family offices, and family offices are all in on investing in data centers and recreating technology, repurposing old data centers, for example, for the new AI data centers, which there's a lot of work to be done there. So I would say in that sector, there's possibility, and defense, there's possibility. And, but I would avoid, consumer, and I would avoid even real estate very heavily. I think it's a little early for that bet. That will probably kick in more next year, first quarter next year, if we see the rate cuts that we need.
Carol, how do your clients feel about investing in fixed income these days? Where do they want to go?
Short end. We're still short. Nobody's taking the risk to go out long. They're still under 5 years. You know, the feeling is that's my cash, and I'm holding on to my cash because I'm nervous. They're also looking at gold, by the way. It's interesting. You see a lot of people barbelling with risky assets in Bitcoin or US dollar tether, and then on the other end holding gold in vaults. I mean, really old school. I see people going back to holding gold in vaults. I haven't had that conversation.
All right, guys. Anyone get in on that front run up top?
So there's really just a lot of question marks about how this is going to all shake out. And of course, the minute we hit the new year, we're going to start talking about election 28, midterms and
Let's
election.
see, the cross was at
maybe unraveled
855.
The end of 26.
We're at 200 points on that one move already. This is crazy.
Calibrate their portfolios. And for that reason, there's still a lot of money on the sidelines, even though you see the market in this narrow tech sector.
So now I guess we're just waiting for a pullback. Right now we got too much volume. We gotta wait for this volume to calm down, and then get a pullback, and we can start looking for an entry to go short.
What do you expect will be the risk of people being too crowded, these overcrowded trades of being at the short end of the yield curve, for instance, all being in mega cap tech names, being in defense, including some of those European defense.
You bagged it. How much of it did you get?
Unexpectedly. Doesn't that create a risk of everyone piling in or out at the same time?
I was on calls all morning. I couldn't even think about it.
I think where you're going to see that risk play out is if we get into a real risk-off environment. Let's say something happens. I don't know, China invades Taiwan, or there's more saber rattling, or the war heats up in Gaza, whatever it might be. Where you'll see the pain is in the risk on assets.
220 points.
In the technology
Holy
sector.
shnikes.
That's why
good for you, Rox. Was that an eval or was it a cash count?
We're through this sort of narrow passage to something, to some new normal. I think if we could get all the tariffs settled, and let's say they were around 15% across the board, people can work with that. They can build a business around that. It's very hard right now because tariffs go up and down. We're not sure who's our enemy and who's our friend. We don't know where we're going to war. So as long as there's...
Here's your margin? Holy shit, man. How many contracts were you on for? Did you make like 2-3 grand on that? You had to make more than that.
Just deciding they're going to take a run on the momentum.
Did you make like 15-20 grand?
As they go up, but understanding that if you're doing that, you're not going to get out when you're not going to be the last guy out. I mean, it's musical
Fuck, dude.
chairs.
Good for you, man.
You will be hurt if you try to exit. So you have to be willing to hold your nose, don't look at it, and hold on to your tech stocks. Because over the long haul, that is the growth sector. And so you will do well.
Well, if you got full 220 points, you didn't chicken out for nothing. I wouldn't call that a chicken out.
Chatting with you, Carol Pepper, founder.
Man, good for you, Rox. Good job, dude.
Joining us to talk about these markets. Her clients are these big, the family offices.
Good job, dude. When did that cross? That was like at 10 o'clock, right?
Higher education certainly under pressure from this administration. We had another piece of news out just recently.
9:55. So this was the 9:50 reversal from the open.
Let's get the latest reporting there. Janet Lauren joined us. Bloomberg Higher Education.
Kind of played around, and then the cross came.
Turnover at Northwestern. What's going on?
You could have got in clean on the 20 EMA a couple times here.
Said he was resigning yesterday. He's been there for 3 years, and it's been a bit tumultuous.
Yeah. Well, the thing is if you break through that VWAP, usually you're moving quite a ways.
Settlement from the football coach who had sued the university over hazing. So, and
good job, dude.
Deal with protesters during the height of all these protests in an effort to clear the encampment that was viewed as very unpopular.
Well, you got all the money, man.
That he was under
we're only at 582 right now.
Trump's targeting
all right.
Ivy Leagues, for instance, Harvard.
So I'm just marking some possible pullback zones. If you weren't in at the EMA cross, you're trying to catch the falling knife from here. So for me, I'm waiting for volume to get down into the band and for the trade box to turn on and looking for a pullback to look at some shorts. So Rox killed it today. Hey man, if you want to post that one in the Discord, that's a good one.
And he was grilled along with the presidents of Rutgers and UCLA, and he talked about
you want to post that in the Discord, that'd be cool.
And there said we would be reviewing the contract. It's not clear if whatever happened there. So he was under a lot of pressure. But don't discount the pressure also about the football team, because they had a settlement that came through late August. The football
All right.
coach,
I'll be back in a little bit, guys. I got to do some real work. We got a little bit for something to get set up
and he
here.
denied knowledge of hazing, and he sued. Northwestern is a member
We're
of the
challenging
Big
this
Ten.
fair
Don't
value
forget,
gap.
you know,
I'll be right back.
Important context, yep.
They may not be, UCLA and winning NCAA titles, but sports,
They matter, yeah.
Sports is, is still kind of important there.
So where are we in terms of these certain universities dealing with the Trump administration? Is it trying to just come up with a financial settlement and kind of move forward, and just, is that kind of where we are? Is that the model?
It's all unclear. We know what happened with Harvard, as we talked about yesterday. They had an incremental win. The court ruled in their favor, but we're just waiting for the administration to appeal, as they said they would. It'll probably go up to the Supreme Court. So, even though Harvard won an incremental victory, the judge did not rule on the funding freeze, so that continues. It still shows a lot of uncertainty. Harvard is still not going to be getting any new grants. So, and that still has a tremendous impact. Even though international students are okay there now, it still is a dampening on, if I'm an international student, do I want to come to a school like, even though Harvard is my dream school, if things could be uncertain, it ramps up so much financial uncertainty.
Yeah. It's just easier to go to the UK or to Australia or somewhere else. Which school has settled on something with the White House? It's only Columbia, right?
No, Brown. Brown had a
okay.
$50 million settlement, and theirs was pretty smart because it gave $50 million to develop workforce within the state of Rhode Island. So in some ways, it really bolsters their relationship with their neighbors. Penn very early settled about transgender athletes. So, I think
But everyone else is outstanding, and the goalposts keep moving on this.
Correct. And, again, we don't know what's going on behind the scenes. We think Cornell is, we think Northwestern is, Harvard is.
Harvard keeps thinking it's done, but it's not.
Right.
You mentioned the Northwestern football program, and I'm glad you bring that up because yesterday at the New York Power Players Summit, you spoke with the athletic directors of a number of big schools, including Dartmouth, including Ohio State. And obviously, the story there is the changing landscape of college sports, how these players, student athletes, can now get paid, and how that changes everything. What did you learn from that conversation?
Colleges have to pay a lot of money to players. And as Nina King, the athletic director from Duke, talked about, they're coming up with $20.5 million. At the same time, their own budgets are constrained. But it's a whole new world, to hearing about Ohio State talking about why or what makes sense for them financially to raise money. And UCLA, they talked about they have a huge amount of change too. They're now a member of the Big Ten. As crazy it may sound that they're going back and forth, and they did super well with a number of NCAA championships. But one thing they learned was, one of their soccer teams got delayed on a flight, so they had to come in a day early. So everybody's sort of working out how these conference realignments are working.
And they're still students, by the way.
They're still students. And, that was a big change for them, going cross country. So everybody's working in it. It's a whole new world this year. We're going to see how it goes.
All right, Janet Lauren, our higher education finance reporter here at Bloomberg News. Fantastic to get a catch up with you here on Bloomberg Intelligence. Well, I mentioned the New York Power Players Summit yesterday.
All right, looks like it's going to respect the fair value gap down here.
Ted Leonsis, you know who he is?
Yeah, I do.
He is the founder, CEO, chairman, basically every title there is, of Monumental Sports and Entertainment. They own the Washington Wizards, they own the Washington Caps, and they also own the Washington Mystics of the WNBA. And we had a broad conversation on everything from streaming to sports betting, but I want to play a part of my conversation where we talked about
how much we pull
fans are a
back.
lot more sophisticated than they used to be, and they expect a lot more than just the game.
You look for big events, for big stories, and you use every platform imaginable, whether it's linear, streaming platform, social media, and no different than what we did in February with the Four Nations tournament. I mean, we created something that even if you weren't a hockey fan, even if you weren't a sports fan, you felt compelled to tune in because it was so topical and so intriguing, people wanted to know more.
Well, geopolitics helped a little bit there too, right?
Well, a little bit, but yes.
We're on national TV the most of any team next year. So there's still, Alex is still a very popular player, but it's also, we finished first in the East last year. We had a really, really good team. We weren't out of context, because hockey, at the end of the day, is the most competitive of sports. The playoffs, obviously, are the showcase of that. And, we've been able to build hockey in our community. People would say that DC was a basketball town. It is, but now it's a hockey town. And, we're heading towards $1 billion in revenue. Monumental Sports and Entertainment. My goal is to make it the most valuable regional sports and entertainment company. We have currency, we have great investors, we have one platform, and right now we're being valued $7-8 billion. 2 years, because our business is very predictable, we'll hit $1 billion.
All right, Stochastic's starting to work their way back. Let's see how far it carries the price.
CEO of a $300 billion company. I don't think you've treated the commissioners with the respect that they deserve, right? No, I'm serious. When you look at it, they're running a global branded business with billions of fans, hundreds and hundreds of millions of customers, fans. The fan avidity in this business is off the chart. We say we're not public companies. We go, yeah, well, he gets booed at every Stanley Cup, right? You hear from the fans. They're voting every single day. That's why the renewals are so important.
Yeah.
We average, what do we average?
A really strong pullback.
Over 90%.
Over 90%.
Because our fans, most people don't focus on it, our fans tend to be the most avid, the most affluent, the youngest, and the best educated, and the most tech savvy.
So let me pick up on that idea.
By the way, I have to negotiate my next contract with you.
Ted will be your agent. Let's pick up on that idea of having the youngest audience and the most tech-savvy audience, because your partnerships matter. As the CEO of a $300 billion company, as Ted put it, partnerships like TikTok on the Capitals away jerseys, Roblox to create a metaverse experience to reach that younger Gen Z audience. I'm sorry?
Just announced yesterday, Coupang is going to be one of our...
There you go. So that idea of teaming up with brands that matter to a younger audience that perhaps isn't trained to watch TV the same way we are.
There are two parts to answering that question. One is the authenticity and the game itself. And the good news for us, and I never like to talk about other sports, but when it comes to pace of play, there's more action. You can't be on your phone.
Be careful on this candle.
You'll miss something because it happens fast and furious. So the amount of action to the amount of length of a game works very well for us.
Is anyone going long here, or are you waiting for the pullback? Their volume's way out of control. I might switch to the ES.
And Ted Leonsis, the owner,
Oh,
CEO,
what are you doing, Hogwarts?
managing partner of Monumental Sports and Entertainment at yesterday's New York Power Players Summit.
Did you get caught up in the chop?
It was a lot of good folks there yesterday, including Alex Rodriguez there, and Carl Anthony Towns.
Carl Anthony Towns. I have a picture with him. I come up to his armpit.
Right.
It's great.
And two MTGs.
John Tucker now for our Bloomberg Business Flash with more. John?
All right, this flash brought to you by Oracle. Attention, growing businesses. Oracle offering to cut your current cloud bill in half if you
Meetings.
the infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com.
This is, you want to know a very important rule I made a while ago, man?
Evidence the labor market slowing.
I don't trade while I'm in meetings. When I have calls, I don't trade.
At the next meeting, bond yields sinking.
I don't enter a trade, and I don't try and manage a trade. And then I don't hop in as soon as I'm done, because I've done the exact same thing you've done a million times. I missed out on a trade and then I got off and I had FOMO and I got in. Yeah.
I always say this, the more policy reacted to.
It's tough when you got distractions going on.
That is at 347. The unemployment rate ticking up to 4.3%. Non-farm payrolls increasing just 22,000 for the month of August. You guys did a terrific interview earlier today with Ken Rogoff, the Harvard.
Are you on an eval?
This was actually before the jobs report, but I wanted to play part of that. He sees interest rates pushing higher.
Well, I think a 6% 10-year Treasury is more likely
Then cut it.
a 1 3/4 Treasury that we had for a
I would cut it and wait for your money set up.
Absolutely. I mean, it's very hard
if you're
to
asking.
predict interest rates, but I think they're as likely to go up as down.
Broadcom helping OpenAI design and produce an artificial intelligence accelerator, getting into a lucrative spirit.
If you didn't get in on the EMA cross up above to go short, I would just do, if you can get out
up 11.5%.
with a small loss. Unless if you're still in a long holding this, I don't.
Signing a 3-year agreement to distribute Legendary Entertainment's upcoming films.
There's no longs right now.
The latest in a flurry of deals.
I'm only looking for shorts right now. Right now I can't do anything because there's too much volume. So I got to wait for the trade box to turn on, and then I'm only going to be looking for shorts because the forecast is going to be all block red when it turns on. So I'm setting up for an entry for a short.
I'm not going to say garbage, but
that's where I got the bubbles drawn. These are my entry bubbles if it pulls back.
And since Skydance is bought Paramount, they've been throwing money around Hollywood like crazy over the last 3 or 4 months.
You know what I'm saying?
People what they want, I guess.
Yep, never underestimate.
I feel like this could make it into the next season of the studio.
Could be.
Yeah.
Could be very good.
I'm not looking for long until the EMA's reverse. Are you out of that, dude? Please tell me you're out.
A little bit about commercial real estate. The mistake I always make is
Like if you're still in a long, you need to cut it because it's not.
It's industrial, it's retail, it's
data
all that kind of
centers.
stuff. Data centers. That's the thing. Liz Hart joins us here. She knows what's going on. President of leasing for North America for Newmark. Liz, thanks so much for joining us.
I mean, where are you hoping for it?
Office buildings around here.
All right, well that's not that bad. Where are you looking for it to bounce?
It's been a great year
and go
for
higher.
office real estate, especially in New York. I mean, demand is back. Demand is up 30% right now. You can even believe that. It's back before 2019 levels. And where it's really leading is actually New York City, San Francisco, the places that people were saying.
If it breaks this level here, I might short down to the next level, to be honest with you.
Really are back even on a Friday, right? Your office is still really happening. So there's been a great validation that the office is a great place to drive productivity. And a lot of the decision makers that we're talking to, they're not just talking about the cost per square foot anymore. They're talking about the value per square foot. How
You're
are
seeing a
their
reverse
offices
here?
driving their business goals, and what are they trying to achieve going into the next year?
So in terms of cities, you mentioned New York City, but San Francisco, I'm kind of
All
surprised.
right, I got to
at
make a call, guys. I'll be right
because,
back.
There's a lot more flexibility with work from home. Technology is different. The tech industry as a whole is different. They're not all based in San Francisco. A lot of them are on the peninsula. Talk a little bit more about what you see in San Francisco and where it's happening the most.
Well, let's talk about the technology industry. I mean, that is one of the demands that's actually growing the most. I mean, we have 70% of the companies that we're tracking in the technology industry are looking for more space than they occupy right now. So that's one of those really good growth sectors. Financial services is growing as well, but technology is really the engine of growth that we're seeing across that demand at all the major segments, but particularly in the San Francisco Bay Area. And AI is really leading that charge. And what's interesting is when you talk to those decision makers, why are you going back to the office? Again, productivity. They want to have people looking at each other and saying, hey, what are you trying to do? What are you building? And in a world of artificial intelligence, they're thinking that the workplace and how they set up their workplaces is incredibly important. And they're spending a lot of time and energy to make sure they're setting up those workplaces for success.
Interest rates, how sensitive is, we're having interest rates come down. We have the Fed probably going to start cutting interest rates in September. What's that mean for your market?
I mean, I certainly think that would be a positive for the commercial real estate market. That would help our capital markets, which would be good. We'd like to see a little bit of stimulation. I mean, one of the challenges in the demand is that you have demand for space, but there's that cost of people who spent too much money before. We have to make sure we have enough TI, which is, tenant improvements to make sure that you can reposition those space for the future. And with the One Big Beautiful Bill that just passed, there is some bonus depreciation. So even though we've had 5 years where the trophy's really been dominating, you want to see that second class of asset move into that first class, right? And compete by renovating and improving their assets. And I think that we're in a position that we could start to see that happening, but certainly having some trades would help stimulate that as well. And that would be good for that demand to have a place to go.
Let's talk about AI. We've avoided it long enough, but you've got tech firms, as you said, driving a lot of the demand in certain markets like San Francisco, but also the need for data center construction. And I'm wondering where you see that benefiting, which geographic markets are benefiting the most from that?
I think places with power would be the most simple answer for that.
With cheap power too.
Yeah, exactly. What kind of power and where they can get power quickly. But power drives the day in terms of that. That's what's really driving data center demand and where people can get access, quickly enough to power. And we don't see this changing. There's been so much innovation in this space. I think it's actually quite exciting. It's great to see us lead in this way and have so many opportunities for people to be able to figure out ways to get power to those sites even more quickly. Certainly, from what we're seeing in a real estate perspective, there's been a lot of activity in Texas. Mm-hmm. Texas has been booming for quite a while.
Even though the grid can be unstable there.
Yeah, even though there has been some grid instability, as you mentioned, we still are seeing quite a bit of interest in Texas.
So how about retail here? Here on Lexington Avenue between 58th and 59th Street, we got a lot of empty retail space here. Mm-hmm. Now, it's coming back a little bit, but
barely.
I mean, so what are you seeing about commercial real estate in some of the big cities?
I think the bright spot in retail is really Class A malls. That's where we're seeing great single-digit vacancy, a lot of demand in Class A malls. I mean, grocery-anchored retail.
All right, guys, I'm back.
Extremely well as well. But you're right.
What were you talking about? 1030 Hogwarts?
Building, that hasn't quite
what was up with like the 1030 stuff?
I think, the thriving spot again would be more the experiential retail, people that they can go and really experience the.
Are you out of this? Because it's not.
Printemps downtown is an example. That would be an example of something that's thriving in the moment.
How many Class A centers?
I'm almost thinking of taking a short here to go to the next zone.
For instance, you think about San Francisco, you think about Seattle. The downtowns haven't.
But then again, the ES is in a fair value,
15 minutes outside the city, and those places
a buy fair value gap or support. So look at the ES right now. So you're okay. All right. Based off this, I can see what you're thinking. With the rebound.
Great studies on this that I find to be very interesting. That
based off this right here.
Looks at their phone too much. They're also spending too much time at the mall, which is the same thing
on the ES. About 30 years ago. And then you also have a historic line of resistance right here also. So
a lot of demand, and in the suburbs, it's going quite well.
Real quickly, 30 seconds. If I want to go out and build a building or develop a building or renovate a building, can I go to my bank and get funding?
Yeah.
Well, it wouldn't be able to be.
Are you still in the long though? Are you still holding? Are you still hoping?
But that's why you've got to go get some great advice from someone who knows what they're talking about.
All right, very good. I need the money. Go build something or buy something. Liz Hart, president of Leasing for North America for Newmark.
Just don't start revenge trading, dude. That's the worst, is to get off a call, miss your trade, and start revenge trading because.
0.7%. The Nasdaq holding up a little bit better, lower by 0.6%, and the Russell
2000 I'm gonna
down only 0.5%. So there is
that tag you here,
and you have a better and underperformance of the big caps relative to the small caps.
Yep, and the
tag you with that.
Memorial VIX is up pretty steadily here, up at 1.3%.
All right, just be careful.
The volatility risk here.
Do you have a stop loss set at least?
110,000. Remember, it was 125,000 just a few weeks ago, so the volatility remains there. But one thing is certain: gold, it's higher by another 1% here today, $3,582 an ounce. Gold continues to be the.
What are you thinking, dude? Get a stop loss in there.
We're gonna have more coming up. Jeremy Kane.
The oil rig count is coming out today, Rox. You know that, right?
And AI are pushing the boundaries.
Oil rig count.
US classrooms. We'll have that story coming up. This is Bloomberg Good Morning.
Okay, that's at 1 o'clock. That's at 1 o'clock. You're in the short now on oil. Well, they've been talking about the Saudis want OPEC to increase production. They want production increased, which is going to make it go short. Oil is like more boring than the ES. Okay, so we did respect that fair value gap on the ES. 1 o'clock. 1 o'clock, the oil rig count. All right, here's your pop. Hogwarts, here's your pop. So you better get out. Once you get out, take your dick beater off the mouse for a while. A Fair Value Gap is fighting it now. Yeah, it does. But boring. There's nothing wrong with boring money because it all spends the same. It all spends the same. Yeah, they take the payment the same. They're not worried about it. Hogwarts, brother. Like, you think we're gonna revisit 600? Is that what are you hoping to get back to 600?
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. Kids back to school here. AI, it's a thing. Parents got to figure it out. Teachers got to figure it out. Students got to figure it out. I'm glad I'm not dealing with that stuff. Educators across the country are bringing chatbots into their lesson plans. Question is, will it help kids learn, or is it just another doomed ed tech fad here? Jeremy Keene joins us.
Got an iron condor.
It's a big take story, folks. You know we love this.
What's an iron condor?
Research written and sourced.
Jesus, Rock. So you got 50 screens up? You're trading every instrument.
Teachers, how just educational communities trying to deal with AI and chatbots and all that stuff.
Well, so we initially saw this flurry of concern when
It's an option strategy? I've never heard of it.
And, our students just immediately.
Well, maybe I have, but I don't know what it is.
Their essays using it, and that prompted some initial guardrails that were put in place by a lot of the biggest school districts in the country. Since then, they've started to come around to the idea that, okay, well, we need to start introducing this in some limited fashion. We need to figure out how to do it. It's sort of begun with teachers being allowed to, or in some cases encouraged to use it in their lesson plans.
Iron condor.
So we're seeing pilot programs in public school systems around the country and some private schools.
You essentially buy and sell out of the money calls and puts and make money off the arbitrage. It sounds like some made up shit, Rocks. This, I don't know about this option stuff, man.
That I never would have thought of. There's a program.
It's like I will gladly pay you Tuesday for a hamburger today.
Based on Eli Wiesel, the Nazi hunter and memoirist. Holocaust survivor, and
sound like some crypto kid on Adderall, crushed up snorting Adderall.
That Wiesel wrote, and
I don't know. I don't know much about options.
To use it, but immediately it sort of opens the question of like, oh, is this, how is the chatbot going to represent Wiesel's work? Is it going to be an accurate summary? Is it going to?
So the chatbot was taking on the persona of Wiesel.
Exactly. Yeah. So you could try to engage with the chatbot to learn about the Holocaust and other events. So it's it's pretty serious use.
Yeah. No, I get it. I get it. It's just I don't know if it's like for me. You know what I mean? Yeah.
Yeah. One of the ways that the teacher who we talked to felt as though it did help some students
with an iron condor.
Prepare for tests, for example.
The iron condor is flying and has landed. What happens when it lands? Do you make money, or if it lands, you lose? Does it have to fly away, or what?
Catch up a little bit. Students who
who are, you know, far ahead. Maybe less so, but that was his sort of optimistic.
That's
case.
assuming a lot. I mean, if you're behind, you're probably using AI for in different ways rather than help me come up with ways to quiz myself.
What was the Jabba whale thing? Who posted that? Hogwarts?
And all sorts of other
Yeah.
Google Classroom, those kinds of things came out. A lot of the Silicon Valley folks.
If the calls puts expire within your date range, you make money. Otherwise, you're just stuck with shares of stock that you're losing money on, right?
I don't know the answer to that, but it's a really good question.
That's what I want to know.
Yeah, I certainly think there are some, you know, we look at a private school where the software company behind the software is actually somewhat integrated with the
Or contracts.
structure of the school itself. And, you know, so some people really are big believers and they're putting their money and their kids sort of, the kids there are sort of involved. Now, broadly speaking, I don't know. I don't know if they have some of those same concerns about addictiveness.
You
or
sell
whether
calls.
indeed it is like helping kids learn.
Then you have to train everyone in how to use this AI. And there's a generation of teachers that are very resistant to, first of all, computers. And second of all, you know, this level of technology as well. They just don't want to get their hands dirty with it.
And that was one of the things that the story, one of the points the story made that I found interesting, and it had some survey results to back it up, which is that even though, you know, administrators and officials who are concerned that their kids are missing out on, going to miss out on the next big thing, teachers are still, by and large, a little skeptical, a little resistant. And part of that, you know, our teacher, Nate Fairchild out in Colorado, he sort of points out at the end that like he doesn't really use them for lesson plans himself, and also like because some of the
We can set up a Discord call. Yeah. I don't want to get distracted, man. I gotta stay on point. Hey, Hogwarts, are you still in that long? Maybe you're gonna get paid. What's your entry, Hogwarts, if you're in it still? Yeah, no, it's fun to talk about, but I don't want to get distracted with that, man.
Access to that technology. Is that at risk? I mean, how big of a risk?
I gotta finish my futures project here, and then maybe I'll play around with that stuff.
The advantages is it's relatively cheap.
I might be able to modify this to handle like options and stuff. Maybe, I don't know.
Chromebooks, they have a lot of Chromebooks, yeah.
And then it would be, you know, more value to somebody who wanted to have it.
Technology. If anything, I think the person-to-person teaching, the high-touch contact, that will be for...
You got to be okay now.
Well, and
What was your entry, dude?
The big reasons I think why administrators have been wanting to
I'm kind of
use
liking
these
this,
people,
though.
Maybe this is a way to fill in budget shortfalls. We can kind of shortcut.
You don't
know,
need
it
as many
takes some pressure.
teachers or teachers' assistants.
Right, take some pressure off
I'm liking this
teachers,
sound.
make teaching the process, like sort of the administrative side, more efficient. Maybe it creates a little more time for instruction. You know, I think whether that's actually going to prove to be the case, we'll see.
All right, fascinating stuff. Jeremy, thanks so much for joining us. Jeremy Keene, features editor for Bloomberg Business Week, joining us here in our Bloomberg Interactive Broker Studio. You can read more of this story on the Bloomberg Terminal and at Bloomberg.com/BigTake. That's where you find all the good Big Take stories. And every day, folks at Bloomberg just come out with these phenomenal stories. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on SiriusXM Channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research for the next hour.
Well, how far are you down?
Right now.
I'm always going to tell you to get out. Stochastics are still pointing up, though, so you got the stochastics on your side. This volume is out of control, though.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
How much are you down now, dude?
Good
Good morning from the Bloomberg Interactive Broker Studio here in New York City. We've got a lot coming up on the second hour of Bloomberg Intelligence. We're going to kick things off with Matt Miskin. He's the co-Chief Investment Strategist at John Hancock Investment Management. On these markets, we have the S&P 500, the Dow, and the NASDAQ all in the red right now after a disappointing jobs report. We're also going to take a look at munis with Eric Kazatsky over at Mackay Municipal Managers to take a look at the latest news from the muni market. We have yields lower across the curve, but especially at the short end. And later on, we're going to talk with Steve Mann of Bloomberg Intelligence to talk about the Tesla news. The board at Tesla has offered an unprecedented $1 trillion pay package to one Elon Musk. In the meantime, let's get things started with John Tucker with our Bloomberg Business Flash.
And this flash, Scarlett, brought to you by Oracle. Attention growing businesses. Oracle offering
Okay, good.
cloud bill in half if you move to Oracle Cloud Infrastructure. It's for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. So what happened? Major stock averages have shed their earlier gains. They are now lower. Well, a lot of this has to do with NVIDIA, most actively traded right now. Those shares down over 4%. Declines for NVIDIA and Advanced Micro Devices, offsetting the rally for Broadcom, which actually is the best performing stock of the S&P 500. Broadcom up close to 10%. But again, as I say, the major averages still lower despite that. S&P 500 48 points lower. That's down 0.75%. 64.53 on the index. The Dow Jones Industrial Average down 339 points. The Nasdaq 100 132 points lower. And this all comes after the weak jobs report. Non-farm payrolls increasing 22,000 for the month of August. The revision showed unemployment shrank in June for the first time since 2020. The jobless rate, that ticked up to 4.3%. Well, Stephanie Roth at Wolfe Research, she says the weak jobs market may be bottoming soon.
Looking ahead, we expect that you'll have one more piece of negative news. So September 9th,
Kind of liking the rollover here, honestly.
That's going to be revised down to the tune of something
Just too much volume, though.
So that's going to be another really bad negative headline. Then beyond that,
Another couple candles.
The signs will look a little bit better.
Bonds higher, the 2-year yield right now, close to 12 basis points lower. That is at 347. Oh, here's a Friday fun fact. What is one of the things that has escaped the tariffs? Yes.
One of the things that has escaped tariffs because he hasn't brought up or he's exempted it actively.
Well, it's been kind of exempted, so think drinking. Cork.
What, really?
Yes, which comes from the spongy bark of the cork oak tree, primarily grown and harvested in the Mediterranean basins. So the framework for the trade agreement between the U.S. and EU singles out the material as an unavailable natural product. So as of September 1st, cork joining a handful of other items that are exempt from the 15% tariff on most of the EU products.
Priorities.
I don't do the twist off wine caps.
I do, actually, and I think it works great.
I know they do, and everybody tells me it's the same, it's all good, but I'm just not going there. Just not going there. I mean, I've sent bottles back at restaurants.
It offends you.
It's just like, it's part of the whole process is doing the cork.
You like the romance of
yes,
cork.
I do.
But then there are synthetic bottle stoppers, which are not cork. You'll send those back as well?
No, they can fool me.
You like the sound of the cork popping.
Yeah, and I like doing the actual uncorking kind of thing. So
do you smell the cork? The sommelier gives you the cork.
I hung out with Sam.
You green yet, Hogwarts?
That's where I
Do you collect corks?
We used to, not anymore. We got past that, but we used to. John Tucker, thank you very much. That was fantastic discussion.
Friday fun facts.
Yeah, Friday fun facts. John Tucker, very good. So, Cigar to Food, Paul Sony live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube.
When you say NTG, what are you saying? What does that mean?
Stock movers. We do that with Isabel Lee. Isabel, what do you got?
I want to talk about MicroStrategy. I think this is the stock of the day. Shares are down by nearly 2%. The ticker is MSTR. So why are we talking
meeting.
about this?
Oh, yeah.
Rebalance
Yeah.
for the S&P 500.
I'm sorry, dude.
In a while, or ever actually.
All right, well, don't jump in after the next meeting, okay? Wait for your setup.
For inclusion in the S&P 500. So you may
Gotta
be
wait for your
wondering
setup.
why and what changed? So what changed is last quarter, they had a $14 billion unrealized gain, which delivered a profitability requirement
We'll get it back. We're only looking for shorts right now, so just remember that. We're only looking for a short. I'm looking for a short entry.
To be profitable for the past 4 quarters and the last quarter. So MicroStrategy hit that, and you may have your own opinions, but the fact is that they're
All right,
now
dude.
eligible.
I'll be here.
S&P, unlike other
I'll be here unless I'm in. I'm on a
a
call.
little bit more nuance and discretion.
Yeah.
But technically,
Yeah. Don't do anything, man.
So that would
Put the
mean
mouse
if it's
away.
included in the S&P 500, a ton
Don't
of
do anything while you're on
tax
tilt. You'll just start doing stuff, and you won't even know why. I'll see you in a little bit.
Nearly 50 million shares worth around $16 billion in prices. And that's the cold logic of investing. Vildana Hyrick, my teammate, now my TL, wrote a story about how Vanguard is actually one of the biggest holders of MicroStrategy just because they hold a lot of index funds. So that's good news or not so great, depending on where you stand in the Bitcoin spectrum. But that's something we'll find out at 5:15 today.
It's good news for Michael Saylor.
Yes, definitely.
Carmen, what's going on there?
Carmen shares are up almost 9%. So Carmen is, I looked it up, it's a holdings company, but they really, through its subsidiaries, they specialize in design, testing, manufacturing of mission-critical systems for emerging missiles and defense and space programs. So you can just bucket
Defense
it.
company.
Yes,
Got it.
in that defense company.
All right.
Sector. So
We're
now,
blowing through
they
the
have a
20
top five rating
EMAs.
and
Let's see what
strike high of
happens here.
$100
We're not
per which
overbought
that's
yet.
their price target. The analyst there said that the business could
We're
triple
still
by
at the upper end of
2030.
the
The company
volume
is the most
range.
profitable in the defense ecosystem with margins around double its most profitable peers. So that's really great news. And you see the stock pop by almost 9%. The ticker is KRMN.
All right, Lulu.
This is also exciting. Lululemon shares. Ticker is LULU, Lulu. It's down by almost 20%. That's after the company slashed their outlook. Again, disappointing investors for the third straight quarter. This is the lowest since 2020. And it's hard for them because they have to balance tariff expectations in a difficult consumer environment. And they're really impacted by the de minimis exemption. So this is when a U.S. policy that allows low-value shipments under $800 to enter the country. So they really benefited from this. You know, when you order overpriced $100 leggings, which I like, I'm guilty, but they're exempted from that. So now they may not be. So for the full year, Lululemon lowered revenue and EPS outlook.
All right. Isabel Lee with our movers. Thank you so much. And for more conversations like this, subscribe to our Stock Movers reports. You want to listen for 5-minute audio reports on the biggest winners and losers in the stock market? Then make sure to subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. You know, I look at the chip sector within the market, and you have the Philadelphia Semiconductor Index higher by 0.6%. The biggest gainer, Broadcom. One of the biggest decliners, NVIDIA. Down 3.8%, but that's like a $4 trillion company. So
yes, and that moves it.
That moves it. So let's bring in Mandeep Singh of Bloomberg Intelligence. Of course, he is our go-to person for all things in the tech space. Mandeep, the news here is that Broadcom is going to help OpenAI design and produce an AI accelerator and AI chip starting in 2026. And this is all to, I don't know, not take market share from NVIDIA, but at least compete a little bit better with NVIDIA, isn't it?
Yes, and now that they have a $10 billion backlog from this new customer, OpenAI, on the chip side, it's real money. So it's not
All right,
just
still
a
pushing
proof of
higher.
concept or anything like that.
Let's see if we head to the 50 EMA.
It's always been the risk with NVIDIA's growth is because of this concentration, whether it's from the hyperscale cloud players or the model providers like OpenAI, if they were to do things on their own chip, that will have a big impact on NVIDIA. And clearly, OpenAI feels that they can optimize the chip and the model to run better on their own chip. And that's probably why you're seeing such a strong reaction. But clearly, this is a 2026 event. So we'll still have to wait in terms of how that chip is going to stack up against what NVIDIA will have in 2026.
That's kind of where I wanted to go, Mandeep. I guess if I were an NVIDIA shareholder, I knew competition was coming. It just has to. But at the end of the day, I feel comfortable with the quality of my chips and my technology. Is that kind of the feeling here today?
And so, look,
I'm really liking the short
for
here.
a company like Google, which is also training their own model on their TPUs, they haven't been able to sell it to a non-Google model provider, right? So it's really optimizing for your stack, which is what Apple has done over the years, but clearly that's worked very well for them. So Google really was the first one to train their model on
I'm going to
their
get to
own
break
chips,
even.
and I think that's what OpenAI is going after is they feel they can do something similar to Google. In fact, the people that they've hired to design this chip are, people from Google. So they've poached a lot of people from there.
Ah, I
And
got ran
look,
over.
I think given the
All right,
scale
went
at
too
which
early.
OpenAI and Google are operating, the chip costs are pretty substantial. So if they are able to optimize the chip even for their own use, that's going to have a big impact on the gross margins, which is why you see a big stock move, on NVIDIA, because NVIDIA relies on these large hyperscalers to
Order
continue to
submitted.
buy chips from them.
Okay, so Nvidia
All right, I'm
dropped
gonna
down,
go
and
at the
shares
top
have
of this
actually
candle
deepened
if
their
I can get
losses, now
in.
lower by 4.1%. Advanced Micro Devices is off even more, Mandeep, losing 7%. Where does this leave AMD?
I mean, we know the revenue run rate
Order
for Broadcom
filled.
now. It's over $20 billion. In fact, they guided to acceleration. Anytime you see a company guide to accelerating revenue growth, that's great news in terms of multiple expansion. And so for a company like AMD, whose hope was this market is large enough that they will also get that lift in terms of growth rates, clearly Broadcom is growing ahead of them and substantially. I mean, they guided to $6 billion plus in next quarter. So, Broadcom has shown 10 consecutive quarters of quarter-over-quarter growth, and it's going to continue because that's been their guidance for 2026. So from that perspective, AMD gains seem somewhat muted when you contrast that with Broadcom's expected growth.
All right,
Stop
Mandeep, thanks so
filled.
much for joining us. Appreciate it as always. Mandeep Singh, Senior Tech Analyst for Bloomberg Intelligence, running that whole shop for BI, and we appreciate getting a few minutes of his time. Boy, this market's kind of rolled over here. I kind of thought, again, earlier, my thought would have been, Scarlett, all right, kind of a little bit weaker jobs market. Maybe Fed's going to cut rates maybe a little bit sooner than later, but
Perhaps that was all completely priced in, and
Yeah.
that's what we're seeing now. And it just sets us up for the inflation report for next week.
Absolutely. So you guys have fun with that next week. Let's talk about this market here. Matt Miskin joins us, Co-Chief Investment Strategist for John Hancock Investment Management.
All right.
Matt, what do you make of today's trading activity?
Well, the bond market is rallying, and we think that is the right move. We think bond yields are too high right now, actually, and they offer a lot of value. I'm actually surprised that even the 10-year is not down more, down 10 basis points here. But we've been relatively bullish on bonds. The data has been. This isn't the first report we got that showed the jobs market is weakening. This is like the fifth report out of all the different surveys, NFIB, consumer confidence telling you weakening jobs data. And the JOLTS report this week told you. So it's like I was surprised that the market had to be hit in the head so many times with this data to actually start reflecting it as of today. But risk assets are still really elevated. There's still this risk on kind of ripple effect that we think has got to be flushed out of the market. We like bonds at these levels.
You like bonds at these levels, but isn't the trade where everyone's plowing into the shorter debt, shorter maturities debt, like 2-year yields?
That's definitely a strong move up. I guess we're going all the way to the 50 now.
Well, it depends here on what the Fed does after September, but what we've seen is a steepening of the yield curve. So the 2-year yield has dropped like a rock. It broke support today. It may be of the lowest since 2021. But usually, if the 2-year yield is rolling over, that's it. That's the end of the cycle for higher rates. And that's going to hurt cash. It's going to hurt money markets. Cash rates
44 seconds to the next candle.
And the intermediate part of the curve has what's called roll down. And I almost think of like a Homer Simpson, like, roll down as a bond investor, because you love seeing that bond get appreciated value as it gets closer to the 2-year part of the curve. So we like the roll down. We like the yields. It's still an unloved part of the market. A lot of investors hated bonds coming into this because there's been so many other things that have gone up so rapidly. Some dependable income might be a nice thing for portfolios here.
Yeah, people actually want to talk to Matt Miskin.
10 seconds.
He's got like real returns, real coupon. U.S. corporate high yield, Matt, up the Bloomberg index is up about 6.5% here. Boy, high yield. The market feels comfortable with the credit risk, it seems like.
Yeah, spreads are still super tight. So the high yield bond overall yield to worst is just under 7%. It might look okay relative to equities because it does absorb volatility a little bit better. But in our view, we're neutral here. We think that the spreads are super tight. We like income in general. We like looking for opportunities for income, cross credit. But we think there's better opportunity in investment grade municipal bonds, tax-free muni bonds. I mean, this is something, talk about your cocktail party and what you really want to lead with right now. Hey, you ever thought of having tax-free income here in the tax equivalent yields? So muni bonds have actually sold off over the course of the year. So the yields have gone up while everything else has gone down. So you're getting tax equivalent yields that are like 6-7%. That sounds really good to me.
We're going to talk about munis a little bit later on with Eric Kazatsky, but I want to stick with the high yield credit market for a moment. You talked about spreads being super tight. Are there any signs of stress anywhere in the credit market?
Not right now, Scarlett. That's a good point.
Isn't that
and
worrying?
that's actually, it's one of the more bullish things you got going for you right now. But easy financial conditions isn't necessarily always going to be a good development, because really it's just pricing in very little risk. It's complacency in our view. The returns usually off these type of spreads are negative or at least flat. I mean, the tightest ever in high yield spreads was 2007. And that was 230 basis points. Last week, we got to 260 basis points. So 2007 is not a great year to kind of think about, hey, when spreads are super tight. It doesn't necessarily mean that 08's around the corner, but to us, I'd rather move up in quality, make sure it's dependable income for investors. And in our view, you can wait out some of this volatility, look for some better entry points in riskier parts of markets.
All right, Matt, thanks so much for joining us. Appreciate it. Matt Miskin, Co-Chief Investment Strategist at John Hancock Investment Management. Red headline, just crossing the Bloomberg terminal. The European Union finds Google.
Yeah, I went too early on the stochastics. Stochastics are strong.
Dominance. Guess what? Stock's up. All-time high today.
Go figure.
Go figure. I mean, I've been, for people that have some memories, I mean, we've seen this story before with Microsoft 25, 30 years ago. The European Union came after their business in software, and you just write the checks and they go away.
Right. Well, and they have plenty of money to do so, and everyone's probably still celebrating the judge's penalty, or perhaps lack of penalty, when it came to that antitrust ruling.
Yeah, absolutely. So, the U.S. has historically taken a light touch to technology, and the benefits, I think, are pretty self-explanatory. So we'll have to see. Coming up, munis in focus. How about this? We bring back Eric Kazatsky. He's now Managing Director over there, Chief Portfolio Manager at Mackay Municipal Managers. We'll chat with him about the municipal bond market. I'm all in, folks. Triple leverage. There you go. I'm all in for it. There's a triple tax-free.
Order submitted. Order filled. Upfilled.
Shouldn't even be trading in the zone.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. After the record closed yesterday,
Order
an
submitted.
earlier advance this morning, S&P 500 and the Dow lower right now. Only 4 of the 11 major industry groups in the S&P 500 are higher. Actually, the best performing industry group right now, that belongs to real estate, and that's an interest rate play. Rates are lower. Traders increasing bets the Fed's going to cut at the next meeting after the jobs report. Broadcom shares, they are jumping right now, up close to 10%. Best performing stock in the S&P 500. They're going to be helping OpenAI design and produce an artificial intelligence accelerator from 2026. And that's weighing on the shares right now of the NVIDIA. Those are down 3.5%, and that's weighing on the overall market as well. And then you have, just to recap, Google shares. Google shares are actually higher, not a lot of impact after we got a $3.5 billion fine from the EU for abusing, they say it's advertising business. Worst performing stock in the S&P 500. Again, Lululemon sinking about 16%. The retailer cutting its earnings guidance for the full year as the end of the de minimis exemption is set to hurt its business. And we check the market's view all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM Insured Municipal Bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Let's check in with one Eric Kazatsky, Managing Director and Client Portfolio Manager at Mackay Municipal Managers. Somehow he continues to scam the work from Princeton. I don't know how he does it, but he's a smart guy. Eric, hope it's all's going well at the new shop here.
Yeah.
What's going on in the world of municipal bonds so far this year?
Hey, how are you? Look, 2025 definitively has been a year of unmet expectations. I've been here since June, Paul, and I think the word I've heard from clients the most has really just been fatigue with the muni market. And it really comes down to where you are on the curve. If you're positioned intermediate and shorter, you're having a great year. If you're intermediate and long, you're having a not so great year. I think the positive here is that long bonds are finally starting to turn the corner on returns, though.
So what is their appetite, your client's appetite for taking on more supply?
I mean, more supply for us means more opportunity. And if you look at issuance in 22 and 23, it was really low. And I think if those issuers had the chance to go back in time and issue at those rates, they would jump all over it. But the fact of the matter is things are more expensive and things need to get financed. So you're seeing so much supply come into the market. It's been pretty orderly. I think really what's been weighing on the long end of the curve has just been lack of institutional buying from banks and insurance companies, mutual funds a little bit. But we're actually seeing that start to turn now that the tax bill uncertainty is out of the way.
Where are those banks and those insurance companies going instead then? If they used to buy the long end, where are they getting it now?
I mean, they were buying corporates, they were buying agencies, they were buying structured product. Things that are a little bit easier from a credit standpoint to sort of wave in wholesale, get a little bit more size. But from a relative value standpoint, munis are where it's at. I mean, you just had the guy from John Hancock on talking about these tax equivalent yields. I mean, he's spot on 100%.
So, talk to us about ETFs and how ETFs have impacted the municipal bond market.
Yeah, I mean, we love ETFs, especially active ETFs. And I think the exciting thing is if you look at new product creation in the exchange traded space, you're seeing this pendulum swing back to active. Obviously the leaders in the space from an AUM standpoint for munis are these passive vehicles, MUB, VTEB, and they're asset aggregators. Everybody loves cheap data, but I think it's really promising to see that new product creation swinging towards active because it means that there's
Order
desire for total
submitted.
return again. And that's really exciting.
Order
And we've
filled.
seen some ETFs where they package up munis from certain states or have a theme like that. Does that make sense for an
Order
investor?
canceled.
Sure. I mean, it depends where you're residing. Obviously, if your principal residence is in a high tax state like California or New York, you want to be in a vehicle that, tries to get you the maximum in-state tax equivalent break, right? Obviously, from a thematic standpoint, munis are the ultimate theme product, right? They're service societal good. They're building infrastructure all over the place. So, we're a little different than some of the theme stuff you see on the
All right,
corporate
I'm
or
on
equity
tilt
side.
now.
Talk to us about new issuance. I know last year was a record year. How about this year?
Oh, we could surpass that. We're definitely on a run rate to get past that. Look, I think it just might be we're in a period of new normalcy when it comes to how much bonds are actually coming to the market. And like I said, if you told me 5 years ago, Paul, that we'd have successive years of $550 billion issuance, I would have said the market would just puke all over itself. That is exactly what's not happening. The bankers are really happy. Clients are really happy. The issuers are really happy. Things are orderly. Like I said, the only thing we've really seen some weakness has really been some pricing concessions on the long end of the curve, but we're seeing that retrace now.
Eric, what kind of demand is there for
Next
muni
candle,
bonds
3,
issued by
2,
higher education
1.
institutions? We were talking with Janet Lauren earlier about these schools and how they have to make peace with the Trump administration, and oftentimes that includes paying a big fine, and they are now strapped for cash and need to find ways to generate cash. And a lot of times that means going into the debt market.
Yeah, I mean, look, and the muni market is sitting here with arms wide open, ready to welcome them. I think that's the positive part, right? We are able and willing to finance any sort of project, from the unrated to the AAA rated. I think for the higher education space, though, I think that they largely survived the Tax Cuts and Jobs Act revisions largely unscathed. Yeah, endowment taxes went up a little bit, but it only impacted the very, very highly funded. And I think the takeaway here is that, we're not seeing this wholesale shift away from investors, wanting to look at the higher education space. So I think that's really promising and, shows some stability there from a credit standpoint going forward. Obviously, if you're not well funded and enrollment has been ticking down year after year after year, you have some hard choices coming up, but that's not every credit.
All right, Eric, thanks so much for joining us. Always appreciate getting your time, no matter
Order
where you're
filled.
sitting these days. Eric Kazatsky, Managing Director.
Order
Portfolio
filled.
Manager at Mackay Shields. He's still in Princeton. He's somehow
Target.
working that scam. I don't know how he's doing it. Exactly. He's not blasting him out of that seat. Let's go to Lululemon here. John Tucker's been reporting all day. This thing is not good. Some tough news coming out of there. But let's go to context. We can do that with Poonam Goyal. She's a senior U.S. Retail analyst for Bloomberg Intelligence. Poonam, Lululemon. I love my Lululemon, but what happened?
What happened is that you like your performance, but do you like your casual wear? It's the casual wear part of the segment that's underperforming and causing for guidance to be cut on the sales side, and then tariffs and de minimis causing the margin hit that we're seeing. So it's a sales and a margin story here. They're both underperforming.
So what's the prescription for that? And is the company coming up with a strategy that is appeasing investors in any way?
Yeah, so the biggest issue on the sales side is the fact that they're not performing well on the casual part of the business. They don't have enough newness. Currently, newness in their pipeline stands at 23%, and they want to move it to 35% by next year. So we hope to see more newness, but it won't be until spring of 2026, which means the back half of the year is going to be very sluggish.
That's a long time to wait for investors who have been sitting on this stock and have looked at a 48% drop before today's trading. if investors, let me rephrase this. If consumers are swapping out of Lululemon, going to Alo and Vuori, what are investors swapping out Lululemon for?
Well, I mean, look, I'd say the performance side of their business is doing well. So when you say swapping out from the Align leggings perhaps to the Alos, that might be just broadening the assortment. The real issue is on the wide leg pants, on the casual assortment. That is not trending well. That is what needs to do better. Competition has always been there. It's growing for sure, but it's always been there. Lulu knows how to compete when they have the right product. The issue is they don't have enough new product. It's not coming fast enough, and it won't come overnight. They hired a new AI head to drive innovation. That should help because AI is helping improve design timelines and so much more that we do think they can speed it up. But once again, nothing's happening this year. They'll have a little bit of more new, but it's not enough. Sales in the US are expected to decline. And that's, we haven't seen a decline at Lululemon. I can't remember when.
So, I mean, Lululemon's down, the stock is down 55% this year. Puma's down 55%, Adidas 25%, Under Armour 37%. Are these performances and stock declines, are they primarily driven by concerns about tariffs?
Tariffs is definitely one concern, but I think that's not limited to just the athletic wear. It's for all apparel retailing. The other
Still
is
liking the
just a shift
short,
in
but I don't know
wardrobe,
the
right? If you
entry.
think a few years back during COVID, where did the wardrobe shift? A big part of your wardrobe was comfortable, uh, performance wear, right? We all had the leggings. We were wearing them at home while we were working. We were wearing them out. Today, we're moving into a more structured wardrobe environment, which means that the closets are more balanced like they once used to be. And that's part of the reason why you're seeing underperformance also at the athletic wear companies.
So in the meantime, as Lululemon tries to get its product, its newness, its assortment back on track, it's making up for the weak sales in the U.S. with a lot of international sales. China is a big strong point. Global growth is still there. How much more can it ramp up that side of the business?
There's plenty of opportunity internationally. International is only 25% of Lululemon's total business. China's growing at over 20%, with the rest of international at around 20%. So a lot of runway there across both performance and casual wear. We think that's a bright spot that will remain a bright spot for the foreseeable future.
Poonam, it's early September here, but it's certainly never too early to talk about holiday shopping. What's the expectation in your industry about how holiday shopping will be this year?
I think holiday will be okay as long as there are deals. The consumer is clearly focused on deals, and we think given the current tariff situation, a lot of the inventory was up fronted. So retailers
You got to
have
start
most
thinking about the
holiday
long
now
here
in
too.
stock.
We got the
It's a
EMA
warehouse
to go
that's
along.
also, starting to come into stores.
I missed
We
on
think
my
the consumer
short,
will come for deals. They'll be choosy. They have been choosy all year.
but
So you're looking at the Walmarts,
I'm
the
gonna wait to
Amazons
see
of
if
the
the
world that will
50
probably
still
continue
shows
to take
resistance
wallet
for the
share.
rollover,
Who's the strongest company in your space right now, Poonam?
and maybe
I
front
think
run the
Amazon
short.
is still one of the strongest retailers out there. They can compete with their large pocketbooks. They have the consumer mind share, and they're essentially focused on delivering value to their customer along with speed and convenience.
And Walmart still doing well across the board?
Yeah, Walmart's still doing well. Both of them are thriving side by side. Walmart's a larger grocery business. Over 50% of their sales do come from grocery, so they do benefit from that. But they are increasing their marketplace. It's over $100 billion now, their e-commerce business.
All right, Poonam, thanks so much for joining us. Poonam Goyal, Senior U.S. E-commerce and Retail Analyst for Bloomberg Intelligence, based down there in Princeton, getting the latest on Lululemon. Weak demand hit from, tariffs getting on both sides.
No one wants to wear leggings. Everyone's wearing wide-legged pants.
Really?
Well, among a certain female set, that's absolutely
Okay.
the trend.
All right.
And if you have
Order
a bunch of leggings,
submitted.
you probably have all you need.
Right.
You don't need to replace those all the time.
All right, that's the point.
I'm gonna front run the short right here.
Like Alex Steele
Hey,
would not get
Hogwarts.
them unless they were like a triple on sale, which they never are.
They never are. That's the problem.
So there you go. All right, coming up, we're going to talk
Yeah,
to
it's all
Steve
right.
Mann, get his thoughts on Elon Musk, $1 trillion pay package. I don't know. Why not?
Yes, in 2025.
Yeah, exactly. Good for him if he can get that going.
Yeah,
Certainly key man.
I don't blame you.
Sure. That's coming up.
I'm looking to front run the short right here. We'll see what happens if I get picked up. I don't know. I'm not sure. Yeah, I'm looking at it too. EMA crosses are pretty heavy though. Stochastics are still pointing down. I like the short. Just gonna have a little more time here. All right, if I get in at the top of the cloud here, I'm going to go short.
Order filled.
All right, I'm in.
Order filled. Order filled.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. We're being brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio. Small firm attentiveness, big advisor impact. Go to Commonwealth.com to learn about their consultative support and technology. The sharp cooling in the job market, that's triggered fears
Open
about
the cloud here, holds it. There we go.
a
Come on.
general slowdown in
Push
the
it back
overall
down.
broader economy. So this is sparking a flight to treasuries. That is pushing yields lower. The 2-year, 12 basis points lower 346 right now. The 10 down just about 10 basis points, 4.06%. Most active stock down over 3%.
Target filled.
That's in big part because Broadcom partnering with OpenAI to create a rival chip.
All right, we're going to let this one breathe, guys.
Performing stock in the S&P 500, but it doesn't make it NVIDIA. Broadcom up close to 10% right now. So back to the employment report. Employers added only 22,000 jobs.
We're going to let this one breathe.
And the unemployment rate, that rose to 4.3%. Jennifer Lee at BMO Capital Markets says despite the jobs report, that they can't ignore the other side of their dual mandate.
We still have to be very careful with inflation, and although we only had 1 month, that July month of a worrying CPI, again, it was interesting, those ISM surveys
yesterday,
like a number of them were saying that they're starting to see consistently more price increases.
Right now, the S&P 500, 25 points lower, down 0.4%, 64.
All right, now we're running.
The Dow, after yesterday's record, down 230 points. NASDAQ
now we are running. We're in the green at 500 now.
OPEC Plus leader Saudi Arabia wants the group to consider reviving more oil production. Some of the key alignment members, they're going to hold a video conference on Sunday. As a result, we have NYMEX crude, American crude, down 2.7%, and the worst performing industry group that belongs to energy right now.
Yeah, well, you know, a company that's tied to energy, Tesla. It is gaining today, 3.1%, kind of keeping the Mag 7 from falling more.
Because Elon Musk is going to get $1 trillion pay package?
Yeah, you went straight to the point, John Tucker. Elon Musk offered a new compensation agreement, potentially worth around $1 trillion. Remember, this is a company whose market cap right now is only 1.16 trillion. I say only because you're comparing his potential pay with the market cap. That's kind of crazy.
It is crazy. It is. It's a number just kind of grabs you a little bit.
It's eye-popping. So let's bring in Steve Mann. He's Bloomberg Intelligence Global Autos and Industrials Research Manager to discuss all of this. What is the justification that Tesla's board is offering that Elon Musk would be worth potentially $1 trillion in pay?
Yeah, $1 trillion
all right.
is a lot. But I think
we're going to roll hard on
they're
this.
Looking for by 2035 is really juice up that market cap to 8.5 trillion. And if you look at the operational targets that's tied to it, it definitely confirms that this company is moving towards AI, robotics, robotaxi.
So what are some of the hurdles that are out there for Mr. Musk to maybe eventually get this pay package?
It's not going to be easy for him, and it's probably designed to be that way so that it make sure the shareholders vote.
So we need to clear this gap here.
Don't make it too easy for him. So the easy lift is really.
Or we need to clear this line of resistance right here.
That's going to be a no-brainer, easy to get to, given that it ships.
Yeah, well, if the 20 EMA holds up, I'm going to move down to the 20 EMA right now.
Part is really a 50% take rate on FSD, the full self-driving, and 1 million shipments on robots.
I don't want to let it run too long.
So those are really, really tough to get.
But I do. I think the short is going to be off the 20 EMA. This is a full-on short now.
Between getting there between now and 2035.
Okay, so he has a bit of time, and he's someone who will start a narrative and stay on it. You mentioned FSD, full self-driving. Where are we in that effort for Tesla?
Yeah, it's still below 10%. It's probably around 5, 6, maybe 7% at the most. There is
23.
Still some technological, hurdles that they have to
there we go.
Overcome. And a lot of it is really getting consumers to be comfortable with it. So take rate of 10 million subscribers with 20 million vehicles shipped. It looks like a stretch.
I'm going to stay right where I am. If it runs down, it runs down. If not, I'm okay.
Much higher than vehicle production. Potential margins for robotaxi, it's much greater than selling cars. So to get to the 400 billion, he really needs to really focus on the AI capability of the company.
Hey, Steve, since Elon Musk has left Doge, do we have any idea how much time he is actually spending at Tesla?
Ooh, good question.
Yeah, my impression is he's probably spending close to 100% of his time. Not only based on this news where he's actually laying out a plan for Tesla, but look, he also had a very successful launch at SpaceX recently. So the impression is that he's full on in managing his companies.
And I like that question,
There we
Paul,
go.
because we know
There
that
we
Elon
go.
Musk has previously
I'm going to move down to my line of resistance at 08.
pay package for him. He kind of suggested that maybe he could move on and do AI somewhere
09.
else and do robotics somewhere else.
Yeah, I think from my perspective, I don't think he's going to go anywhere. This is still his baby.
So it's just empty threats.
I don't want to say empty threats.
Next candle in
There's always a
108. I'm hoping
possibility.
this
I
next
find
candle
it
sends us
very low.
underneath this zone.
Because this is his
Then I'll
baby,
add into
and
the
he's
next
very,
one.
very passionate about AI, about energy sustainability, about sending people to Mars, and I think all of this is part of that.
There we
plan.
go. Come on.
So let's get back to some nuts and bolts here. They got to compete against China, and they're not. That's tough. Number one.
There we go.
Some
Come
really
on.
disappointing delivery numbers, sales numbers out of Europe here. So just the day-to-day near term seems pretty challenging.
Yeah, and also don't forget the $7,500 EV tax credit in the U.S. actually is going away at the end of September. It is going to be pretty challenging for the industry, 6 to 9 months between now and 9 months from now. It is going to be very challenging. I think one bright spot, if you heard BYD, one of the dominant Chinese automaker, is actually ratchet back their forecast, sales forecast. That actually tells us that.
All right, here we go. This is the down one.
Cutthroat pricing
Order
competition
filled.
in China may be slowing down, and that would be positive for Tesla and the rest of the industry.
Yes, if Tesla launches that low-cost EV, which there's been a lot of talk about,
All right.
but we haven't actually
We're
seen
gonna
any
tighten up
action
now.
on. Is there a status update on that, or is this something just that just keeps getting pushed out time and again?
Yeah, I think it's going to come up pretty soon. In the last earnings call, they
Stop,
pretty
Phil.
much projected that that the car is actually ready,
Damn it.
but they have to hold off production because they want to produce as many Model Ys and Model 3 before the end of this 7,500 EV tax credit goes away, because they expect to sell a lot more in the next quarter or so. So I believe the car is ready, and it probably likely will have to. I would hope it will actually come to market in the new year, because there's going to be, Rivian's also launching a cheaper model by then. GM with the Chevy Bolt is supposed to come online in the next 6 months. So they do need to launch that sooner rather than later.
All right, Steve, thanks so much. We appreciate that. Steve Mann, Global Autos and Industrials Research Analyst for Bloomberg Intelligence. Looking at Tesla, stock's up about 3% today. It is down 13% this year to date, but on a trailing 12-month basis, it's up over 50%. So that's kind of the volatility we've become used to with Tesla.
Have you been to California recently?
Yes.
When you go there, I see like 1 out of every
Yes.
3 cars is a Tesla on the road, right?
Yeah. So it's a completely different market from the rest of the U.S.
Totally.
for EVs.
I have
They're
family who
totally
came
bought
over
in.
to the New York, and they were like, "Where are the Teslas?"
Yes, exactly, and other EVs as well. But to me, the long-term challenge for Tesla in the car business is just China. Because the cars coming out of China are
Order
such
filled.
quality now.
As if we can't get it here.
Right, exactly, and at a lower price. So ex the U.S., that's a big challenge for them. All right, we're gonna have more coming up. We've got some red on the screen here. The S&P is down 27 points. This is Bloomberg.
Give me like 2 minutes.
Stop filled.
Okay, I'm out at $500 up. All right, I got to work a lead. I'll be right back, guys. Now this is probably going to rip right down to my target. Yep. I don't know yet. All right, I'll be back.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well, so check us out there. We're joined in studio here by Molly Smith, U.S. economy editor for Bloomberg News, but it's, kind of early September. That means we're talking U.S. Open out there in Queens. I went out there earlier in the tournament. I'm sure you've been out there multiple times, Molly.
Maybe every day, plus or minus, for the past week.
Okay, very good. So I think it's been a phenomenal tournament there. The weather's been great, absolutely packed. And some people say it's too packed, but I don't know. Everybody's out wandering about. It's a great vibe, I think. What's been your takeaway so far for this tournament?
So I had a story out about this last week that's been making the rounds online. In case you've seen the headline, it's called "The U.S. Open has become about everything but the tennis."
Right.
And I think this is really resonating with a lot of people. And it's not just hardcore tennis fans like myself who would be very happy to watch 10 hours of uninterrupted tennis every day. I understand that they need to appeal to a broader demographic and that people need more entertainment and other things to do off the court besides just watching the tennis. So I totally get that. I think it's great that so many more people want to watch and support the game, but it really has just become such a spectacle, and the crowds and the prices are really just driving out so many people who would love to really enjoy what this event should be all about.
So the prices I find extraordinary, and the only way I can kind of justify it is it's once a year. But I mean, the prices are just brutal for these tickets.
The tickets are really, it's, I think, this was really illustrating for me. I was co-hosting our Business Week radio show at the Open last week, and we interviewed the chief commercial officer of the USTA, and she was telling us something that I didn't realize, that this is also really, it's an issue of what state you're in, as to like New York, in this case, has really no regulation over the resale market. And that's where this gets really out of control. That the USTA says their face value ticket prices have averaged, under $200 this year. The reality is no one's able to buy the tickets at that price.
Hey, Lord Titty, got myself into a trouble in a short for a little bit on my first zone, but then my second zone at the 50, I got it back and I'm up $495.
Who's in the final and what should we look for?
Yeah, so we just found out yesterday with the conclusion of the women's semis.
I was probably a little too aggressive.
To see Sabalenka come from
Yeah,
behind and beat
I battled
Pegula,
back.
so she's now
I
back
didn't
in the
revenge
final trying to
trade. I
defend
was maybe on
her
the.
title
It
in the
might have been
championship
looking a
match
little
that'll be tomorrow
revengey, but
afternoon. And
I
Amanda
think I
Anisimova,
controlled it
our
and
Jersey
waited for my
girl,
next zone after
after
I missed
making her
twice.
run to the Wimbledon
I
final,
missed
she's won the
twice in
U.S.
my
Open
first
final as
zone, then
well.
waited for the
So
second
great to
zone,
see.
and
She
then
had an
took 2
amazing win
trades and
over
got
Osaka
myself
last
out.
night. I was up for most of it. I think they
So the
finished
trade
close to 1
idea
in the
worked. I
morning
was
and
just
had to be here
the trade
early for
was
the Challenge
valid at the
Report, so I
50
had
and
to
not
go
the
to bed.
20.
But
You know what I mean?
She's beaten some big players.
Yeah, I mean the biggest one really was
Everybody's
the
finally rolling in out of bed.
Swiatek, who had double bageled her in the Wimbledon
It's
final.
noon, guys. Where you been?
To come back so quickly, beat that same player in a matter of weeks as decisively
Yeah, the
as
stock.
she did.
Yeah, you got to
and
have the
make it,
stock.
another run to a
You got to have the
final.
stock
Just
because if you're wrong, you're wrong. You got to re-enter.
happy
You know
for
what
her.
I'm saying?
This
How it
game was
works.
in just awesome shape. I mean, it was extraordinarily deep. It was fun to see Venus Williams come back a little bit with some doubles there. All right, how about the men? We've got the semis today and tonight, right?
Yeah, that's right. We've got Djokovic and Alcaraz in the first one.
Damn,
So
dude.
they're
So you
playing
caught the
Aruba
short
3
early, didn't
p.m.,
you?
So hopefully it doesn't
There was a
sound
beautiful
too
front
hot
run on
today.
the
It
short
is gonna
right
be
about
the
10
hottest
o'clock.
day, I think, of the
I
tournament
marked
so far.
it.
It's up above 80
But
degrees
it was
here
just
in the New York
not.
City
It was
area.
not conditions I like trading in.
Mid-70s, so it's
Yeah,
hopefully
Hogwarts
that'll
got
be all
caught
right.
for a little
Obviously,
bit, but he's all
Novak,
right.
38 years young.
Right here.
Did you have a chance against? Because
Is this where you entered? Right in this zone up here somewhere?
And then a fairly big drop to everybody else. It seems like.
I mean, this is the thing, because I would say Djokovic is
Perfect,
really the best of
yeah.
everyone else right now.
Yep.
The rankings don't
Yeah,
necessarily
it was just
reflect
too
that, but
volatile
he is
for
the
me
one
to
who
be in
has
up there.
really the best chance beside anyone else in the field right now. So we'll see. I mean, he does have a good head-to-head against Alcaraz. Has beaten him in, I believe, their last.
Yeah, the
couple
hardest part
meetings,
is
so
being in,
that'll
but
be really
when you
interesting
work,
to see. And
from
then on
home,
the other
sometimes
one,
you just
we've got
can't do
Jannik
it.
Sinner, who's just so dominant. It's really hard to pick against him these days. Against Felix Auger-Aliassime of Canada.
See, now only you would know that person.
No, I mean, Felix, look, he's a former top 20, maybe even former top 10 player, and it just kind of had some injuries and was really fell off the rankings for a bit there. So it's great to see him playing some good tennis again. And he's got a big game. I mean, certainly a game that can disrupt Sinner. Just a matter of can you maintain that level for 3 out of 5 sets.
Sinner was one of the guys I saw live last week, and my first time ever seeing him live. He is unbelievable. I mean, boy, he can do it all, it seems like.
I think, where the TV really doesn't do it justice compared to watching live, just the sound of the ball coming off a racket like Sinner's, and just it's explosive. I mean, of how hard he's hitting the ball.
So we'll have presumably another Sinner Alcaraz. I mean, that's kind of where the men's game is. These two guys are head and
Oh
shoulders.
yeah, who hit that?
They're pretty evenly matched, it seems like.
Yeah, I mean, the last, I think, 18 months now, it's been basically them, winning all those last Grand Slams in the last year and a half. So it's they really are the men's game, the current and the future men's game. So
so young.
Yeah, it's going to be great to see. So that one's Sunday at 2 p.m. Eastern.
Okay, going up against the NFL, but we'll do okay.
Oh, no competition.
Exactly.
I think that one's on ABC.
Okay, Molly Smith, thank you so much for that. Appreciate it. Molly Smith, U.S. economy editor for Bloomberg News, and an avid tennis fan. So we always like chatting with Molly when getting around some of these big tournaments. Looking at the markets here. Got a little bit of a weakness still on the screen. The NASDAQ down 59 points. That's 0.25%. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global business headlines are coming up right now.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. A government memo obtained by CBS News says Homeland Security has asked the Pentagon to make space for around 250 federal agents at a military base in Illinois ahead of an expected immigration roundup in Chicago. CBS News Chicago reporter Darius Johnson.
Yeah, there's a double top right here, or it's starting to. It's almost double topping.
Chanting can be heard outside inside the facility that the mayor of Broadview, Illinois, says will become the primary hub for federal immigration operations, running 7 days a week for at least 45 days. Activists call the conditions inside inhumane, pointing to reports of
We're on the
people being held
50.
here for days without beds, blankets.
See, we're in my zone again to reject the
And
50.
numbers are in from an immigration sweep yesterday at a Hyundai plant in Georgia. 475 people detained.
The immigrants were helping to build the new electric vehicle battery plant at Hyundai's huge complex near Savannah. Steve Schrenk, special agent in charge for the Department of Homeland Security in Georgia, says some of the workers' visas had expired. Others had crossed the border illegally.
Those who exploit our workforce, undermine our economy, and violate federal laws will be held accountable.
Many of those arrested were Korean nationals. South Korea's foreign ministry is urging the U.S. to treat them fairly. Michael Wallace, CBS News.
The CBS News has learned the Trump administration's expected to issue an executive order as soon as today, establishing a designation for state sponsors of wrongful detention. It would allow the U.S. to punish countries that illegally detain Americans or take them hostage. The U.S. has ordered deployment of 10 fighter jets to Puerto Rico to conduct operations against drug cartels. CBS's Charlie D'Agata says Venezuela has been in the crosshairs.
The questions that are being raised now and will probably be raised in Congress is where do we stand in terms of this conflict? Is it an anti-drug or anti-narco terrorist operation? Is it a sort of undeclared declaration of war against Venezuela? Is there an idea of regime change?
The government says employers added 22,000 jobs last month, a drop-off from July's 79,000. Unemployment rate rising to 4.3%, highest level since 2021. KPMG economist Diane Swan.
This is a labor market where those who are looking for a job are having a hard time finding one, especially if they've lost a job. And that's leaving more workers on the sidelines, even though the participation rate picked up, which was the one silver lining.
European Commission has fined Google nearly $3.5 billion over abusive online advertising practices. This is CBS News.
Yeah, I like the short too, but I'm gonna wait just a little bit. I like front running the short right here, to be honest with you. I'm gonna wait though. I got a call in a few minutes.
The First Lady has issued a warning about artificial intelligence.
The robots are here. Our future is no longer science fiction.
Melania Trump called it a moment of wonder and offered advice at a White House task force meeting on AI education.
During this primitive stage, it is our duty to treat AI as we would our own children, empowering but with watchful guidance.
At the table, Education Secretary Linda McMahon and Google CEO Sundar Pichai, who later joined other tech executives for a White House dinner. Deborah Rodriguez, CBS News.
The news is not good about WNBA star Caitlin Clark. In a season where she's just played 13 games, the Indiana Fever now revealing she will miss the rest of the season because of a groin injury. She says she has spent hours trying to rehab it. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Unemployment reaches the highest in 4 years. Welcome to the Friday edition, as monthly jobs data bring new worries about the job market and new hopes for interest rate cuts. Yeah, we can do both. As the White House downplays the numbers, we'll be joined by Bloomberg's Washington correspondent Tyler Kendall and Michael McKee, who's still with us here in the Capitol. President Trump says we have lost Russia and India to deepest, darkest China. His words that we'll discuss with Bloomberg's Nick Wadhams. And as the White House prepares to rename the Department of Defense the Department of War, tensions are rising in the Caribbean now after the U.S. chose to blow up a boat said to be smuggling drugs. We're going to get into all of this with our political panel. Rick Davis and Jeannie Shanzano are with us. And so is Charlie Pellet. We start, as always, on Wall Street, live from World Headquarters in New York. A happy Friday to the voice of Wall Street. Charlie, what do you have?
Hi, thank you very much. Jobs Friday indeed, and we love that here at Bloomberg. It's what we live for. We've got the Dow, the S&P, NASDAQ, though, all in the red right now. Strong evidence that the labor market is slowing, rippling through markets on this Friday, driving stocks lower, bonds higher, on concern the Fed will now have to rush to prevent further weakness. Today's report sealing a rate cut from the Feds at their next meeting. The S&P right now down 14 to 64.68. Rich reading further from a record, down 0.5%. We've got the Dow down 250 right now. That is a drop of 0.5%. NASDAQ down 72, a decline there of 0.3%. Interestingly, though, on a down day for the rest of the market, the Russell 2000 index up by 0.2%. The 10-year 4.06%. With the 2-year, 3.47%. Gold up $1.50 right now, $51 right now, up 1.5%. Spot gold trading at $35.97 the ounce, while West Texas Intermediate crude down 3%, $61.53 for a barrel of WTI. Job growth cooled notably last month, with non-farm payrolls increasing 22,000 in August. Julia Coronado is a former Fed economist and the president of Macro Policy Perspectives. And on Bloomberg Open Interest, she told us she does see policy hitting jobs data.
I think the bigger picture is, we've put a lot of disruptive policies into place and offset it with a small-ish tax cut. Meanwhile, the tax hike of tariffs continues to, take money out of the economy month after month. And we're starting to see it filter into the macro data, and we're probably just at the beginning stages of this.
Julia Coronado of Macro Policy Perspectives. That massive pay package for Elon Musk, Tesla proposing a new compensation agreement for Musk, potentially worth around $1 trillion. Tesla shares, they're up 2.2%. Elsewhere in the EV sector, Rivian Automotive cutting a small portion of its workforce. Rivian shares up by 4%. Again, recapping, the Dow, the S&P, NASDAQ, all in the red. S&P down 35 right now. That is a drop of 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, great to have you back, and we'll have more from Charlie Pellet coming up in about 20 minutes. The voice of Wall Street and the New York subway. There's just an extra bounce in Charlie's step on a jobs day, isn't there? If you were watching us on YouTube, you would have seen that. Search Bloomberg Business News Live to find us on YouTube if you want to watch the radio on TV. It's great to have you with us here on the Friday edition on Bloomberg Radio, on satellite radio channel 121 as well. Yeah, it's jobs day, and we've got a lot to talk about. The White House is certainly talking, not in the same way that Charlie Pellet just was. 22,000, that's it. Highest unemployment rate in 4 years, as we've been mentioning, 4.3%. The president knew that the numbers were coming. He was asked about it last evening as he dined with the titans of tech, sitting next to the First Lady, Mark Zuckerberg, Bill Gates, and so forth. Here's what Donald Trump said in advance of the numbers. He didn't seem too worried.
We have a jobs report coming out, the first since the BLS commissioner who you fired won't be there. Can you commit to saying the data will be credible?
The number, I don't know, but the real numbers that I'm talking about are going to be whatever it is, but will be in a year from now. I think you'll see job numbers that are going to be absolutely incredible. You're going to see job numbers like our country has never seen before.
So a year from now, we thought that this was the golden age that was starting now, right? For jobs, the hundreds of billions, the $1 trillion we hear about high tech investing in this country, all the data centers being built. It's not showing up in this report. Information, financial activities, manufacturing, federal government, business services, all showing outright declines in the month of August. We've got Bloomberg's Tyler Kendall with us, who just came back over from the White House as well. Bloomberg's Michael McKee still in town, and he's going to bring us a very important conversation a bit later on with Austin Goolsbee. They're both with me here in Washington. Tyler, let's start with you because the messaging is fascinating to me. A month ago, the head of the BLS got fired for the results in a report. This one comes in weaker than expected, and we're hearing the White House point to the composite of data, not 1 month makes a trend. How are they framing this?
Right, exactly. Although we should point out that the NEC director, Kevin Hassett, in an interview earlier today did call the numbers, of course, disappointing. But it appears that the White House is trying to push forward that other policies are going to come to fruition soon. We heard the director speak, for example, that there's going to be this supply-side driven growth going forward, which looks to be sort of what President Trump was getting at there. He was in this big room with these tech CEOs, and he was trying to link that the job growth he's hoping from their billions of dollars in investment is ultimately going to go towards hopefully boosting the labor market down the road. And that's sort of what we've gotten so far out of this White House when they sort of are trying to show us which parts of the data they want to focus on. I will point out that when we heard from President Trump today, it was, of course, in a post criticizing Federal Reserve Chair Jerome Powell, again calling him too late. So far, that's all we've heard directly from him, but you made a good point at the top there. Of course, this is the first jobs report since we saw the BLS had fired after the week July numbers, and it's probably worth saying because we're hearing a lot of officials talk about the BLS officials this morning. Right now, there's an acting commissioner. It's actually a long-time official that's been at the BLS. They're serving in an acting capacity now. They used to be the deputy commissioner. As we wait for the Senate to take up President Trump's pick, which is E.J. Antoni, who, as you well know, is the chief economist at the Heritage Foundation.
Well, I don't think anybody's getting fired this month, Michael McKee. Maybe you can tell me that you're hearing otherwise. But when you step back from this report, how do you rationalize these numbers with the story that's coming from the White House, the massive amounts of investment that were supposed to create thousands of jobs?
They don't match up. It's a circle you can't really square. We are seeing a decline in the labor market and its performance that is hard to argue with. You can't fire anybody, as you say. You can throw some ketchup bottles, but you can't argue with anybody about it because we're seeing some numbers we haven't seen, to quote the president, in a very long time, or if ever. 3-month average jobs, only 29,000. First negative print for June since December of 2020. We're now down after revisions 13,000 jobs in June. That's got the Fed's attention. The unemployment rate went up almost a full percentage point. We almost got to 4.4%. So we're seeing numbers that should be worrying the administration, and I think they are, which is kind of one reason why they've been a little quiet, and the president's been a little quiet about this in terms of the overall performance and the fact that he would tweet at Jay Powell saying lower interest rates as opposed to fix your fiscal issues.
Well, yeah, so it's interesting here because the president wants interest rate cuts, Tyler and Michael. He also wants a really strong job market. Is he learning, Mike, that he can't have both?
One would hope so. I mean, be careful what you wish for, Time. He's been asking for lower interest rates, and he's going to get them probably, but not for reasons that he wants. Yeah. He is channeling his inner Brooklyn Dodger fan and saying, wait till next year. But the Fed and the American consumers are not going to wait till next year. They want to know what's going to be working now.
Well, of course, Tyler, tariffs are making a pretty cloudy picture for where we're going to be a year from now. You talked to Kevin Hassett about that this morning. This is a big reason why we talk about uncertainty every day around here. It's pretty hard to tell where we're going to be in a year, isn't it?
Right, exactly. And this is, of course, playing very heavily into all of the decisions coming from the Federal Reserve. Now, I was keen to talk to the NEC director because we had heard from President Trump during this big meeting of the tech execs that these chip tariffs in particular are going to be coming shortly. And when I asked the NEC director to give me some sort of timeline, I think we have the sound. Here's what he told me.
Hey guys, I have a Zoom, so I'm going to be gone for about half hour, 45 minutes. Sorry, I'm busier today than I have been in a while. I'm still digging the short here pretty soon. It's just this area of resistance and the deviation from the VWAP is holding it up. But I'm kind of digging it. But I'll take my 495 after being down, after being hammered 2 stop losses in a row. I'll take this. I'm pretty happy. But all right, I'll see you guys in half hour, 45
Really
minutes.
interesting,
Be
and it
careful
goes
out
back
there.
to
Be
the
careful.
top of our conversation is who's going to get those carve-outs and those reprieves. And I asked Director Hassett where they stood in those conversations, and he said, of course, they're just working out the details. But then you have President Trump going out and seeming to reaffirm that those companies that onshore production are going to get some sort of reprieve, whether or not that's no tariffs at all or a lower, more preferential rate of tariffs, which of the chip supply chain this is going to apply to, because keep in mind, this is the entire supply chain when it comes to chips, the equipment that's used to make them, but also those downstream items.
Seems like everybody who was at that dinner last night gets a carve out because they're all investing something or planning to in this country, right? So that works out pretty well, I guess. Haven't brought up the Fed more than interest rates in this case. How about the makeup of the Fed, Michael McKee? We had an important hearing for Stephen Myron yesterday, which we talked about. We're also waiting for a ruling on Lisa Cook. How different will this body look by the time we get to the next meeting?
That's a good question. I mean, the majority will be the same. Yep. We're talking about two different spots there, and it won't make a difference in what the ultimate vote is. Stephen Myron looks like he's on track for confirmation. One of the Republicans who might have opposed him, Tom Tillis, said yesterday he's going to vote for him, and the rest of the committee said, we don't have a problem with the fact that there are problems with what he told us today. So he'll get through. It's just a question of working out the details of how they get the nomination to the floor, because they've got a lot of nominations backed up. The Lisa Cook question is interesting because it's taken long enough now that if she got a temporary restraining order, it would cover the period to the Fed meeting, because it's 14 days and we're 10 days out now. But after that, we don't know. If she doesn't get the restraining order, then she's going to be out of office. So we're all kind of just staring at our court screens
that
to
could
see.
be today, right?
That could be any time. The judge has all the paperwork in, and obviously the judge knows this is important in terms of timing because you've got this meeting coming up. Right. So we'll find out. Then the question becomes, if she is removed, even temporarily, does the president try to fill that spot, even though she could be by a court reinstated later?
Right.
That would create a big fight.
And again, Tom Tillis says he won't have any part in that if it goes that way. So I don't know. We've got a lot to learn. You ready to jump if this breaks today?
I'll
Tyler
be here.
Kendall will be reporting on it. Michael McKee, I suspect, will be as well. Great to have you in town. We'll see you next hour for your conversation with Austin Goolsbee. There's a lot more to follow here on Balance of Power. I'm Joe Matthew in Washington. We turn to geopolitics next. What in the world is happening in the South Caribbean? We'll attack that next with Nick Wadhams on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Jobs Friday, stocks lower, bonds higher on concern. The Federal Reserve will now have to rush to prevent further weakness. S&P off session lows at 64.70, down 32. That is a drop right now of 0.5%. Dow Industrials down 265 on the Dow, a decline of 0.6%. The Nasdaq Composite Index down 51, a drop there of 0.2%. The Russell 2000 Index of small cap shares is holding on to a gain of 0.2%. The 10-year 4.07%, with the 2-year currently yielding 3.47%. The 30-year at 4.77%. Spot gold up $52 the ounce to $35.97 for gold. That is a gain of 1.5%. A big retreat for West Texas Intermediate crude down 3.1%, 61.48 a barrel. And Bitcoin, little change, just above 110,000, up by about 0.1%. Lululemon Athletica now plunging by 18.5% after slashing its outlook due to weakening demand and the Trump administration's tougher trade policies. Broadcom is helping OpenAI design and produce an AI accelerator from 2026. Right now we are looking at Broadcom shares. Also after earnings, they are gaining by 9.6%. Recapping, S&P down 35, a drop of 0.5%. Your 10-year now 4.07%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back, we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie. Good to have Charlie Pellet on a Friday. What else do you want around here? You've made it to the threshold of the weekend. Thank you for joining us on the Friday edition of Balance of Power. I'm Joe Matthew in Washington. We've got a lot ahead for you, including Nick Wadhams and our panel, Rick Davis and Jeannie Shanzano, are with us with a lot of geopolitics to talk about and some pretty dicey developments in the South Caribbean, where we recently blew up what was said to be a drug smuggling boat. That story is developing as well. The story of President Trump's involvement in the New York mayor's race. Check this out. The New York Post just out with this, by the way. Have you seen, can I digress for a moment? Have you seen the New York Post reporter with the big mic flag, the big honker on the end of the microphone, standing right there with the president? They used to be not allowed at the White House. We'd just bring whatever we want in there now. And anyway, Mayor Eric Adams, this will be a big talker next week. Mayor Eric Adams will be in Washington for a White House meeting to discuss his political future. President Trump is considering giving him a job in the administration, as we've told you, to get him out of the race so we can get this to be a one-on-one. The president's been talking about this quite a bit lately, as a matter of fact. He wants a two-way race for New York mayor, and he would like a couple of people to drop out, including the aforementioned Eric Adams and Curtis Sliwa, so we can get this down to a Cuomo-Mamdani race. He even talked about this last night with the high-tech gurus in town. So just file that away. That's going to be a big one when you see Eric Adams walking down the West Wing driveway. Big questions about our relationship with President Xi this morning, if we have one anymore. I don't know what happened last evening here, because this story is not new. We've been talking about it all week, the optics in Beijing. Seeing Vladimir Putin, Narendra Modi, the Prime Minister of India, and Kim Jong-un all joining together with President Xi for the big military parade and the 80th anniversary of, the end of World War II, which they have rewritten a bit when it comes to the history. But Donald Trump out this morning on Truth Social, sort of bizarre, brief post, including an image of these men together. You can see Putin, Modi, Xi, and the president wrote, "Looks like we've lost India and Russia to deepest, darkest China. May they have a long and prosperous future together. President Donald J. Trump." Bloomberg Surveillance this morning on Bloomberg TV asked Howard Lutnick about this and what exactly the president meant. The Commerce Secretary weighed in. Let's listen.
Before the Russian conflict, the Indians bought less than 2% of their oil from Russia. Less than 2%. And now they're buying 40% of their oil from Russia. What they're doing is, because the oil is sanctioned, it's really, really cheap because the Russians are trying to find people to buy it. And so the Indians have just decided, the heck with it. Let's buy it cheap and make a ton of money. But you know what? That is just plain wrong. It's ridiculous. And they either need to decide which side they want to be on. You know, what's funny is, remember, the Chinese sell. The Chinese, well, we're always willing to talk. The Chinese sell to us. The Indians sell to us. They're not going to be able to sell to each other. We are the consumer of the world. People have to remember, it's our $30 trillion economy that is the consumer of the world. So eventually, they all have to come back to the customer, because we all know eventually the customer is always right.
When you are talking with India, Mr. Secretary, I know a lot of companies in the U.S. have shifted manufacturing to India from China, so there's a real interest in this in terms of their costs. How much do you feel like you've lost leverage as a result of the court case that came out fairly recently?
We haven't lost anything with respect to the court case. If you look at the dissent, right, it was 7-4. Read the dissent. The current Chief Justice sided with President Trump. The former Chief Justice sided with President Trump. And the incoming Chief Justice sided with President Trump. And the smartest guy on the bench, which is well known who the smartest guy on the bench is, he sided with Donald Trump. So I think you are going to see the Supreme Court side with Donald Trump. And I don't think we've lost leverage. What we've lost is that India doesn't yet want to open their market, stop buying Russian oil, right? And stop being a part of BRICS, right? They're the vowel between Russia and China. If that's who you want to be, go for it. Either support the dollar, support the United States of America, support your biggest client, who is the American consumer, or I guess you're going to pay a 50% tariff. And let's see how long this lasts.
It seems like there's been a hardening of the line, both with President Trump as well as Modi, and a sense that there isn't really a coming together. In fact, that meeting with Xi Jinping and Vladimir Putin and Prime Minister Modi seemed to indicate a coalescing of the BRICS. Do you see anywhere in the next month, 2 months, any type of deal or backing down to a lower rate with India?
I would expect, like you saw it in Canada, right? Carney got elected with this term, elbows up, meaning let's fight with America. They put on retaliatory tariffs. They were all bravado. And what happened? Their GDP negative 1.6%, unemployment rocketing towards 8%. And what did Carney just do? He just finally dropped his retaliatory tariffs. So I think what happens is it's all bravado because you think it feels good to fight with the biggest client in the world. But eventually, your businesses are going to say, you've got to stop this and go make your deal with America. So I think, yes, in a month or 2 months, I think India is going to be at the table, and they're going to say they're sorry, and they're going to try to make a deal with Donald Trump, and it will be on Donald Trump's desk how he wants to deal with Modi. And we leave that to him. That's why he's the president.
All right, Howard Lutnick on Bloomberg TV and radio on surveillance earlier today. That's the 5th of September. Remember, that's when he predicted that India would come back and say it's sorry, knowing that this administration doesn't always see a lot of sunlight, if any, between economic matters, trade, and matters of war and peace. Which brings us back to this truth post. We've lost India and Russia to deepest, darkest China. And Nick Wadhams is with us now, runs our national security coverage here in Washington. Nick, it's great to have you, as always. What does he mean by this, if only the economic ties that they're now exercising?
I have been trying to parse that social media post for quite some time this morning. I mean,
Yeah.
it's extraordinary because for a long time, the goal of the United States has been essentially to wean India away from Russia and widen fissures that it has with China. There's some tension there. But the president essentially seems to be admitting defeat in that social media post. So the question to me is, what is their strategy now? I mean, Howard Lutnick there, really fascinating comments suggesting that the U.S. is still very much in the game and they want to increase the economic pain on India and have it come back to the table. But, you know, Prime Minister Modi has shown he is not really that interested in playing that game and takes a lot of umbrage at the idea that the U.S. is going to squeeze him and that's just going to lead him scurrying back. So you have the economic issue there, but you also have this much bigger geopolitical issue where India says, listen, we don't want to be pushed around. Right now, all signs are toward India, China, Russia getting much closer together. We just have to see.
That includes military hardware as well as oil?
Well, I mean, India has long been a client of Russia's for military hardware, and in fact, this was a big priority for the Trump administration in the first term, and also the Biden administration, and also the Trump administration in the second term. I mean, early on when he met Modi, there was talk that maybe the U.S. would sell F-35s to India. But that certainly seems to be off the table right now. I mean, so it's very difficult to know what's actually going on here, but suffice to say, this thing is not headed the direction that the president wants it to be going.
Yeah, it doesn't feel like it. Nick, while you're here, I want to ask you about what's going on with Venezuela. We talked a couple of days ago about the U.S. blowing up what we called a drug smuggling I won't even use the word ship. It's a boat. It looked like a speedboat that we hit with a drone or a missile. There have been a lot of questions since then. I spoke with Senator Mark Warner last evening about it. Vice Chair of the Intel Committee says he got no heads up. There's no briefing on the Hill. And we saw some, I don't know if I can call it escalation last evening, but 2 armed Venezuelan F-16 fighter jets flew over an American ship stationed in the Caribbean there in what the Pentagon is calling a show of force.
Right.
How risky is this getting?
It's a great question because also some of our competitors are reporting today that the U.S. is going to move 10 F-35 jets to Puerto Rico, which is another element that we're trying to confirm. But I mean,
essentially declared war on Venezuela by way of a cartel. Is that fair to say?
Well, I mean, I think what you're seeing is this is an administration that has 2 cross currents in it. One is Marco Rubio and Trump really do, in a lot of ways, especially Marco Rubio, want Nicolas Maduro out of power. But you have the president saying, you know, we're going to resist foreign entanglements, no new wars. He's the peace president. So the idea of a military attack to push Maduro from power seems like a remote possibility at this point. But you get into one of these situations where the U.S., I mean, it's a little like the India tariff situation, actually, where this administration really wants to flex its muscle, do things that it thinks will have a deterrent effect. The question is whether a wild card like Nicolas Maduro will be, make decisions according to the logic that the U.S. thinks he will. What Rubio wants is for the internal pressure to get so great that it will boot Maduro from power. But so far, with all of the sanctions, all of the punishments, designation as a foreign terrorist organization, you just haven't seen his grip on power get any weaker. So the question is going to be, well, what next?
Yeah, I mean, an American ship is sunk, a plane gets shot down. We're in a very different world, aren't we?
We are, but the other question, the thing that's a real challenge here is we just are not getting a lot of detail from the Pentagon. You know, normally if the U.S. would launch a missile strike at any boat and kill 11 people, you would expect a very detailed briefing. We're just not seeing that right now.
And boy, we'll bring that to you if it happens, Nick. Thank you so much. Nick Wadhams with a quick trip around the world here from Bloomberg's national security team here in Washington. We're going to stick with this story and talk about a report today in the New York Times that finds U.S. Navy SEALs were on the ground in North Korea in 2019. We're just hearing about it now. That's straight ahead, only on Bloomberg.
markets. 1240 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are lower across the board. Jobs Friday. We got a sell-off underway with the Dow, the S&P, Nasdaq all in the red. S&P down 36 right now, 64.65, drop there of 0.6%. Strong evidence that the U.S. labor market is slowing is rippling through markets, driving stocks lower, bonds higher. All about concern that the Fed will now have to rush to prevent further weakness. The Dow down almost 300 points, down 0.6%, while Nasdaq is down 63, drop there of 0.3%. The Russell 2000 index of small cap shares is holding on to a gain of 0.1%. The 10-year 4.07%, with the 2-year right now 3.48%. Gold up $47 the ounce. Spot gold up 1.3%. West Texas Intermediate crude down 2.9%. And Bitcoin up 0.4% at $110,809 on Bitcoin. Alphabet's Google has been fined $3.5 billion by the EU and ordered to stop favoring its own advertising technology services. It is a move that risks further inflaming tensions with President Trump. Shares of Alphabet, they're up 0.9%. Treasury Secretary Scott Bessent is criticizing the Federal Reserve for what he calls mission creep and is calling for an independent review of the U.S. Central Bank. Bessent's remarks coming in an op-ed in the Wall Street Journal. Recapping, S&P right now down 31, drop there of 0.5%. Balance of Power continues right now. Back we go to Washington. Once again, your host, here is Joe Matthew.
We thank you, as always. Charlie Pellet, live from New York. We'll have more from Charlie coming up at the top of the hour as we trace the Friday trade here. Yeah, you made it to the end of the week. I hope it is for you, at least. Happy Friday and welcome to Balance of Power on Bloomberg Radio, satellite radio. We're on channel 121 at Sirius XM and always on YouTube Live by searching Bloomberg Business News Live. Tensions in the Caribbean, as we were just discussing with Nick Wadhams. Remarkable story that's developing and not getting nearly enough coverage. The idea of 2 armed Venezuelan F-16 fighter jets buzzing the USS Jason Dunham in what the Pentagon describes as a show of force should be a lead story. This is Venezuela we're talking about here, right? DOD, soon to be DOW? You heard about that, right? President today is going to rename Department of Defense the Department of War in an executive order that he's going to be announcing a little bit later on today. DOD, as of now, says the cartel running Venezuela, they put a statement on Twitter. The cartel running Venezuela is strongly advised not to pursue any further effort to obstruct, deter, or interfere with counter-narcotics and counter-terror operations carried out by the U.S. military. This, of course, follows our decision to blow up a boat. It looked kind of like a skiff. There were a couple of guys on it. They're bouncing through the water in the middle of the night in the Caribbean, and we blew it up, said that it was a drug cartel smuggling drugs at high speed to the United States. There are now questions, however, about this decision and whether it was, in fact, a legal move. As the New York Times reports today, the trafficking of an illegal consumer product is not a capital offense, and Congress has not authorized armed conflict against cartels. Marco Rubio, though, says more is coming. He talked about this just yesterday, saying the U.S. will work with other countries to, quote, blow up more drug cartel operations. We've been showing you video of this boat, the thing on fire, then it's gone. I had to ask the vice chair of the Intel Committee about this last evening. Senator Mark Warner joined us on Balance of Power because surely he was briefed on it, and I wanted to know if we had confirmation that this was a cartel boat and that there were drugs on board. Here's what he said.
I cannot, let me be clear. The Maduro government in Venezuela is awful. And clearly we need to do all we can to eradicate the drug cartels. But to take this action, which at least at first blush seems to be counter to the law, if we are not, as congressional oversight, not going to get the ability to do oversight and get the briefings because people are afraid of being called out by Laura Loomer or the administration doesn't want to share information, then we are in a place that's frankly unprecedented. If you got to go through a Laura Loomer litmus test before you do your oversight job, then we got a heap of trouble.
You know, it's something when the vice chair of the Intel Committee is invoking Laura Loomer unsolicited in an interview on Bloomberg. Let's assemble our political panel. I know they have feelings about this. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Hashtag Laurel Loomer litmus test. That's right, Cece. Rick is partner at Stone Court Capital, Republican strategist, and Jeannie, democracy visiting fellow at Harvard Kennedy School's Ash Center, our Democratic analyst. Rick, I don't know if this was legal. Was it the right thing to do for the U.S., and should we be promising more? That's what Marco Rubio says. Knowing that members of the Intel Committee and the Senate haven't even been told about this. What's going on here?
Well, I do think that we have ignored these various threats from our southern border, alive in the Caribbean and South Central America, for too long. And repeatedly, senior members of the Defense Department, combatant commanders from Southern Command, have argued that we've ignored these kinds of threats. We've seen what happens in places like Venezuela when we don't take action early. And Marco Rubio was just in Ecuador, and while he was there, designated 2 more organizations as foreign terrorist organizations. And I do think that's the rationale this administration is using, is that they're not attacking what they perceive as cartels or drug organizations. They feel like they are fighting a war on terror. And that then brings in the Patriot Act and other bodies of law that governs their conduct and what they can and can't do. So we see this repeatedly with this administration, including, by the way, Mexican cartels. And it would not be surprising to me that this is their legal rationale. And we should not underestimate the focus that this administration has on going to war with these terrorist organizations.
Well, that's for sure. It would be more standard procedure, I believe, Jeannie, to board that vessel, though, right? We have the ability to board a vessel, to take people captive, to search the boat and see if what we believe is on board. They just killed everybody. Was it the right thing to do?
Yeah, Joe, you're so backwards looking. That's what we used to do. Stop the boat, board it, see what's on there. Now we just blow it out of the water in international waters. Blow it out of the sky, I should say. So much of this is so wrong in so many ways that you hardly know where to start. But let me say this. These must have been some really bad drug runners if they were going to try to move drugs from Venezuela to the U.S., which is about 1,200 miles, would require about 5 fuel stops. And they were going to do so, Joe, with 11 people on board. What kind of drug runners these are, I've never heard of it. But we don't stop them and get the drugs and figure out who they are. No, we just blow them out of the water. So the strategy here makes no sense. The legality, though, is clear. The president is now decided that he can designate whichever groups he wants as terrorists and then take whatever action he wants to kill them. Now we have 11 people dead and no evidence, no authorization of the use of force by Congress. This is an act of war against Venezuela that has not been declared. And the Department of Defense is celebrating this enormous show of force we have in the Caribbean. You just look at it, including a submarine with nuclear on it, and you wonder, this is to stop little speedboats? What is going on? We all must ask, because none of it makes any sense.
Well, there's a report that we're sending F-35s to Puerto Rico now, Rick, and I realize you guys may not agree on what was carried out here, but what's your thought, Rick, about Venezuelan F-16s now buzzing American ships like the USS Jason Dunham? The level of risk could be going up pretty quickly here. How concerned are you about a conflict in the Caribbean?
Yeah, I mean, if you think that this is just a couple of drug runners, moving lethal drugs to the United States, then why is the Venezuelan government using F-16s to strafe our naval vessels in the Caribbean? This is a bigger story, and that story, I think, has been underreported for a long time, and that is that these pernicious events that take place seemingly unresponded to by us, the United States, when we have these organizations that act as terrorist organizations coming across our borders, spreading poison into our world, and by the way, and attacking our citizens, right? I mean, we have as a nation.
Hey guys, how you doing?
Condoned this.
Looks like we're pushing sideways. We haven't really gone anywhere yet, huh?
Administration since the 1970s. We have drones.
We're definitely in a range. We're in the range I drew. Look at where I drew. My first target and second target. We've been in that range the whole time.
And these are designated individuals who once identified are
which way are we gonna break out
to their maker. So yeah, sure, this requires more investigation. There should be procedures that are followed. But this is also in keeping with the Trump administration. We're going to send a message. we're going to do something that will get an enormous amount of attention, and hopefully that will actually decrease the amount of illegal activity, coming across our borders in the South.
Well, I'd be very curious to hear you both weigh in on this New York Times story about another mission that the Senate, Congress was not briefed on. We're just learning about it now. If you saw this in a movie, guys, you would think that it was so far-fetched that it was funny. A group of Navy SEALs were actually on the ground in a super secret mission in North Korea back in 2019, the first Trump term. A group of SEALs, as I read from the Times, emerged from the ink-black ocean on a winter night in early 2019, crept to a rocky shore in North Korea on a top-secret mission so complex and consequential that everything had to go exactly right. It did not go exactly right. We brought the SEALs to North Korea in a nuclear submarine. They branched out in mini-subs, actually got on the ground, and realized, not knowing what it was, that there was a vessel nearby that they did not anticipate running into. North Korean boat appeared out of the dark. Flashlights from the bow swept over the water. Fearing they had been spotted, the SEALs opened fire. Within seconds, everyone on the North Korean boat was dead. The SEALs retreated into the sea without planting the listening device they had gone there to put in place. This is while talks were underway with North Korea. Jeannie, should there be an investigation here? What do we do with this information? Should the Times have published this?
Yeah, Joe, you had me on edge there. I feel like I'm listening to I love crime podcasts, so that's what I feel like I'm listening to while you're going on. It was a really good reading. I do think the Times should obviously check with the government, and they do, to try to get a response. And then I do think they have a duty to publish. And I do think we should have congressional oversight and an investigation into this. It is quite a story to read. And, we've seen this in the past. There can be justifications for these kinds of things, but certainly it all comes back to congressional oversight. And when you look at what is happening today, as we think about Venezuela, I don't think we should underestimate the role that Congress must play. I mean, your interview with Warner, they have a role here. They are the ones that declare war. They are the ones that authorize the use of military force. And in the case of North Korea, they're the ones that exercise oversight. So there is a role for a very absent Congress in all of this.
We've got about a minute and a half, Rick. I'd love to hear from you on this and whether you think Congress, in this case, Intel Committee, should have been briefed on both of these. What happened in Venezuela, what happened in North Korea several years ago.
Yeah, look, I think within reason, communication with the appropriate committees and staff is part of the dance with the executive branch and the legislature. So absolutely, either before, during, or after those events, especially the intensely secret ones like the one you described in North Korea, not so secret when you blow a boat out of the Caribbean, deserve some kind of conversation. And again, I put the onus a little bit on Congress. I mean, they routinely pass budgets. They routinely confirm individuals. If they want to send a message to the administration, don't beat up on Laura Loomer. Stop something from happening, get their attention, and work out a deal. There are ways that Congress can work with this administration and previous administrations. This was certainly not this didn't happen in North Korea during this administration, but the reality is it can all be worked out.
Rick Davis and Jeannie Shanzano, great conversation, and they will be back in our second hour of Balance of Power. We're going to bring you a conversation with the chairman of the Ways and Means Committee coming up. Jason Smith will be with us, and more analysis from Jeannie and Rick. So stay with us as we welcome our global television audience. It's ahead on Bloomberg.
All right, guys, I'm finally caught up here. So we're in our range. This is where I drew my first short. This is where I drew my second short, and I went negative, and then I got it back, and I went positive 495. So this range is what we're actually working in, and it's right what I drew for my entries to go short. So we made it into my entry targets. And now we're ranging within those targets. That's interesting to me. So we're kind of running sideways. We're just chopping around. No clear signal. You see, it's the control EMAs are just banging around. So I think we need to confirm above this to go higher, or confirm below this to go lower. So we need to break out of that range and confirm. And then we'll go to the next targets after that. That's kind of what I'm thinking about. What do you guys think?
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Job market disappoints again. Welcome to the Friday edition as monthly jobs data show weaker payrolls and the highest unemployment in 4 years, which may be enough to bring President Trump the interest rate cuts he's been pushing for. I'm Joe Matthew alongside Preeti Gupta in Washington. Thanks for being with us here on the Friday edition, indeed. The early side of Balance of Power on Bloomberg TV and radio. There may be a celebration about interest rates at the White House.
All right, guys.
Here, Preeti, but
I'm finally free.
it's not enough to boost stock prices today.
Absolutely, not just the job
So
numbers. This is a flurry of economic
we need to
data
clear
in
this
the
double
last couple
top.
of weeks. The PPI
Almost
numbers
like
upgrade, the CPI
We're right into the VWAP.
Manufacturing, the factory boom, you name it.
I almost wouldn't mind going up and touching this zone up in here
You can't have both. If you want to have lower interest
and
rates,
rolling
this is how
over.
you get there, as opposed to.
I wouldn't mind getting up into here and rolling over to go short, to be honest with you.
White House on this, trying to downplay what is 1 month worth of data.
I can't really see going here to go long into the VWAP.
We're going to talk about that coming
But-
up with Anna Wong, the chief U.S. economist at Bloomberg Economics. Also,
Kind of happy to have my 495. Steakmeister around? Hey, Steakmeister, you here?
Shutdown. It's looming. 12 working days for Congress to find a solution.
What could
Will
go wrong?
they?
No, I don't
Well,
see
we'll
him.
find out. Jason Smith will have some things to say about that, of course, in line with the president.
I'll get today and yesterday up this weekend for the Trade Journal for the new PA. The new PA is up like 750 right now on 2 days trading.
At the end of the month. It's all after a look at Wall Street.
I'll
Charlie
show you
Pellet's
real
back
quick.
with us today. Let's get a read on the markets before we get down to business. Live from New York, Charlie, how's it
I
looking?
got 2 days trading, 750. And this is eval. I got 8,000 on an eval. So I got an eval half done and 750 right here. Net liquidation on my PA. Just so you see.
The Dow down 227, drop there of 0.5%, while the Nasdaq Composite Index down 0.2%. The 10-year yielding 4.07%.
I'm going to grab something to eat. I'll be right back.
0.48%. Stocks lower, bonds higher on concern the Fed will now have to rush to prevent further weakness. We've got spot gold trading higher by almost $50 the ounce, up 1.4%, $35.96 on the precious metal, while West Texas Intermediate crude is tumbling 2.6%, $61.84 a barrel, and Bitcoin right now up by 0.3%, $110,755 on Bitcoin. Lululemon Athletica shares plunging 18% after earnings. It slashed its outlook due to weakening demand and the Trump administration's tougher trade policies. And Broadcom is helping OpenAI design and produce an artificial intelligence accelerator from 2026, getting into a lucrative sphere dominated by NVIDIA. Right now, Broadcom up 11%, NVIDIA down by 2.9%. Recapping stocks lower, S&P down 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington as Balance of Power continues. Once again, your hosts, Joe Matthew and Preeti Gupta.
All right, Charlie. Great to see Charlie Pellet on the Friday edition, and thanks for joining us here. You made it to the threshold of the weekend, and we've got a lot to talk about on this jobs day with big concerns about the trajectory of the job market following the data that fell short this morning. Only 22,000 on payrolls, unemployment up to 4.3%, and outright losses of jobs in some key
All right, I'm back.
including manufacturing.
Anyone in a trade?
Last evening, as
Looks
he
real
dined
tough
with the
right now.
titans of high tech at the White House about the veracity of the numbers and whether he would trust what we heard from BLS, knowing a month ago he fired the commissioner after not thinking that the data were correct. In fact, he suggested they were politically rigged. Here's what the president said last evening.
We have a jobs report coming out, the first since the BLS commissioner who you fired won't be there. Can you commit to saying
Well,
the
we're
data
gonna
will
have to
be
see
credible?
what the number, I don't know, but the real numbers that I'm talking about are going to be whatever it is, but will be in a year from now. I think you'll see job numbers that are going to be absolutely incredible. You're going to see job numbers like our country has never seen before.
I love Mark Zuckerberg having a side conversation with somebody while the president's talking to the media. The visuals were great last evening, but we want to get to the numbers here before we're joined by Representative Jason Smith, chairman of House Ways and Means. Anna Wong is with us, the chief U.S. economist at Bloomberg Economics. Anna, it's great to see you. So we need to wait a year for the golden age to begin in the job market. What do you make of this?
Well, for example, next week we finally will get some revisions for last year. So indeed, you have to wait a whole year. But I think that for today's number, there has been a historical tendency for August to undershoot consensus. When you look at where the number print in the first print relative to consensus, since 1999, 70% of the time, the initial print disappoints. And one possible explanation
I
is
closed
that
my
people
oil.
go on vacations
All right,
in
Rox,
August, and this
you're
August,
crushing
the
it
weather
today.
is beautiful in the U.S. And so
Holy
the
shit.
response rates for surveys tend to be lower as well. And the response rate we saw today is one of the lowest August we've
Yeah,
seen.
but you got plenty of days, man.
60,000. So personally, I do expect
If it's a
these numbers to be
250K, you're
revised
probably
upward
on
even
30
within the
days.
next 2 months.
So you got time to
Traditionally,
get the
the
30%
median
rule down, but you got to make your money when it's there, you know?
25,000, and the disappointment is usually about 25,000 too. So roughly
Yeah,
offset
don't worry
the
about that then.
disappointment. That means that
Just keep
eventually
trading.
this number would be revised up possibly
That's what I'm doing.
50,000, 60,000.
Didn't
Still
the last guy
rather
get
modest.
fired for all this, though? The revisions and the lack of response?
If I can put a big, you know, 2, 3, 4 grand around in one day, I'm just going to do it. I'm not going to cut the trade short.
Issues are
I got plenty of
longstanding
days to
and
get
not
it within
just
the
from one
30%.
commissioner or another. So if Trump does fire
I mean, once you
the
get it up
commissioner, he won't
to
get
like
the
10 grand anyway, 30%'s like 3 grand on one trade.
50,000, even in the best case scenario, still doesn't sound like a strong labor market. I'm
Well,
going to repeat Joe's
that means you
question.
can't take any
Best
bad
scenario with those
trades.
revisions. Is this the Trump economy?
You get to keep your
Well,
profits
you know,
for
and
sure.
The unemployment rate increase, right? I think that's where the real signal is because it's the relative labor demand and supply. And what we saw in the unemployment rate is that participation rate increased. So even though employment in the household survey
All
actually
right.
increased over 200,000, the unemployment rate still ticked up because, in fact, people are coming back into the labor force after dropping out in the past 3 months. I do think that the bottom of this labor market was actually in June, and we actually have been through the really rough patch already. In fact, after all the revisions are done, we probably have a couple negative prints a couple months ago. We also probably have a negative print late last year, but I think things should be rebounding right now.
Well, that's fascinating because we hear so much about the huge levels of investment that are coming from some of the individuals who were at that dinner table last evening, with hundreds of billions of dollars in data centers alone. That's supposed to prompt a massive amount of job growth, correct? Is AI and the productivity from AI working against that?
So we are indeed estimating that the investment from AI will be continuing on this linear trajectory or even slightly non-linear in the next 2 years. So that helps with GDP growth, right? On the other hand, we are seeing a rising unemployment rate in sectors that are exposed to AI, possibly because employers are not hiring as fast. And this is what we're seeing in the demographics group from age 20 to 24, that their unemployment rate is close to 10% right now. So I think through the reduced hiring, not outright layoff, this is where ultimately through natural attrition and not replacing those workers, you're going to see slow build up, acceleration in productivity.
Wow, really interesting conversation as always with Anna Wong. Thank you, Anna, for your great analysis. And you can find Anna's work on the terminal and, of course, online at Bloomberg.com as we add the voice of Congressman Jason Smith, the Republican chairman of the House Ways and Means Committee, is with us right now live from Capitol Hill on Bloomberg TV and radio. Mr. Chairman, thank you for joining us. It's great to have you back with us here on Balance of Power. I'd love your take before we get to matters of legislation just on the jobs print today, what it means for our economy now that the commission of BLS has been fired. Do you believe these numbers are credible?
You know, I believe that I would agree with actually the person before me. I believe the numbers should be a little bit higher than what was released today. But let's look at it just this year. In the first 8 months of the Trump administration, there's been 500,000 new jobs, and those are American jobs. Those aren't government jobs. That's real jobs, and I think it's going to have a huge impact. But as the president said in one of the prior messages that I heard, when you look at a year from now, when the growth aspects take an effect from the passage of the tax bill on July 4th, you're going to see a lot of new jobs.
Chairman Smith, the economist that was speaking before you, Anna Wong, also said, though, that some of the negative prints that have come up in the last couple of months are likely to still be negative. Those revisions still stand. If that weakness persists, is that indicative of the effect of Donald Trump's tariff policy?
I don't believe so. And I think she also said that June was probably going to be the lowest level and then it should only go up from that point on. But just passage of the big, beautiful bill of the small business deduction, the National Federation of Independent Businesses claim that that tax certainty will create 1 million new jobs each year for the next 10 years. That's pretty substantial, and that's just one provision within the tax bill, and that was from the NFIB.
Well, it's interesting that you bring that up, Mr. Chairman, because there's been a lot of writing recently about the branding, the messaging around the bill. The president himself said he doesn't want to call it Big Beautiful Bill anymore. I think the White House is looking more for something like the Working Families Tax Act or the Tax Cut Act. And I'm wondering your thought on that, having just come back from August recess, the messaging and the communication with voters that needs to follow such a massive piece of legislation passing. It's basically an opportunity to educate people on what you just did. Does it need a new brand? Does it need a new look while you take this on the road?
Okay. All right, guys, what are we thinking here? Stochastics are finally tied together above the 80, maybe ready to roll. Maybe. We're at the top of our range again. I'm not real sure if this is a front run to the short or another fake out, to be honest with you.
Will be invested for them. These different provisions, whether it's increasing a tax incentive for paid family leave or child care, these are items that need to be discussed rather than just one big broad brush. The bill, as you know, had 103 different tax provisions, which we passed through the House Ways and Means Committee, but it also had border security, it had military spending, it had welfare reform, so it was a variety of things. But just from a tax perspective, of course these tax cuts, the majority affect working families.
Well, I have to ask you not about only what's just been done, but what's coming up next. Mr. Chairman, there's talk of another rescissions package, for instance, because after the last one, we had a lot of Democrats come on the air here to say that they can't trust deals that are made surrounding appropriations in the House, and we may well end up seeing a government shutdown. One more rescissions package, and we shut down, is what I believe Brendan Boyle said, the top Democrat on the Budget Committee. So give us your read on this. You're talking to your colleagues. Are we at risk of shutting down after September 30th?
You know, I really hate to hear that my Democrat colleague says no rescissions at all. That's saying that everything that's appropriated was needed to be spent. I don't think that's the case when you're looking at trillions of dollars. I'm sure you can find some things that aren't being spent and we should rescind it. I am very disheartened what I've been hearing from the other side of the building, from the Senate, from Leader Schumer, from Chuck Schumer, by saying that there's going to be a shutdown. We can pass a funding bill out of the House of Representatives, and we will pass a funding bill. The issue is you have to have 60 votes in the United States Senate. There's only 52 Republicans, so that means at least 8 Democrats are going to have to join in. But if they refuse to join in, there will be a government shutdown.
Chairman Smith, it sounds like you're saying that a continuing resolution may be the only option here. How long could that last if that's the way that it moves forward?
I would expect that there'll be a continuing resolution for at least a couple months because there is clearly no bipartisan agreement on an overall appropriations process. And so a continuing resolution is what you're going to be looking at over the next several weeks. The question is, will the Democrats in the Senate support a continuing resolution? They're saying right now that they won't, but if they don't, they are clearly shutting down government.
Well, it's interesting. We're hearing talk now from the White House, not the first time, of a full year CR, a year-long CR that would bring us all the way to the next fiscal year. Mr. Chairman, does that give you the sweats when you hear that, or could that really happen?
You know, I would really like for us to do our job and to appropriate, getting tired of CRs, but that requires Republicans and Democrats to work together through this appropriations process, and hopefully people will be able to do that. But it's a huge challenge. It's a huge challenge. I think right now, if you were going to ask me to predict, it's going to be a CR at least for a couple months.
Well, Chairman Smith, you're talking about getting the Democrats on your side. Would you commit to more rescission packages to do that?
Well, the Democrats don't want rescission packages, as what was said earlier. I'm all about making sure you're appropriating money and you're cutting waste, fraud, and abuse, making sure that you're funding the things that should be cutting. So there's times that there needs to be rescissions. There's times that items shouldn't be rescinded. But to say a blanket across the board, no rescissions, that's not how it works up here.
We understand your position on that, Mr. Chairman. I'd love to know where you stand on Obamacare tax credits. We've got a big set of expirations, is the word I'm looking for, coming up at the end of the year. And there are questions about whether you could actually make a deal with Democrats by extending them. There are also concerns, as they call it, the Obamacare cliff at this point, about what it would mean for Republicans if they expired. Should these be renewed?
I think you look at everything when it comes to such a divided Congress is on the table, and there's a lot of negotiations throughout the whole process. I have concerns with the premium tax credits that you're referring to. The fact that if you make $600,000 in Scottsdale, Arizona, you get subsidized for your health care. That's not appropriate. And so those kind of reforms have to be maintained if there's any step moving forward on extending.
All right, guys. Sorry.
Chairman Smith, can you talk
got
us
more
a little
leads
bit
than I
about
have
some
in a
of the talk
while.
We're hearing around a second reconciliation bill.
I'm kind of liking the short. I got to be honest with you, man.
Do you know, I've
I
said
like the
all
short
along
right here.
that we needed to have one reconciliation.
Front running the short
one
cross.
beautiful bill, because if you look at history,
I think if I can get in right here, I'm going to give it a rock.
the history of the
Maybe
United
not.
States,
I don't know.
where two partisan
Nah, I'm not going to do it.
bills
I'm not going to do it.
passed
I'm not
in the
doing it.
same year. That's
Hope I didn't
never
fake
happened.
no one. I'm
And
not
with
doing
these
it.
razor-thin majorities, I think it's going to be very difficult.
No.
So I'm glad that we were able to usher through the one big beautiful bill. We delivered the largest tax cut in U.S. history, the largest investment in border security in U.S. history, the most significant welfare reforms in U.S. history, just to name a few things. The second reconciliation bill, I think it'll be a whole lot more difficult to move through the system.
Well, I can only imagine going through that exercise once again, even though you can, doesn't mean you should. Jason Smith, it's great to have you back, Mr. Chairman. Thanks for joining us. He chairs the Ways and Means Committee in the Republican-led House, with us live from Capitol Hill here on Bloomberg TV and radio. They're going to head back home, Creedy, and come back next week to some pretty interesting challenges. As you mentioned, what are we down to, a dozen legislative days to figure this all out?
Absolutely. And the clock is ticking. It's still unclear if there's any way out of this.
That's true, as we just proved. I think in another conversation about this whole deal, Democrats and Republicans are going to have to get in a room at some point and figure their way forward here, and they're running out of time. September 30, the end of the fiscal year. Alongside Preeti Gupta, I'm Joe Matthew in Washington. We'll assemble our political panel next. Jeannie Shanzano and Rick Davis, only here on Bloomberg.
I don't know. Does anyone have a bias right now? Anyone have a bias right now?
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, and the NASDAQ 100 index, all in the red. Russell 2000 index of small cap shares, though, higher on this jobs Friday, up by about 0.2%. Strong evidence of the U.S. labor market is slowing, rippling through markets.
It's tricking me into the short right now.
Higher. We've got the 10-year yielding 4.07% with the 2-year right now 3.48%. Gold is up $49 the ounce, up by 1.4%. Spot gold currently at $35.94. West Texas Intermediate crude now at $61.79 a barrel. WTI tumbling by 2.7%. Bitcoin up 0.3%, 110,760 on a Bitcoin. Tesla has proposed a new compensation agreement for CEO Elon Musk, potentially worth around $1 trillion. A massive package without precedent in corporate America. Tesla shares, they're up today by 4%. Rivian Automotive cutting a small portion of its workforce as the electric vehicle maker nears the launch of a more affordable midsize SUV, the R2. Rivian shares, they're up by 5.5%. So again, recapping here, stocks lower, S&P down 28, down 0.4%. We do have the Dow Jones Industrial Average down 0.5. NASDAQ right now lower by 0.2%. And balance of power continues right now. Back we go to Washington. Once again, your hosts, Preeti Gupta and Joe Matthew.
Okay, Charlie, many thanks to Charlie Pellet in New York. And that's where we're going to stay, kind of, for this story, because Washington and New York City are colliding again. Doesn't really have to do with Wall Street this time, but in fact, the mayor's race. And Donald Trump is investing himself. We've talked about this a bit. With reports, it began as reports this week, that he might urge a couple of candidates, you've heard of them both, including the sitting mayor of New York, Eric Adams, convince them to drop out of the race. Curtis Sliwa, the other, the Republican, so we could get this down to a one-on-one, right? A two-way race between Cuomo and Mamdani, who probably got quite a kick out of this story. He was asked about it earlier this week in New York. Listen.
Today's news that the White House is considering job offers for Eric Adams and Curtis Sliwa. It is not news that carries meaning because of any impact it will have on this race. We feel just as confident as we did yesterday that we will win this race in November. This is, however, about an affront to our democracy. An affront to what makes so many of us proud to be Americans. That we choose our own leaders.
It's interesting, Creedy, because Donald Trump doesn't appear to be backing down from these reports. And he actually talked about this when he was asked. He's maybe looking for a job for Eric Adams at Housing and Urban Development, maybe in Saudi Arabia. Did you see this report?
I mean, the New York Times talking about a potential ambassadorship.
Yeah.
Has Eric Adams been to Saudi Arabia?
I don't know. They talk about Turkey a lot, but let's hear from Donald Trump. He actually got into this just last evening when he was at the table with the tech titans. Here's what the president said.
Are you urging or encouraging any candidates in the New York City mayor's race to drop out to clear the field?
No, I don't like to see a communist become mayor, I will tell you that. And I don't think you can win unless you have one-on-one, because somehow he's gotten a little bit of a lead. I have no idea how that happened, but I'd prefer not to have a communist mayor of New York City. And, you know, that's what he is based on his policy, if you look at his statements in the past. So I would like to see two people drop out and have it be one-on-one. And I think that's a race that could be won.
Generating a flurry of headlines. Trump wants two-way race for New York City mayor. Adams considering dropping out of race after secret meeting in Florida. Talks between Adams and Trump advisors center on Saudi ambassadorship. Apparently, Eric Adams will be in town next week now, according to the New York Post. Is going to sit down with Steve Witkoff to talk about next steps. We've got to play this to the panel. Rick Davis and Jeannie Shanzano are with us now, Bloomberg Politics contributors. Jeannie is in New York as we speak, democracy visiting fellow at Harvard Kennedy School's Ashton Center. Rick Davis, partner at Stone Court Capital, our Republican strategist. As the Democrat on the panel here, Jeannie, I don't know your thoughts of Donald Trump removing the Republican candidate from this race, but where is this going? Will the President of the United States dictate the next mayor of New York?
That is what Mamdani says he is trying to do. You know, and it is stunning. I will tell you, the local media here had something of a mini field day because the mayor was supposed to have a press conference that got canceled. Not that there was any direct tie between this, but of course, every little move he makes now is watched to see.
Oh, there's the short finally.
Announcing he's out of this race or
I knew I liked it for a reason,
I think
but
what's so stunning is that most of us thought that Mamdani was something of a gift to the Republicans. Like this was going to be the Republican foil. You know, he is the new Speaker of the House, Nancy Pelosi or AOC, and Republicans will be running against him for the next several election cycles. And yet what do we see is we see Donald Trump saying, nope, we want him out, which is quite stunning. And I thought it was interesting that Donald Trump has now recategorized him. He is no longer a democratic socialist. He is now a communist. But I guess we can't let little semantics get in the way.
Rick, weigh in here and maybe explore the hypothetical with us if you can. If this does ultimately become a one-on-one race with Andrew Cuomo versus Zohran Mamdani, does Andrew Cuomo have a shot here?
Well, you know, assuming that the Sliwa and Adams have probably somewhere between 25 and 30% of the vote, that shift makes a difference, right? I mean, that would be a material impact on the race if it all went to Cuomo. The problem is we don't know if they're all going to go to Cuomo. A lot of them are going to probably just stay at home. A lot of Republicans who back Sliwa are never going to vote for Cuomo. They're never going to vote for Mamdani, so they're not going to vote. So it's kind of hard. It's very much a moving average, right? But without them out of the race, there's no chance Mario Cuomo can win. And so it's really just a shot in the dark at this stage. You've got, you know, only a few months left before the election. This is going to take some time to sort of play its way out as far as getting these folks out, and a lot of attention on Adams and this offer potentially to become an ambassador or something like that.
Yeah.
But you know, we're not hearing much about Sliwa, who's got more support than Adams does, and he's already said, "I don't want a job." Which would make sense. Right. So how do you get him out of the race? Because he's really probably the more important candidate to move out of there than Adams at this stage, just because of the basis of he's got twice as much support.
Curtis Lewa got the whole makeover and everything. I mean, he's not going to drop out of the race now, I'm guessing, right? By the way, I'm guessing Andrew Cuomo would love to get some Mario Cuomo signs up there. I know we're both old, Rick, but Andrew Cuomo, of course, was who we're talking about here. But I'm curious, Rick. Jeannie touched on something important. I thought Mamdani was the foil that Donald Trump wanted for the next couple of years. Do you believe his intentions here?
Not really. I mean, look, you got to understand. And by the way, sorry for that Mario slip. I've been fighting him, for most of my career, so he's still embedded in my brain. Donald Trump has a lot of his business in New York. He has a lot of assets in New York. He is a Floridian now, but his entire life has been defined by New York. And I do think there is an aspect to that is, all his friends, a lot of the people sitting around at dinner last night, have homes in New York. They don't want to see a socialist, as Jeannie puts it, put in as mayor. And so, yeah, we're going to have a time of our life if he becomes mayor, and we can talk about this leftist surge inside the Democratic Party, and it'll be very hard for Democrats to run away from their largest city mayor in the country. But at the end of the day, it's bad for New York City. Donald Trump knows that. So I think a lot of what's motivating him is to do no harm to New York City, his assets, his businesses, his friends' businesses. I mean, it could be having a dramatic effect on his opinion about what to do about this race.
Jeannie, weigh in here. Again, explore the hypothetical with me. If Eric Adams is no longer in the race and he is being considered for many roles within the cabinet, whether it's at HUD or whether it's in Saudi Arabia, would Eric Adams make a good ambassador? What do you think?
Well, he hasn't made a very good mayor, so maybe it would be a better job for him than the mayoralty. He was subject not long ago to public corruption charges that Donald Trump's DOJ pulled back on, and those were dropped. So this
it's kind of drifting around, isn't it? Look, we went perfectly in and out of my zone there. Do you see that, guys? That zone I drew when I took my short, I got pounded in the head twice, and then I got it back and got some profit. I did all of that within this zone right here.
Well, let me
Boom and
ask this,
boom. But they were
because
back
of
here
the
when I took
blackout,
the
when we get
trade.
to
I
see
just
the
moved them
report
directly
next
over.
week, what would it take?
But it was
for you to
right here
hold
and
off
right
on a
there.
rate cut in terms of an
I got
inflation
pounded on
report?
this first one, and then it got this zone, and I went again and got it back.
It's not going to be a specific number. If you saw X number, then
Well, it's not even 2. So guys, we got an hour and a half to maybe find another entry and break out of this range. Until we break out of this range, though, there's nothing there. For me, anyway.
market, at least measured by monthly payroll.
B, the class is equal. Yeah. A lot of, you know what I've noticed, Big Banana, is I think a lot of people, if they've made their money before Friday, they'll take Friday off. You know what I'm saying? So if you're like a normal guy, you know, you make 2,000, 2,500 Monday to Thursday, why not take a 3-day weekend? You kind of earned it. You know what I'm saying? And so I think that reflects a lot in how the market will drift around on Friday. And then be super strong on Monday. Because I got to be honest, you know, if I was all set up the way I really want to be, and this is what I was doing for a living, if I made, you know, 2,000, 2,500, $3,000 solid money that I was depositing into my account, I'd probably take half a Friday off, or I'd maybe open the show and let it run the rest of the day or whatever, you know, or if somebody else wanted to hang out, and, you know, I'd figure something out, but I would take off, you know. But if I hadn't made my money and, you know, I hadn't been trading well, then I got to refocus and try and, you know, make a good day. Yeah, I know. It's total ass. It's total ass right now. We have to break out. We've been in this range since 11:18, or let's see, right here. We've been in this range since 11:30. So we're starting to go on like 3 hours now. Just right in this tight range.
driving down employment and driving up.
Sorry, guys, I lost the Bloomberg for a minute.
That's a difficult environment.
I'm still mobile.
I've been in the
I'm
Fed
set up
for coming
in
on
my
30
dad's
years,
room
so I don't know about
at my parents' house.
the long historical litany of complaints that someone might have. Overall, we just go there and do our job. That's what the law requires us to do. And so I'm not going to get into a political argument about it.
Well, let me ask it this way. One of the criticisms he makes is that the Fed has a gain of function problem. In other words, since the great financial crisis, you've had a lot of tools to the toolbox, including quantitative easing, forward guidance, things like that. And the Fed also strayed into climate change. You've heard those arguments before, and other things like that. The fate idea for inflation. Are any of those valid, and is anybody at the Fed working on whether or not they have worked?
I don't know. I'm kind of liking the short. If we clear this, if we clear right here, up here, I'm kind of liking it, man. Like this zone. If we can clear the zone, we got a pretty straight shot to this trend line, and then to the next area of historic area of resistance right here. Like first target. I don't know. I'm kind of liking this, guys. I might get in on this.
On overall dual mandate grounds, you have to
like to right here
look at 2023
ish.
and 2024.
All right, and right here.
Inflation, we're coming off a period where inflation
and right there.
was well higher than the 2% inflation target. But we succeeded in getting inflation.
Oh, the stochastics. Oh, man. Stochastics are super weak, though, to take that move. I really want to, though. You see the deviation from the VWAP is holding it up?
Any rich country in the world, we had that massive of drop of inflation without having a recession, without the unemployment rate rising dramatically. And that's what we should be trying to do. That is absolutely our goal, to carry out the golden path and to continue to carry it out now. And that involves figuring out the through line of where we are in the economy, not overreacting to 1 month's report or 2 weeks. What happened in the market 2 weeks ago? The law is very clear. If FOMC stabilizes prices, maximizes employment. Doesn't say anything about make administrations happy, make the stock market happy. None of those are in the mandate. Congress has given us the mandate.
You know, they might want to change that mandate down at 1600 Pennsylvania Avenue. Ultimately, Treasury Secretary Bessent says what's at stake is the Fed's credibility and political legitimacy. Have you seen signs, or has anybody suggested to you that either of those have diminished?
No, I agree with those sentiments. The credibility of any central bank, and the Fed especially, is critically important. So that when you go through episodes like happened coming out of COVID, where inflation goes way up, but if you look at market expectations of what inflation would be in the future, people believed the Fed when it said we're going to get inflation back down to 2%. That is a sacred covenant between a central bank and the American public, that it's going to do the job as the law requires it. Everyone I know involved with the Fed system is open to criticisms, critiques, and analyses of models. How can they be improved? Of forecasts, of the Fed tools. All of those things should be on the table. We should have an adult conversation about those. How can we improve our decision making? That's something different than should there be political interference with the setting of monetary policy? Should the central bank not be independent? And I'm totally opposed to taking away the independence of the central bank, as are unanimously all economists that I know of, because just look at places where there is not central bank independence. Inflation comes back, growth is slower, unemployment is worse. So we really don't want to go there, and I don't think that's what they're calling for.
Unfortunately, I have to ask you one more question. Stephen Myron looks like he will be joining you at the 16th and 17th of September meeting. He had some nice things to say about you in his paper on Fed reform last year. Was your appointment sinister? Does he have a point about a revolving door between political administrations and people who are on the Fed?
Look, I'm not going to get into policy. He said my appointment was sinister. I served in an administration, and some 12 years later, I joined the Fed. So I think it's a little strange to call that a revolving door. But I look forward to meeting Stephen Myron, and I'm proud he's coming from the Council of Economic Advisors, which was he had the same job I had 12 years before I joined the Fed. And there's a long history of CEA folks coming over to the Fed and doing a very effective job. I think anybody who comes and joins the FOMC is going to take the job very seriously. It's an important function, and we all just go down there and try to.
Good thing I didn't take the short.
Prices.
Now I like the long.
That's what the law says.
This is what happens when you're in a range. I like the short. I like the long.
Hopefully you'll talk to us shortly after the next meeting. I suspect it's going to be a very interesting meeting. Austin Goolsbee from the Chicago Fed, president of the Chicago Fed, former chairman of the Council of Economic Advisors, as he noted, someone with a vast experience in Washington and in monetary policy.
Sinister, huh? Interesting that he has not made up his mind yet. This meeting is days away.
Well, I kind of wonder. I mean, we don't have time to really go into depth with him, but I was wondering what other indicators he was expecting. There'll be another jobless claims report, but that's about it in terms of the labor market between now and the meeting. I think if you read between the lines, he's saying he's open to a rate cut as long as inflation doesn't come in bad.
The piece on the labor market that was crucial. He said, "Well, there's no layoffs just yet. That would be the alarm bell we're bringing." But anecdotally, we've heard of these hiring freezes, hiring pauses on Wall Street, in the tech space as well. Is it just a matter of time? Is that kind of where Austin Goolsbee is leading us?
Well, we're kind of at an inflection point. We don't know which way it's going to tip. Companies have been telling Fed officials for quite some time that they are on hold. They don't know what's going to happen to the economy, so they're not hiring. They're not adding to their expenses. We're starting to see some companies say, we need to trim because the uncertainty just goes on. But do they start to trim a lot of people? That's the issue. The Fed watches the unemployment rate because it tends to, as Claudia Sahm always says, tends to start going up fast once it starts going up. And it went up for the last 2 months in a row. So if that continues, then we might see that. But we just don't know yet.
Well, real pleasure to have you playing into Balance of Power today, and thank you for bringing us that important conversation. Michael McKee, always a pleasure to have you in Washington for that matter. He'll make his way back to World Headquarters in New York, where we have Bloomberg Business Week Daily standing by. Alongside Kriti Gupta in Washington, I'm Joe Matthew. We'll meet you back here at 5 p.m. Eastern for the late edition of Balance of Power. Right now, Carol Massar, Tim Stenovec. Take it away, guys.
All right. Thank you so much. Really appreciate it. Joe Matthew there with Kriti Gupta and, of course, our own Michael McKee. A very good afternoon, everyone. Carol Massar, Tim Stenovec, live here at Bloomberg headquarters. We're streaming across YouTube, Bloomberg Originals, and, of course, on TV and radio. And on a day where, the labor market, the U.S. labor market, Tim, front and center.
Yeah, certainly that's the big question that everyone has. Less so about what the Federal Reserve does later this month, but more so what the Federal Reserve does later this year. And if indeed, as the president has been criticizing the Fed, they are too late when it comes to interest rate policy.
Yeah, it's also timely. We do have strong evidence, though, that with the U.S. labor market slowing, we are seeing pressure on the equity markets. We're hovering near our lows of the session. You've seen rates move lower, bonds move up in terms of pricing, but those rates backing off on those greater expectations, if you will, that we get some kind of rate cut in just about 1.5 weeks' time. So coming up, we're going to talk all about the labor market. Constance Hunter, chief economist at the Economist Intelligence Unit, EIU, will be with us in just a moment.
Yeah, we're also going to be hearing from LinkedIn COO Dan Shapiro, and we're going to get into U.S. rates, Carol, because the reaction on the rate side of things is, obviously we're talking about stocks, but we're watching rates really closely, especially to the front end of the curve.
Exactly. And then we're going to get into the tech bromance that we have seen underway at the White House and also a possible $1 trillion payday for Elon Musk. So a lot coming your way over the next 60 minutes. First up, though, let's Let's get to the trade and your top business stories. Here is Charlie Pellet.
All right.
Welcome back.
Hi, thank you very much. Great to be back with you guys. As always, got to begin with a developing story right now. Keeping an eye on shares of Kenvue. They are plunging by 11.4% right now. Kenvue shares lower after the Wall Street Journal reported that Health Secretary Robert F. Kennedy Jr. is likely to link the company's Tylenol painkiller to autism. The report from Kennedy is expected this month, according to the paper. Again, Kenvue right now, KVUE on the ticker symbol, plunging by 10.7%. A down Friday, Jobs Friday, a bleak jobs report. The Dow, the S&P, NASDAQ 100 index, and now the Russell 2000 index, all trading lower. S&P down 40, drop there of 0.6%. We do have the Dow down 327, drop there of 0.7%. S&P down 40, down 0.6. NASDAQ down 0.3. The NASDAQ 100 index down 0.2%. The 10-year 4.08%. We've got the 2-year at 3.49%. The 30-year 4.77%. Gold up $50 the ounce, up 1.4%. $35.96. Major sell-off in West Texas. Intermediate crude down 2.7%. $61.74 a barrel. And Bitcoin now up by 0.2%. 110,622. Again, repeating the earlier story involving Kenvue. Kenvue shares falling after the Wall Street Journal reported that Health Secretary Robert F. Kennedy Jr. is likely to link the company's Tylenol painkiller to autism. Kenvue shares down now by 11%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much for that update. All right, we want to get to what is really our top story on this Friday. And there's a lot going on, but we have seen some coolness in the U.S. labor market as a result of that data point we got at 8:31.
Well, it depends. It depends.
This morning?
I think we were pretty on time with it. We got a notice, though, just ahead of that number that there were some technical difficulties. That's something that is kind of new to me.
It's definitely new to me as well. It's not the only time, but I think
This was on the government side, by the way, not on the...
No, not on the Bloomberg side.
Not on the
we were
Bloomberg
on it.
side.
It definitely, though, did mean a new narrative and reset when it comes to U.S. rates. Let's get to that part of the story. Bloomberg Intelligence Chief U.S. Interest Rate Strategist Ira Jersey with us from New Jersey. Ira, just the whole morning and how it played out. Unusual? What was top of mind for you there?
Well, it was kind of funny, right? We got all those that information that around 10 minutes after 8 that hey, the number might be delayed. It that's happened before. It's been a long time, but it has happened before that you've had delayed numbers because websites break, things like that. So I think they were teeing us up for it being late, and then we ultimately got it right on time, which was a little interesting.
Yeah.
But yeah, weak numbers across the board. You look at the revisions. June, we actually had job losses in the non-farm payroll series, right? We haven't had one of those for quite a long time. And, and you just see job momentum has slowed so significantly over the last 4 or 5 months that it's a foregone conclusion at this point that the Fed's going to cut. Now, the question is, and I keep on reminding myself, last year we said the same thing. I said the Fed's going to cut rates. They're probably going to cut 100 basis points, but it's going to be over 4 meetings. Wound up, they did a 50 basis point cut in September. That's some of the talk that I'm hearing from investors right now that, they're wondering, hey, is the Fed going to cut 50? I do think personally the bar is pretty high for the Fed to cut 50 in September. But we get a weak CPI report and maybe they do. The chances, I think, of a weak CPI report are pretty low, though. So 25 basis points is done. Now the question is October, December, January, March, and then do they go more? And that's where I think we need to start focusing on is that terminal rate. How far are they going to cut to? Are they going to go to only 3% or are they going to go to like 2.5%?
The criticism from the Trump administration for months on Jay Powell has been that he has been too late, that the Federal Reserve has been too late. Is the president vindicated with a report such as this?
Well, maybe one meeting, quite frankly, because if you look at the preponderance of data that was coming in the first half of the year, right through the May numbers altogether, they really weren't bad, right? And inflation still remains stubbornly high and above the Fed's 2% target. So the question always becomes, the Fed has a dual mandate. do they care more about the employment part of their mandate, or do they care more about the inflation part of their mandate? And I think at this point they can say employment's what's important, because if the employment situation stays where it is, so very weak, but not disastrous, or weakens further, right? So you start to get negative payroll prints, wages start to come down. You did see wages. That what worries me about this report more than even the payroll number was the fact that wages started to moderate. That's super important. But now you're at the point where, okay, look, if the job market gets really bad, we don't have to worry about inflation because prices are going to come down anyway because consumption is going to go down. So I think that now it's clear and obvious that they have to start cutting interest rates. Wasn't so clear in June, August, or the July meeting. You could argue maybe they could have cut, but I think that if I'm a Fed governor, if I were in their seat, June, I probably wouldn't have been cutting personally.
Well, one thing they certainly want to avoid is any kind of stagflation. Constance Hunter is with us as well, chief economist at EIU, the Economist Intelligence Unit, here in our studio, going to join in on this discussion. I saw you nodding your head a couple times. Jump in on what we got this morning.
So, I mean, if we look at that headline number, 22,000 looks really weak when we think about what would be replacement rate historically. However, as Powell talked about in his Jackson Hole speech, right, we have a decline in supply, that is the decline in the amount of people that are in the labor force, and a decline in demand. So that decline in the supply, which is now growing at like 0.2% year over year, if we sort of smooth it a little bit for 3 months, right? That is the denominator in the unemployment rate. And this is really, really important. We could keep growing at this pace. Unemployment rate's going to stay about where it is. So but as Ira was saying, consumption's going to weaken, because if you think about jobs growth, that's one of the things that feeds consumption growth. So there's a feedback loop where this slows consumption, slows demand, slows growth, and they're going to need to cut just to maintain that 4.2, 4.3% unemployment rate. But they probably need to cut a lot less than the market is thinking, given this shrinkage in supply. And if you ask me, that's what caused the big turnaround in equities today. People dug into the details of this number and realized, wait a minute, because of this shrinking supply, they might not need to cut as much.
So what does that mean to you? 25 basis points in September, and then that's it until 2026?
Oh, I think it's hard to know the exact timing. We think at least another 3 cuts over the next 6 months. It's going to depend on how sticky inflation is. What we've seen in core services, that's been remarkably sticky. So we're not even talking about the goods sector where we're seeing price increases, but everybody, dare I say it, it is going to be transitory. But the dirty word in economics, but it's that core good stickiness that I think if I were a Fed governor or a voter on the FOMC, that would keep me up at night.
Ira, I mean, is Jay Powell, though, feeling incredible pressure right now?
I don't know. I'm not sure if he, but I can't get into his head, right? Because I met Chair Powell a couple of times, but mostly in passing at events. But I would imagine that the Federal Reserve is trying to be as neutral as they can, and trying to look past a lot of the rhetoric coming out of the White House. I mean, you can't completely ignore it, right? For sure. But you look at Secretary Bessent, and if you look at his Wall Street Journal op-ed, which Mike just talked about with
Austin Goolsbee,
with Austin, yeah, they were talking about in there. There's some, I think, legitimate criticisms of what the Federal Reserve's done over the past 15 years, but it also misses some of the reasons why the Fed did some of those things over the last 15 years. Like yes, the government should be doing things from the fiscal side that back during 2007, 2008, we were waiting for Congress to do something. Congress didn't do anything. So the Fed had to step in because there was no action out of Washington, right? So, and should the Treasury Secretary be more involved? Sure, yeah, absolutely. Congress should maybe give the Treasury Secretary additional powers in times of financial emergencies and financial shocks to try and stabilize those, so the Fed doesn't have to, right? So there, and some of those were built into some of the reforms that have happened over the last few years. So it's not exactly I agree with some of what Secretary Besson said, and then other parts I think are much more nuanced. But nonetheless, like Fed reform, the Federal Reserve has not been seriously reformed for many decades at this point. And the world's changed, right? The financial world's changed, the markets have changed. So maybe there needs to be some type of, a shift. Now, should it be a complete overhaul? I don't think so. But
Right.
could there be, nuanced changes that Congress considers? Sure.
All right, one thing I want to get to, you mentioned Secretary Besson, another member, key member of the president's cabinet, joined Bloomberg Surveillance this morning. We're talking about the Commerce Secretary, Howard Lutnick. He addressed reliability of the data coming out of the Labor Department. Here's what he had to say to our team.
It makes it crystal clear you should have fired the person who was running that group, right? Because if you didn't fire him 2 weeks ago, you sure as heck would be firing him today. So they need new leadership in BLS. That's for sure. They need new tech in BLS. That's for sure. And Donald Trump needs to rely upon the numbers. America needs to rely upon the numbers. You can't have these bent former administration people who have a view and who want to harm the president. We need accurate numbers coming from BLS. And finally, we'll have new leadership to deliver. You fire the person. What do you learn? You learn that their technology is just, oh boy. But we'll fix it. We'll fix it.
That was, of course, U.S. Commerce Secretary Howard Lutnick this morning on Bloomberg Surveillance. Mind you, he does not oversee the Labor Department. He is head of the Commerce Department. But what we care about, Constance, is U.S. data, economic data, has been the gold standard. Is the data coming out of these departments still reliable?
Yes, I think it is. I think it's going to take, yes, it's still reliable. And the person, by the way, who is the acting secretary, Bill Wojciechowski, he has been acting secretary in the past. He has been there a number of times. This glitch that we had, while worrisome and concerning, but is not unusual in a world of technology. Who amongst us has not experienced technology glitches?
Mm-hmm.
I'm not saying it's acceptable or that we need to not have a very high standard, but I think that is the wrong thing to attach to. And if we look at the individual who's currently leading BLS, he has had this role in the past and there have been no problems or complaints. So it is a very robust system of the way we collect data. It's very robust in how we follow up with revisions. And the reason we have the revisions we have is because we want a timely read. That timely read is 90% directionally correct, right? And so it's valuable.
Yeah. Well, and I'm glad you went to revisions. I've only got about 30, 40 seconds left here. I mean, we are going to get a bunch of revisions next week, which will maybe show what about the U.S. labor market? Will our narrative change again? Just quickly.
No, it's still going to show probably some weakness because a lot of these revisions tend to be pro-cyclical. So as the market turns and the economy turns and gets weaker, then you wind up with weaker revisions as well, right? Where you get upward revisions when the market's turned upward. But I agree. Like I think generally speaking, the data that we receive is of reasonably high quality. The challenge is that the way that we collect data now has to be different because, again, the world's changed.
Mm-hmm.
And Mr. Lutnick does produce, his agency does produce a significant amount of data, like the Bureau of Economic Analysis, GDP data, the PCE report, all of those types of numbers come out of Commerce.
Let's not forget that. Folks, thank you so much. Great analysis on what we got early this morning and still continues to impact the trade. Ira Jersey, Chief U.S. Interest Rate Strategist at Bloomberg Intelligence, and Constance Hunter joining us right here in studio. She, of course, is Chief Economist at the EIU. When we come back, a Tech Titan soiree at the White House and maybe $1 trillion for Elon.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Strong evidence that the labor market is slowing, rippling through markets at this hour. The Dow, the S&P, NASDAQ, all in the red. Russell 2000 index of small cap shares bouncing between small gains and small losses. Higher now, up by about 0.1% on the Russell 2000. The S&P is down 32, drop there of 0.5%. The Dow is down 266, down 0.6, while NASDAQ, the composite index, down 42. A drop there of 0.2%. The 10-year at 4.08%, with the 2-year 3.49%. Gold up almost $50 the ounce to $35.94. That is a gain of 1.4%. A retreat for crude down 2.5%, 61.88 on WTI. And Bitcoin up 0.5%, 110,913 right now on Bitcoin. Alphabet's Google has been fined $3.5 billion by the European Union in order to stop favoring its own ad technology services in a move that risks further inflaming tensions with President Trump. Alphabet shares, they're up right now by 0.5%. Recapping stocks lower, S&P down 33 points, a drop there of just about 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, time to talk about the world of technology, because this, as we had kind of an amazing visual yesterday at the White House. Meta Platforms' Mark Zuckerberg, Apple's Tim Cook joining tech industry leaders in touting their pledges to boost spending in the United States on artificial intelligence. It was all during a dinner hosted by President Donald Trump that highlighted his deepening relationship with Silicon Valley. The execs making comments at the dinner, among them Apple's Cook, here in exchange with President Trump.
We are all different in some ways, but we all believe in the power of technology to improve people's lives, and that is the thing that binds us all together.
And Tim, how much money will Apple be investing in the United States? Because I know it's a very lot, and it's, you were elsewhere, and now you're really coming home in a big way. How much money will you be investing?
$600 billion.
$600 billion. All right. It's a lot of jobs.
We're very proud to do it.
That's great. Thank you very much.
Thank you.
Appreciate it.
Thank you, sir.
All right, Apple CEO Tim Cook last night at a dinner at the White House, along with other big tech leaders. Of course, you heard President Trump there. And Tim, that eye-popping image of those CEOs at the dinner. We also had an eye-popping story about Elon Musk as well. There's like a lot going on here.
Yeah. Okay. So let's talk about this. And with somebody who knows all about it, we've got Ed Ludlow with us. He's co-host of Bloomberg Technology on Bloomberg Television, Monday through Friday, 11 a.m. Wall Street time. Check it out. Ed joins us from the Bloomberg News Bureau in San Francisco. First up, Ed, that meeting of tech CEOs. You had Tim Cook there. You had Mark Zuckerberg there. Sam Altman, Sundar Pichai, Sergey Brin, Satya Nadella, Bill Gates. Even members of the Trump administration who previously worked in technology or in venture capital, David Sachs, for example. What was the image that this portrayed of the relationship that Silicon Valley or technology or the biggest companies in the world has with the White House?
Well, there was another piece of news that came out with it, which is almost another quid pro quo, right? Which in that clip, you heard President Trump asking Tim Cook, the Apple CEO, how much are you going to invest, Tim? Oh, $600 billion. And the same was put to Mark Zuckerberg, who also said $600 billion. But the background comment the president had made is that tariffs for semiconductors specifically are coming. And it's those that have pledged to invest in the country that will be spared from them. That's why we look at it a little bit like a quid pro quo. But AI is at the heart of this administration's platform, right? Deregulating to allow for faster building of data centers. And those people around the table, bar a few exceptions and missing people, those are the names that are leading on that front.
Yeah, it's interesting. It's funny. Tim and I were talking kind of before going, because it's kind of a little bit remarkable to see these images. And I think there's at times been a love-hate relationship between the White House and Silicon Valley. What?
I was surprised to see Jared Isaacman on the list, Ed, because he was supposed to be administrator of NASA. He's of Shift4 Payments, of course, somebody you've talked to and you know pretty well. What's good? The president pulled his name from the list and pulled his nomination. Well, why was he there?
I think it's important to tell the truth. I don't know why he was there. In chatting with Jared recently, I don't know that he's worked out what his next thing is going to be. On social media, which is a dangerous place sometimes, a lot of people would have observed that Elon Musk was not at the table. But they would say, oh, who was there representing Elon Musk? Surely it was not Jared Isaacman, because of the situation you just explained, and there were other people there at the table who also have connections to Musk. But yeah, I promise you that when next I speak to him, I will ask him specifically, how'd you end up at that table given the president's recent handling of your nomination?
On the Elon Musk thing, he was asked about this on social media. He replied to somebody and said, I'm not able to make it, but I will have somebody represent me.
That's what I'm alluding to, yeah.
I mean, I'm looking at the list right now.
Is that it?
I don't see a representative from Tesla or from SpaceX there.
Yep. I think that we're just going to have to let the reporting be done.
Okay.
And if we still care, we will confirm who Elon's representative at that table was on the night, but we don't know.
Does he really care? Because, I don't know, he might get a compensation package worth about $1 trillion. So is it really that important anymore? What do we know about this?
Yeah, I think, it's been a very long day reading a 300-page document, and there's so much detail in it. The simplest way of putting it is $1 trillion after 10 years if a very large number and sequenced series of events take place. Tesla and Musk have to meet many operational and financial milestones for the full trillion to be realized. And there are many other safeguards and securities from Tesla and Tesla shareholder standpoint baked into the proposal that would keep Musk focused on the task at hand. We can get into them, but for example, in order to access the last 2 tranches of stock, Musk has to pay for them up front, almost like an option's being exercised at the price that the shares closed September 1st. But he also has to participate and sign off on the succession plan. So he has to work on his own successor in year 8, 9, and 10 in order to get to not just the reward from money, right? We're not talking just about compensation, but in his case, he wanted the voting rights as well. And they're staggered over that 10 years.
So who is this a win-win for? And I only ask because Tom Maloney has also put out a story of Bloomberg News and says that Elon Musk got this $1 trillion with genuine threats to quit Tesla. So was the company really worried about losing Elon? So was he in the driver's seat on this? Because this package sounds like there are some guardrails around Elon in a big way.
Yes, Tom Maloney has reported it beautifully. If you don't read the full 300-page proxy, read Tom's report. The committee representing the board met with Elon Musk 10 times in negotiation of this package. They delayed the annual shareholder meeting as they negotiated this package. They hired a number of outside firms and advisors to get the package at least over the line. I say over the line, it still has to be voted on by shareholders in November. Musk's point was, if you do not give me this voting power of 25% or greater, I will go and do the things that I'm interested in elsewhere, XAI, SpaceX, etc. What did the board get in return? Section A51 or page A51 of the proxy, point number 2. We have got reassurances from Elon Musk that he will wind down his political activity. So it's not a sort of blanket all going to Elon. The board has made, including with the operational goals they've set for Elon, these are really hard. They've got things to protect them in making sure Elon Musk is focused at the same time.
Yeah, $8.5 trillion in market cap from $1.1 trillion today, Ed. How does Tesla get there over the next 10 years?
Yes, so Tesla has a market cap today of about $1 trillion, and one of the financial milestones for Elon to realize the full $1 trillion of comp is for it to get to $8.5 trillion. It's very interesting when you set that against the operational goals. The operational goals are very much in line with AI. Grow a robo-taxi fleet to 1 million units. Robo-taxis, 1 million, taking people on ride-sharing platform. 1 million humanoid robots. But the board also tucked in there a goal for Elon Musk to sell 20 million Tesla vehicles total and deliver them to consumers. And it shows that the board fought to keep Elon Musk focused on Tesla's bread and butter business, even in the likelihood that that $8.5 trillion value in the long run is more closely aligned to the big robotics and AI stuff than it is in the sort of now sort of archaic business of building vehicles and selling them to consumers. You know, that's kind of how I think the market looks at it.
God, that's massive. Are we even crazy to think about an $8.5 trillion market cap for Tesla?
When I first moved to California in 2018, which ain't that long ago, right? NVIDIA was a company that made GPUs that for video game developers and went into high-end consoles and computers for video games. It was a few $100 billion. It's now a $4 trillion market cap company. It's the easiest example for me to cite over a period of less than 10 years of a company dumping in trillions of dollars of value.
Can I just ask you why all this stuff about Elon's compensation is happening now? Is it just they were having meetings and it's all coming out? Is there anything about the time or what?
Well, a proxy needs to be filed in advance of an annual shareholder meeting, right? And the annual shareholder meeting has to happen at some point. It's happening in November, so there's a chronology to it, and the auditors have to prepare it. That's quite boring, but that's part of the answer.
One of the things we need to ask too is that the shareholders are going to decide too if Tesla should invest in his AI startup xAI. Significant?
Yes.
I mean, it does feel like Elon's rolling everything into one, or wants to.
This is a shareholder-initiated proposal. Many shareholders tried to get the proposal on the docket. In the end, they went with just one by a single retail shareholder. xAI, you can use Grok. I used it this morning, a voice assistant-based chatbot in Tesla vehicles. Bigger picture, xAI has a very different model to, say, Anthropic and OpenAI. Despite all the headlines about all the money those two AI startups have, OpenAI and Anthropic, they basically lease the data center capacity. They don't own the assets outright. xAI does. It's committing tens of billions of dollars to buy the GPUs and put them in a data center. So, you know, the rationale is that there's synergies, that the work xAI is doing on software can benefit Tesla owners and Tesla vehicles. But it's also a bit of a lifeline. And if you allow me to do the plug, I'm going to write about this in my newsletter and column on Monday, because, you know, that's the thing that shareholders also have to face. You know, does xAI on paper have the ability to stand on its own 2 feet? Or is this going beyond an investment by Tesla? Is it a bailout of one Elon Musk company of another?
And just in the last 40 seconds, to push back on this a little bit, as Mark Gurman has told us, some of the LLMs and the tech, there's a concern that this could be a bit of a commodity.
Correct, and also the benchmarking figures for Grok 4 are very good. But again, it's a business model-based thing. Elon Musk is committed to moving super quick, committing capital to buying GPUs, and the model's completely different. Again, it is not a binding proposal. It is a shareholder-initiated one. And if it's successfully passed in November, then the board needs to look at it and decide if it is a prudent and beneficial thing to Tesla to make that investment. But as I reported earlier in the year, SpaceX has put $2 billion into xAI.
Right.
So why not Tesla?
Oh, and by the way, Ed, you can promote anything you want on our air. You're Ed Ludlow. All right, we're looking forward to the newsletter. Shares of Tesla, by the way, up almost 4%. Ed Ludlow, co-host of Bloomberg Technology. Another view on the U.S. jobs market. The COO at LinkedIn is next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg Jobs Friday. Stocks selling off. The Dow, the S&P, NASDAQ are all declining. Strong evidence that the U.S. labor market is slowing is rippling through markets, driving stocks lower and bonds higher. The S&P down 31 at 64.70, down by 0.5%. Dow Industrials down 218, down 0.5%. The NASDAQ Composite Index down 51. For NASDAQ, a drop of 0.2%. The Russell 2000 Index of small cap shares back in the green, up right now by 0.1%. The 10-year 4.08%, with the 2-year 3.50%, the 30-year 4.77%. Gold now up $48 the ounce, up 1.4%, $35.94. And West Texas Intermediate crude down 2.4%, $61.97 a barrel. Apple's annual sales in India hit a record of nearly $9 billion in the last fiscal year, signaling growing consumer demand for its flagship devices as the company ramps up its retail footprint in the world's most populous country. And of course, coming up next Tuesday, Apple's biggest product launch event of the year will introduce its next generation iPhone lineup. Right now, we got Apple little change, down under 0.1%. We continue to keep an eye on shares of Kenvue after the Wall Street Journal reported that Health Secretary Robert F. Kennedy Jr. is likely to link the company's Tylenol painkiller to autism. Kenvue shares are plunging by 15%. Recapping, S&P now lower by 0.5%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week Daily on this Friday. Carol Massar along with Tim Stanovic. We know the labor report certainly top of mind today, and we want to kind of stay on it for a little bit more because we did see job growth moderate materially in recent months, and openings have declined, weighing on broader economic activity. Just a reminder, in case you've been under a rock today, non-farm payrolls did increase 22,000 in August.
I mean, the range, that was a low end. The range, remember, was 0 to 144,000.
Because you highlighted that yesterday.
And nobody had negative.
Right.
But
no.
22, it's not good.
No, and those revisions showed employment shrank in June for the first time since 2020, that jobless rate ticking up to 4.3%. We got a good voice on this, Tim. Dan
Shapiro is COO of LinkedIn. He joins us from Sunnyvale, California. Dan, you got great data on the LinkedIn platform. Was this report as shocking to you as I think it was to a lot of folks out there?
Well, the labor market right now, it's slow but steady. And I think that we've seen pockets of continued slowdown, but also pockets of strength. I think on a global basis, healthcare is probably the area of greatest positivity around the world. I think the conversation that a lot of people are having right now is about what's happening with new college grads, entry-level roles. There has been some reports of slowdown in the amount of entry-level hiring that companies are doing. And if you know someone that's graduating from school right now, perhaps you're worried about them landing their first role. And so it might take them a little bit longer. It might be a bit more competitive than we have seen in prior years. I think on the flip of that, one of the advantages that people coming out of college right now have is that companies are looking for people comfortable with AI tools. And oftentimes they find that new college grads that haven't been in the workplace yet, perhaps haven't developed all of their habits around the working world, they might be more flexible to adopt some of the new technologies that are so in demand and the skill set so in demand by employers.
So let's talk a little bit about this. Shout out to Kevin Gordon out at Charles Schwab. I saw him post this chart earlier in the day. This is the unemployment rate for those who are between the ages of 16 and 24. So those young people who you mentioned, Dan, that unemployment rate now at 10.5%. That's the highest it's been going back to April of 2021. So, you know, in the recovery of the COVID pandemic, or the sort of the peak of the COVID pandemic, a few months after that. What you talked about AI obviously being something there that's affecting this, but I'm wondering what that does for longer term career prospects if people early in their careers just cannot get off the sidelines.
Well, I think that for new college grads, there's definitely the process of landing your first job. But I think the thing that employers are really, really focused on right now is they're trying to figure out how to retool and upskill their workforces for an economy that is really focused on AI as a way that you win in your market. And they look at new college grads, people earlier in their career, and they're thinking to themselves, these might be the people that are more flexible, that are more fluent with AI, that really can help us go through the transformation that we know we're going to have to go through as an organization. So my advice to people that are earlier in their career is become fluent in AI tools, showcase to employers that you know these tools, that you can bring them into effect in your new work. And I think we're going to find that the people that build great careers are the people that use this opportunity as a chance to really show what they're capable of and help organizations go through a transformation that honestly a lot of leaders are nervous about.
What does it mean to be fluent in AI tools? Because 2 years ago, we were being told, hey, prompt engineer, that's the hottest job around. Well, guess what? Everybody knows how to be a prompt engineer now. So those jobs don't exist at all. What does it mean to be fluent in AI?
It's changing so quickly. In fact, there's this great stat. We recently surveyed folks and realized that 51% of workers around the world, they think of keeping up on AI tools as like a completely other job that they're doing on top of their day job. And so what was, hip and new 2 years ago is now becoming, not what people are focused on. I think the key thing about AI fluency is that on a daily basis, you look at the things that you're doing and you ask yourself, is there something that I could be doing better by using AI? Now, if I think about myself personally, that might be writing the first draft of a presentation. It might be that I'm trying to get up to speed on new tariff legislation. And so maybe I'm not as familiar with that. And I want to use AI to help educate me on how this might impact the markets that I'm participating in. This is something that I definitely did earlier in the year as there was a lot in the news about tariffs. So I think it's a mindset. There is a mix of understanding what tools are out there and what they can do, but also just to have a habit of bringing it into your daily work and honestly showing your colleagues around you what's possible when you find that nugget.
And yet, where is it that people need workers? Because we talk so much, Dan, about folks who are building power plants to meet the demands of AI, the energy demands, that there's not the engineers around. If you need a contractor or a plumber or electrician, they're not around. So I don't necessarily see the AI connection there. I mean, where else are there the disconnects maybe in our labor force? And how is the pushback against immigrants impacting the ability for people to maybe find workers that they need for different types of jobs?
Yeah. I spend a lot of my time talking to heads of HR and talent at companies in the US and abroad. And, even though hiring has slowed, they consistently still say that one of the biggest challenges that they have is finding great talent for whatever skills they're looking for. Sometimes those are skills that might be more out in the field. Sometimes those are more corporate roles, but there is still an insatiable need to find great folks. And one of the products that we announced earlier this week is we believe that agentic technology, it's going to change how people do their jobs, but it's also going to change how companies hire. And so we launched a product called Hiring Assistant that is all about helping recruiters find talent that they otherwise wouldn't have been able to find and really allow organizations to find that person that meets the needs of their skills. And in some cases, that's going to be a role where AI skills are a core part, but in other cases, it'll be the
All right, I think this is starting to run out of steam.
building the power plants that facilitate this.
I think we're almost ready for the short.
Hey, I am also curious what you're seeing about.
Actually, I'm gonna front run the short right here. I really believe
jobs report this morning.
that I'll be
Order
okay if I
filled.
get in
Did
here.
see hourly average
But I'll
rate
stay tight
earnings
in case
come
I'm
in,
wrong.
Let me just look here. Month over month, up 0.3%. Year over year, up 3.
And of course, it runs right against
Some
me.
concerns though about
I
we're
knew
starting
better.
to see some softening when it comes to wage gains. What can you tell us about what you are seeing via the platform when it comes to compensation?
I don't have any unique data offer on compensation per se. I know that one of the things that a lot of people are reporting on is that hiring trends have slowed, but wages have maintained fairly stable. So it'd be interesting to see if that persists. I do think companies are looking at their P&L and they're trying to figure out how to invest in AI tools while continuing to build the teams they need. And so in some cases, they're looking at the number of the people that they're hiring, but they're also looking at their compensation structures.
All right, gonna leave it there. Hey, listen, thank you so much. Dan, have a great weekend. Dan Shapiro is Chief Operating Officer of LinkedIn, joining us from Sunnyvale, California on this Jobs Friday.
Hey, taking a look at markets in the red right now, down half a percentage point on the S&P, the S&P 500, the Dow down just about the same, the NASDAQ down 0.2%. When we come back, stocks on the move with Isabel Lee. That's next on Bloomberg.
Target filled.
All right, cleared that. I'm gonna let her run. So I'm in a short, guys. I just cleared 3 contracts off at the 20. I'm gonna let this run. I'm up about 1,000, 1,100 where I sit. If we clear the 50, then I'm gonna add to my second target, but I'm gonna just let this run. In a short, guys, in a short. Trying to front run the short. Already taken 3 contracts off for about 600 profit. I'm letting the last one run at break even. If this candle closes lower, or if the next candle opens lower than where this one opened, I'm going to move my stop down. So I'm hoping we break through the 20 here. Cha-ching, mofo. Ching, motherfucker, ching. Ching, motherfucker, ching, ching. Ching. All right, let's finally roll over. Let's see if I nailed it. Looking good. I'm gonna move my stop down. Just in case the 50 is it. Hey SM, how you doing, bud? I'm in a short. Did you trade today? It's been a pretty light day. I think a lot of people took the day off. You got work tonight?
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stenbeck on Bloomberg Radio and Television.
All right, everybody, you are listening to
Okay, good.
Business Week Daily. Carol Masser along with Tim Stenbeck.
I'm hoping this short breaks the 50 EMA because I think we're going to go right to my target if we do on this
Here
one.
in the house. Where would you like to begin?
The one and only
I'm up
MicroStrategy.
1,200 right where I am right now. I might move that stop
MSTR,
loss.
so the stock has fluctuated. I know, me too.
Oh, is it called strategy now?
Yes.
Shoot, how did I
So
miss
in
that?
headlines, it looks like Sailor's strategy, but his strategy is to buy Bitcoin. So the stock
I'm
has
not moving.
fluctuated.
Strategy's simple.
It's very simple.
It takes me out fine.
Buy
If
Bitcoin.
it runs
So the
fine.
stock is now down.
I'm not touching
up
it.
2%. It was down earlier, so fluctuating between gains and losses. But why are we talking about strategy today? Because it's emerging as a new contender to be part of the S&P 500.
Nice.
So that is a big thing. They recently emerged as
Come
a
on.
candidate, and this is a scenario that seemed far-fetched just a few months ago. So what changed? Last quarter, they had a $14
Still got a
billion
minute 13 to the
unrealized
next
gain, and
candle.
this delivered the profitability requirement for the index eligibility, in theory, under current rules. So S&P is different from other indexes because there's a little bit more nuance there. There's what they call committee discretion. So even if a stock is eligible, it doesn't mean it'll be included. In fact, a lot of these sell stocks have at least 20 in their list. But of course, strategy is the one that gains attention. And it's really interesting because
And we
it's
got to be
a
careful. This isn't the golden candle.
approximately $16 billion. And of course,
Do I even need to mention that this
You
is
just
got
to get to 17.
Just supply
It
and
would be.
demand,
It would be a big win if it happens. We should
If it
note
happens.
Coinbase and Block are already in there, so there's sort of like this fintech idea that maybe this
That
could
is
work.
true, but an analyst told me that it's hard to ignore a player this big. So the minimum threshold to be included in the S&P 500 is 22.7 billion. MicroStrategy or strategy is nearly 100.
Yeah.
It's really wild, but I must say
15
again, that
seconds. I'm hoping this
one or
next
two
candle is
dozen
the push
top
down.
eligible
I'm
companies,
going to
but
add.
strategy is of course the one gaining.
In AppLovin, Robinhood Markets, Carvana. It
Yes,
sounds like you
yes.
know a lot about this. Maybe you have a story that's among the most read on the Bloomberg terminal.
Hopefully it's among the most read.
that focuses on this
Yes,
exact
yes,
thing. So check that
definitely.
one out if you
No,
want more
it's
information
gonna hold.
there.
It's going to
Block
turn
Code-
into
Am I
support.
crazy?
Wait, okay,
So
you don't wanna
back
go
in
right
like
on that.
2022, MicroStrategy was like a $14 stock.
Yes.
Like I know that doesn't mean
Well,
anything.
go back and look at Bitcoin and what it was doing then.
Okay.
I must
That's
also-
that's the but that's
I know,
the whole point.
I
That's true.
know, I know.
And
I don't know.
quick side note, MicroStrategy is already in the Nasdaq 100, but
Yeah.
arguably the S&P is a much bigger stage, almost double in size. So still, it's a
Yeah.
big
And,
deal.
and it means even if you don't want to own Bitcoin, you're
Yes.
going to own it if it joins the S&P
And because of the
500.
cold logic of investing, Vanguard, who we know has eschewed digital assets, they're one of the biggest holders.
All right, I'm done for the day, guys. I'm not going to take another trade.
Speaking about what investors are holding on to today or buying into, this is
I got all the getting out of that.
100 and S&P 500. We are talking about.
I'm done for today. I'll take my 1100 and go home.
So it's helping OpenAI design and produce an AI accelerator that will start.
How's
to
school
deploy
going,
in
SM?
So this is a lucrative sphere that is really dominated by NVIDIA. So obviously, Broadcom investors are cheering the move. You see their biggest intraday rally since April, and of course, you see NVIDIA slump.
Regulators. You regulate any
Hey,
stealing of his
Darth
property.
Gizmo.
Damn good too.
I like
But
that.
you can't
Darth
be any
Gizmo.
geek off
How
the
you
street.
doing?
Gotta be handy with the steel if you know what I mean. Earn your keep.
Oh, what kind of class is it?
Regulators, mount up.
You got to be handy with those entries, if you know what I mean. You got to earn your keep around here. Forecast traders, mount up. What's up, Darth Gizmo? Thanks for stopping by. Management class. How are you having trouble with a management class?
Speaking of cycles,
Is it like
is that
HR or
major
something?
in some sort of
Where you got to be,
cycle right
you
now?
got to be a woke manager where it doesn't make sense.
Down almost 20%. That's after
He's
they
an old
pushed out
fuck.
disappointing investors for the third straight quarter. Yes, and
What
they're
makes
showing
him
the
old?
lowest level since the onset of the pandemic, and investors
And
were
it's
so
retarded.
that at least
SM doesn't like calling people retarded, so he says regarded. What's the syllabus look like? Does it look like it was drawn on a whiteboard
a lot of my peers do. I mean,
in like the 1970s?
Full transparency. No pun intended.
Dude, whiteboards are the best.
You're going back in time.
Hey, Darth Gizmo, are you a futures trader? Do you trade, buddy?
Understand that. But I agree that I think the quality of
Yes,
what they have
a
is
lot
great.
of my leggings from my college days, which was yesterday.
Heard you bounce.
No, but you still have them, right?
You know, a lot of people, they follow, then they bounce before I can talk to him. He must understand what we're doing if he followed.
Competition in the space, and you walk around New York City in the summer, and what do you see people wearing? It's
Like
not necessarily
what kind of stuff is on the syllable or syllabus?
Aloe, sweaty
Hey. All right, cool, man. Hang out. This is a lot of people are trying to learn by hanging out here. We have a structured trading day, and we do prop firm trading on the ES and NQ futures here every day.
And it rarely goes on sale.
I guess I'll
Lululemon.
yes. Caroline, I know our stuff.
Okay.
Yes.
Do you know what like a prop firm is, and do you understand futures yet?
Affected by the de minimis exemption. This is where low value shipments under 800.
I need to start. We got a Discord too if you want to ask questions in the Discord. I'm slowly filling out data in the Discord for new people.
Both a revenue and EPS outlook. So
Well, how do you know it's unnecessary if you've never taken the class?
Lululemon stuff just lasts so long.
Oh, okay.
You don't have to replace it so often.
Oh, that's true.
I don't
Great
know.
point.
Maybe. I have stuff that's so old and I've had
Mine too.
forever. Thank you so much, Isabella.
Let me know when they're up. I don't
I
have my extra computer where I watch.
Spotify or anywhere
I'm mobile.
you get your podcast. For those watching on TV, the close is coming your way, but we continue on Bloomberg Business Week now.
Yeah, we got Dr. Misty Hegnes coming on, talking all about the jobs report and Swiftonomics. That's next on Bloomberg Business Week Daily.
Is the ad gone?
This is CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. The Trump administration is planning to use a military base for hundreds of federal agents in an upcoming immigration enforcement crackdown in Chicago.
We will not allow the diversion of taxpayer dollars that were appropriated for military readiness and military training
Okay.
from Great Lakes to be diverted from that mission.
The agents could be deployed in a month.
Hey, is the ad down? Hey, Darth Gizmo.
Reaction to the possibility National Guard troops could be sent there to assist in crime fighting. Katie Weiss reports.
President Trump has said that it would only take 2 weeks to address what he calls a crime problem here in New Orleans, that it would be, quote, much easier than D.C. However, city data here in New Orleans shows that crime is actually down pretty much across the board in almost every category.
President Trump is expected to sign an executive order that sends a signal to countries that wrongfully detain Americans. Linda Kenyon has that.
The executive order sets up a new designation of
Hey,
state sponsors of
Darth Gizmo, do you know what futures are yet? Or have you looked at prop firm trading? Or where are you at with your research?
that engage in those actions often use Americans as political leverage. The State Department presently issues
I'm done taking trades for the day, guys. I'm up 1,100. I'm kind of good with that. I do think we're gonna eventually roll over to the lows of the day. I do believe that, but I don't know when.
Linda Kenyon, CBS News, Washington.
No, a lot of it is hard to understand.
CBS's Charlie Daggett at the Pentagon.
Okay, well, if you want to hang out here, we can kind of help you like get your base started. Do you use like NinjaTrader? What do you use for a charting service? Or do you even understand what a prop firm is? Because we don't risk our own capital here. We try and qualify prop firm accounts so that we can get funded and get payouts without having to risk our own capital.
Pharmacists to administer the vaccine to patients as young as 3. Michael Wallace reports it's one of a growing.
Are you familiar with like a prop firm? You're looking at the NASDAQ futures, the NQ. That's what chart you see now. And I built my own strategy. I programmed this whole strategy. It's called the forecast. So what we do every day is I go live at 8 o'clock. I set the chart up for the day. I go through the news events that are happening. And then, wait for the open. And then I go through and call the chart out, set up my entries and possible take profits. And we just talk about different indicators. We talk about strategy. We talk about mental psychology for trading, all the things that you have to conquer to try and be profitable. But it's a long road to go if you're starting from scratch. So I would make sure that you at least understand what margin is, what trading or what futures are in prop firm. And you could follow along here pretty easy. We could get you a basic chart set up and it wouldn't take you long to figure out to understand what we're doing,
Pennsylvania Social Services call uncovered evidence of kids held in a makeshift dungeon. Here's Steve Kathan.
Pennsylvania State Police found 5 children ages 5 to 14 locked in a home dungeon south of Pittsburgh with boarded up windows, feces and fleas, limited clothing and food. Police say the 65-year-old father locked the children's bedroom door from the outside using 3 deadbolt locks, trapping them throughout part of the day and all night long. The room had video cameras hardwired to the father's room. The parents face several reckless endangerment charges. Steve Kathan, CBS News.
Warner Brothers is suing an AI company called Midjourney for copyright infringement. The lawsuit claims Midjourney allowed users to create AI-generated images and videos of copyrighted characters like Superman and Bugs Bunny. This is the third lawsuit against Midjourney. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy.
Let's see. Gotcha. Yeah, I'll have to look into the prop firm side of things. First, I've heard of that. I've heard of futures, but haven't looked into them much. Well, what we do here is futures. So if you wanna learn futures, hanging out here and asking questions, you'll be able to pick up on it pretty quick. But I would do a YouTube search on, what are futures, watch 2 or 3 videos on that. So I'll give you the 3 things I give people that you should research over the weekend, and then stop back and ask questions, and we can help you get a chart set up and stuff. But you wanna go to YouTube, do a search. What are futures in trading? What is the futures market? What is a futures market? What is margin? You need to understand margin, and you need to understand what a prop firm is and how to use one. And if you understand those 3 things, then you can ask, you'll know how to ask questions that I can really help you move forward with without like getting you confused and giving you too much information at one time. That's how a lot of the guys that are hanging out here every day started. And then we've got a really good prop firm deal. Once you actually understand what it is and what you're trying to do, if you want to do that, I don't profit from any of it. I found the best way to get started quickly
Reminded us he's a taxpayer. And we are living in an interesting time, right?
without really putting any capital at risk.
The largest single-site enforcement operation in the history of the Homeland Security Department's investigative arm. We've got a raid at a Georgia EV battery plant site. So we've been following that story for you. It is among the most read on the Bloomberg on this Friday.
As Carol mentioned, we are in the final hour of trading on this Jobs Friday, this holiday shortened trading week. Charlie Pellet's got an eye on everything that's happening. Hey there, Charlie.
Hi, thank you very much indeed. The Dow, the S&P, NASDAQ, all in the red. This Bloomberg Business Flash is brought to you by Oracle. Attention, growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Just getting word that Anthropic is going to pay $1.5 billion to resolve an author's copyright lawsuit over the AI company's downloading of millions of pirated books, one of the largest settlements over artificial intelligence and intellectual property to date. As we have been reporting, Jobs Friday, stocks lower. S&P down 25 right now, 64.76. That is a drop of 0.4%. The Dow down 214, down 0.5. NASDAQ lower by 0.1%. The 10-year yield 4.08% for the 2 years, 3.50%. Gold now up 1.4%. Spot gold is surging $49 the ounce to $35.95. West Texas Intermediate crude tumbling 2.2%, 62.05 a barrel, and Bitcoin up 0.7%, 111,238 on Bitcoin. Again, recapping, S&P down 0.4% for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yeah, just stop back by. Shoot questions in the chat. If I can't answer right away, don't run off. I work full time while I'm running the stream and trading. So if I gotta work some leads, I'm in sales. I can't be on the mic. A lot of the guys know that, so they'll let you know. And hey, go hop in the Discord. There's guys that'll help you get started too. There's guys who, 2 or 3 guys will hop in a room and kind of chat about strategies and stuff like that. There's a few guys that like to do that. But yeah, definitely join the Discord, research those 3 things and really get an understanding. Then just stop back by, ask questions, and, we'll maybe try and help you get something figured out that's simple so you can start learning. That's
Professor,
kind
good to
of
have you on
the
program.
goal
I
here
know
for
you weren't
us.
surprised to see participation fall for women because, as you found, working moms with kids are leaving their jobs in this economy. It's something we talked a lot about during the pandemic, but that seemed to reverse in recent years. Why is this happening again now?
Yeah, thanks so much for having me, Tim. There's a lot of reasons why it might be happening now. I was just looking at the numbers that came out in August for women aged 20 plus, and this, past August, we had 2 million fewer women aged 20 plus in the labor force compared to August of the previous year. So there's a lot going on with women where it's becoming very challenging for them to stay engaged in the labor market, to continue working. When you think about the environment that we're in 2025, all of the return to office, all of the federal government rifts, all of those types of policy decisions that we made early on in 2025 appear to be negatively affecting women.
Why is this happening now?
Yeah, I mean, it's a great question.
Don't
And,
see any. No, I'm done.
we need to think
I'm not gonna play
just
MOC.
about policies in general.
I took an eval this morning and I got 10,000 on it already.
Employers are engaging with
I blew
employees,
up
the type
one,
of
but I've been going times
employment
3.
protections that they're offering employees.
So I got 10,000 on my eval. I only need 15, and I made $1,100 today. My account balance is 1,374 for the PA. So I'm done, man. I don't want to mess that up. That's a good day.
Either out of force because they can't make it work, or
So I'm
out
done
of
for
choice
today.
because it's just too exhausting.
What are the specific
Yeah, it was a
policies
good
that are
day.
pushing women out of the labor force? Is it policies at offices like return 5
I'm
days a
done. I
week,
don't think
for
it's doing
example,
nothing.
or
It's
a
312
clamp down
now.
on hybrid
The only
work?
move right now,
What
guys, is if you're going to play the MOC
What
game.
can you cite specifically here?
If you got an extra eval, you're trying to qualify. I think it's going to drop. I think we're going to the lows during MOC. So if I was going to risk one, I would go short. I might even go short now and try and hold it and add as the move starts.
And so when the government,
If you're going to play
requires everybody
MOC.
to come back to work 5 days a week, private business employers follow
Darth
suit.
Gizmo, MOC is mandatory order close. If you watch till 3:50, you'll see everybody who's on margin having to close their orders out or close their contracts out, and the market goes crazy with all the volume. And so, once you understand what a prop firm is and what an eval is, I'll explain to you why people would play MOC. You wouldn't do it on a paid account or real money, but
adjust even before it actually.
we got to qualify the evals first to get to the paid account.
Well, we did feel like we had some gains coming off of COVID. We did have some gains coming off of COVID. It does feel like these are problems that we have been talking about for a really long time, Misty. And I don't know. It's a bigger rethink in our society to value women, childcare. There's like a bigger thing that it feels like needs to be at play here.
100%. One of the things that gives me hope in all of this environment is we actually know now what it takes to really, get women back into the labor market. I think the pandemic really showed us that when we do, that employers, it is possible for employers to allow for flexibility, and, the roof isn't going to cave in. They will still be productive. They will still be able to produce, the goods and services that they're producing. And now it's just a matter of choice. So we intentionally in early 2025 made a choice that we were going to restrict a lot of these flexibilities, and we have seen now what has happened. And the flip side of that, which maybe could give us some sort of positive reframing, is that we know how to fix it. So if we want women's, labor force participation to go up again, we need to look seriously at, providing a work environment that isn't hostile to.
Oh, hey, Darth Gizmo, join the Discord. So
Well, I'm wondering about
there's people that
you have
will
coming out
that
in
will
a few
help you
months
there
in
if
the
you,
research
but you
that
gotta
you're
at least have a
for the
base
vote.
understanding so you can
Specifically,
ask a
the type of
question.
work that's not necessarily measured by official data.
Can't
The
go,
stuff that
what
does
is futures and how
disproportionately
does it
women
work?
when
We
we're talking
can't,
childcare,
you know what I mean?
household work, oftentimes falling on women in the house. How do you quantify that?
I think there's guys in a room now. If you
Yeah,
want to,
so
probably hop in and
the book
listen
is coming
in.
out in January, and also I've developed a dashboard of statistics, of economic statistics all around care and caregiving. You can find it at thecareboard.org, And the statistics that we've developed there, we basically said, okay, if we went back to 1940s and instead of having, older white men who tend to have lots of care privilege, and by care privilege, I mean they have other people cooking their meals for them, ironing their clothes, etc. If instead in 1940s economic statistics had been developed by caregivers, what would they look like? And that's what the Care Board is. And it's incorporating the amount of time caregivers spend in unpaid domestic load and domestic activities for their families. So cooking meals, washing clothes, all of these type of activities, we count up all the hours that caregivers spend in those activities, and then we put a price tag on it. And then we fold that in to some of the economic statistics that we all are very familiar with, like labor force participation,
right. I mean,
GDP, et cetera.
It's so funny. I was talking to somebody about the growth of economics and business news, and just like this concept that there really is a monetary value to everything that goes on in our world, and it's how we value things, and it just shows how much we don't really necessarily value caregivers and so on and so forth. And until that changes, and we put a value on it, it's hard to get policy to change. Listen, I don't know. What's the government's role that needs to be maybe more aggressive in this to help us out?
Yeah, I mean, I think it would be great if, the government were to, create some sort of official statistics around economic productivity and growth that incorporated the value of some of these activities. The BEA does produce a satellite GDP estimate, which incorporates household production, like cooking meals at home. So we're moving in the right direction, but we still, there needs to be more awareness. We need to, really start thinking seriously about this. And one of the other reasons why we need to start thinking seriously about this is just because of the high levels of educational attainment that women have these days. High levels of education mean that women are focused more on having a career versus having a job, and that ties in more strongly to personal identity. It makes it more difficult when women are trying to think about, do I start a family or do I continue down my career path? And if we can't figure this out of how to make the workforce less, hostile to this idea of wanting to have a career and having a family, it's only employers, it's only the economy, it's only all of us writ large who are going to lose out from that.
We're just not going to get married and have kids. That's it, guys.
Well, that's bad for the economy. That's bad for the economy. Hey, just in 10 seconds, is there a country that's doing this really well around the world in your view?
Well, I think a lot of the Scandinavian countries do actually have quite a robust system of social policies that, provide affordable and high quality daycare, that encourage fathers to also take, parental leave. So there are examples in some of the Nordic countries.
All right, got to run. Misty, thanks so much. Misty Hegenes, Associate Professor and Associate Research Scientist, Institute for Policy and Social Research at the University of Kansas. She's got a new book coming out, comes out in January, Swifty Nomics. Love it, love it. Stick around. This is Bloomberg.
It's 321 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Oracle. Attention growth.
Hey guys, I'm gonna sign off now. I got a team meeting at 3:30 on Zoom for an hour, and then I'm gonna take off. So I'm gonna sign off for the weekend. I wish anyone who's gonna play MOC with their eval good luck. Everybody who got profits this week, good job. Everybody who had challenges, we'll work on them, throw them in chat, and we'll see what we can do to help you out. SM, you have a good weekend at work, my friend. Rocks, take it easy. And hey, Darth Gizmo, go ahead and join the Discord if you want. Do a little research this weekend. Stop back in. I'll be live on Monday at 8 o'clock, and we'll see what we can do to help you find a start that makes sense. But I appreciate everybody stopping by, and we'll see you Monday.
62.06 a barrel, down 2.2%. Lululemon Athletica shares are plunging today after earnings, down now by 17.9%. Poonam Goyal is a senior analyst for U.S. retailing with Bloomberg Intelligence.
Much of the cut in the guidance that you saw yesterday was because of tariffs. They took their gross margin guidance down by 300 basis points, and that was 190 basis points more than they previously expected, largely due to the de minimis exemption that was taken away.
Poonam Goyal of Bloomberg Intelligence. The de minimis exemption, by the way, is applied to the import of products valued at under $800. Again, Lululemon down 17.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Broadcom shares rallying, hitting a new record today, at one point adding more than $200 billion to the company's market value, up 9.4% as we speak.
That's real stuff. I was just looking at the stocks. I mean, most names in the index
Is
are
there
higher.
one prominent one that's lower?
Yeah, lower?
Yeah.
Oh, NVIDIA is one of the ones.
Ah,
that's
there
not
it
doing
is.
so well.
Yeah, there it is. Well, this after investors learned that the company's helping OpenAI, Broadcom that is, design and produce an AI accelerator starting next year, getting into a lucrative sphere dominated by, yes, NVIDIA. We've got Dina Bass with us, Bloomberg News AI infrastructure reporter. She joins us from Seattle. Dina, always I'm asking Ian King, whenever he comes on, whether anyone can do what NVIDIA can do. For years, he said no. Is that changing? Am I reading this right?
So what's going on is that there are companies, and OpenAI is newly one of them, Google is another, that have been doing, work on custom AI accelerators. And so the NVIDIA chips are the best in class, very powerful. They are, general purpose though. And so you have companies that are starting to want to customize things, particularly if you're a company like OpenAI, you have your own models and you have your own research expertise. And so the ability to pair that with a chip that takes advantage of what you alone know as OpenAI is very lucrative. And that's kind of what's going on here. Again, according to people familiar, this Broadcom deal was announced, so to speak, in a rather roundabout way, which is to say that Broadcom CEO Hock Tan said he had a new major customer, but wouldn't say who it was. And then, initially the Financial Times, then Bloomberg reported, citing our sources, that it is OpenAI.
Big deal. Should NVIDIA be worried?
NVIDIA right now is making and selling more chips than, is selling more chips than it can, that it can make. There is huge demand that will, very likely continue to be the case. The issue is, whether anyone can break kind of the NVIDIA hegemony. And I think, that's what we're talking about here. But for right now, there is still NVIDIA is very supply constrained, and that's also, again, according to our sources, some of what's going on here. It's an issue of OpenAI wanting to do custom work, but also of OpenAI and other players not being able to get enough of what they need. One of the people that we spoke to mentioned that OpenAI is very supply constrained, very compute constrained, and you see that every time they release a new model, a new product. They have a hard time, getting that out to as many people as want to use it. Things slow down. And so some of what OpenAI is hoping to do, here is to have an additional supplier and to broaden their supply. And that's something OpenAI has done as well on their cloud computing. They were originally exclusive to Microsoft in terms of cloud. They now have deals with Oracle, deals with CoreWeave, deals with Google. So that's some of what's going on. But to the extent that NVIDIA has been the main, not completely exclusive, but the vast majority of the market, this is, this is another option that some companies are taking.
Hey, one thing I'm curious, Dina, if everything plays out like some of the forecasts that are out there in terms of AI, large language models, generative AI, how much this is going to kind of overtake our world and become such a part of our world. Should we assume that there are going to be a lot of players maybe needed to create these accelerators, that their demand will be so high and there will be maybe several large players in that space?
I think it's hard to say. It's been very difficult for more than a small handful of companies to really do well in the accelerator market and in the general purpose GPU market. And the players that are there are trying very hard to handle the supply question that you raised by increasing their capacity, just making more of these sorts of things rather than having allowing the business to go to more rivals. It is challenging to be a successful chip company, whether you're doing the NVIDIA style work or the Broadcom style work or things that Amazon Web Services is doing with their custom chip work. Though these are projects that are very expensive. They take a lot of people to work on designing and manufacturing chips. And just it's a very capital intensive business. So unlike generative AI software startups where the barriers to entry are much lower, hardware is difficult and it's expensive, and usually companies don't get it right. If at all, they don't get it right for a couple of versions. And I know in the teaser you mentioned Intel, that there have been issues. Intel's had an incredibly difficult time figuring out how to do AI chips successfully, and thus far they haven't figured it out.
Well, you have set us up so well to go off to Ian King. Dina, thank you so much. Glad we could get some time. Dina Bass, Bloomberg News AI infrastructure reporter, joining us from Seattle.
We stick with semiconductors and go to the chip pioneer Intel that, yes, now is partly owned by the U.S. government. You get some Intel, Carol. Ian, you get some Intel. I get some Intel. Qualcomm CEO Cristiano Amon told Bloomberg TV earlier today that Intel's production tech isn't currently good enough for Qualcomm to use it as a supplier.
Not an option today. I think we would like Intel to be an option. They have been talking about moving to the next process technology, which they call it the one that comes after 18A. For us, we need a technology that has efficient power consumption. I think we just had this whole conversation on car. So if in the future Intel is ready for us, will be an option. Right now, our suppliers really TSMC and Samsung.
That's Qualcomm CEO Cristiano Amon earlier on Bloomberg Television. Intel, for its part, told investors that 2026 will be a critical year for its manufacturing tech and should show whether it's ready to move ahead with a more advanced process called 14A. I want to bring in Ian King, Bloomberg News U.S. semiconductor reporter. He joins us from our San Francisco bureau. 18A, 14A, what is it, Ian? What does it mean?
Yeah, I mean, Cristiano kind of forgot that it was called 14A, and unfortunately that is kind of what's going on in the industry right now. I mean, not only did he say it's not good enough, but Intel said 18A, which is the current big hope for this company, wasn't good enough, right? The CFO of the company said, look, we wanted to get outside customers for it, but we just didn't hit the milestones that we needed to, and therefore we're going it alone. We're using it for our own designs right now. 14A, we'll kind of find out next year whether it's good enough to go ahead with it. And remember that they sparked that massive amount of controversy and swirl around the company that got the government involved by saying, hey, if we don't get outside customers for 14A, maybe we won't do it. And this created this massive kind of maelstrom of, does Intel even have a future kind of thing? So yeah, a lot at stake on this sort of technology transitions.
So should we all be concerned, since, as Tim mentioned in the lead-in, Ian, I mean, we all own a piece of Intel now, right? Because the government is involved. I don't know. Do we really? I don't know. I feel like we've been talking about the future of Intel for a long time here.
Yeah, I mean, there's an element here where not a lot has changed in terms of what's going on with the technology. What has changed is the messaging around it. You'll remember under the previous CEO, Pat Gelsinger, everything was like, yeah, great, we're going to kill them. We're going to get into this. We're going to have everybody as a customer. And now we've got a CEO and a CFO who say, we're going to be more realistic. We're going to do this if it makes sense. So the message has changed and has been more tuned towards Wall Street, which is very sort of return on invested capital focused. But that message, when you're trying to sell the technology, when you're trying to be America's champion, is not really the kind of banner headlines that certainly the U.S. government wants.
There was the big family dinner last night at the White House, and not everybody was there, Ian. In terms of chip leaders, Lisa Su of AMD is on the list. People, I don't see Lip-Bu on there, did not see him on the list, and I also didn't see Broadcom's CEO Hock Tan on the list either. Am I reading too much into this?
Possibly. Hock Tan was dealing with his earnings call at exactly that time, so he would have
so that makes
to be
sense.
in two places at once. Cristiano Amon, for example, he said he was invited. He told us on TV he was invited, but he couldn't make it because of a company event. Don't know whether Lip-Bu was invited or not. I think what would be more interesting would be, well, what can the president do for Intel? You know, can he talk to people in the room and sort of persuade them maybe you should take another look at Intel? I think that is an area of focus for everybody going forward, is what's changed at Intel. What can, you know, we as taxpayers, as the government that now owns a stake in Intel, do to try and help that company sort of get back to where it once was, or at least where it says it needs to be?
You know, Ian, I think about the chip space, and thanks to your reporting and time with us, you know, you remind us of, you know, the cycles that are out there, but you also, you know, remind us of when Intel was the one to beat, you know, and it's not that case, and AMD moving forward. And, you know, here we just did the story with Dina Bass about what's going on with Broadcom shares, you know, as it's looking to maybe do an accelerator chip with OpenAI. And so you wonder about, okay, what might this mean for NVIDIA down the road? I mean, is it fair to say that the leaders might not be the leaders in the future, that Intel, maybe it's down now, but it can find its way back? I mean, is it that fluid over time?
It's a brutal industry because of the investment, as Dina alluded to. I mean, it's a brutal industry. You don't get this right. You don't come in from nowhere and get this right. But as Intel has taught us, you don't win by just sitting on what you've already done. What's good enough this year is useless at the end of the year. So you need to be on this constant, brutal, massively expensive kind of treadmill of innovating. We've seen NVIDIA blow past Intel because guess what? It innovated at a faster rate. Intel sat there and patted itself on the back, made some bad decisions. It's now playing catch up again. Can it do that? At this point, you would have to say that it's unlikely that it can ever return to the level of dominance that it once had.
Yeah.
But who knows? You know.
You're our chip king. You really are. Ian King. He is Bloomberg News U.S. semiconductor reporter, joining us there from the West Coast. Coming up next, we're going to get back to the markets. Got about 26 minutes to go. Louis Navellier stopping by. This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all in the red. Russell 2000 index, though, holding on to gains. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
Good afternoon, Charlie. That's right. U.S. stocks are in the red, but well off their session lows. The Dow's currently down 213 points. S&Ps are lower by 24, but NASDAQ pares losses to 0.1%. The U.S. 10-year yield plunges to 4.09%. Gold is up 1.4%. Oil is sinking, but Bitcoin, that's higher by 1%. Among the main 11 S&P sectors, leaders were real estate, materials, energy, and financials were under pressure, and leaders to the upside in the Dow, Sherwin-Williams and Salesforce, while JP Morgan fell 2.9% and led to the downside. In the AI space, Anthropic will pay $1.5 billion to settle author copyright claims. And in the healthcare space, Kenvue plunged intraday on a Wall Street Journal report that RFK Jr. will link autism to Tylenol use in pregnancy. Wrapping things up, Broadcom rose as much as 16% after earnings to a new all-time high. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney. Have a great weekend. And to hear live breaking news over your Bloomberg, type Squawk SQUA on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, TikTok, just about 18 minutes to go until we wrap up the trade for the Friday session. Also, the week overall, it was a shortened holiday week. It didn't feel that way, did it?
No, it wasn't yet a shortened holiday week. It is still a shortened holiday week because we are still here, my friend.
We are. All right. So too is Louis Navellier back with us, Chairman, Founder, CIO of Navellier and Associates, joining us from Manalapan, Florida. How are you?
Good.
Short and sweet.
And that's it. That's all the time we have for you today, Louie.
Listen, we saw stocks actually moving up earlier, but they've been down for most of the day. Are investors more worried about an economic slowdown rather than being enthused perhaps about rate cuts?
No, I just think it's a Friday and people like to clean out their inventory before the weekend. Fridays are seasonally weak, especially in the late hours, especially if the weather's good. Everybody has to go to the U.S. Open or something like that,
Wait, is it that simple? Really? You're thinking it's just that? It's just clearing out on a Friday?
Pretty much. Mm-hmm.
Alcaraz is up 2-1 over Djokovic, but Djokovic is up.
All right.
Advantage Alcaraz.
Now I know where your focal points are.
Hey, Louis brought it up. I got to mention the score.
Well, Louis, to some extent, would you not be making any big bets until we get through the Fed meeting, or did the jobs report, did that kind of clinch it for you? Help me out here.
Oh, it more than clinched it. I mean, it's obvious the Fed should have cut in June. And that downward revision to June to a negative number for the first time in 4 years was a big deal. Unemployment being at the highest rate in 4 years is a big deal, even though I think 426,000 entered the workforce. So, it was a weak payroll. We were all rooting for a weak payroll because we want the Fed to cut and hurry up and catch up with market rates. Market rates, of course, have come down dramatically this week. Of course, they spiked, long bonds spiked early in the week. But, we're going to get a rate cut. I guess the only question next week is inflation. Now, PPI, I'm sure, will be fine. The month before it wasn't because of higher wholesale diesel costs. That was a freak thing, mostly due to the West Coast. And, I spent a lot of time in California. They want green diesel out there. They don't like diesel from oil. So it's very complicated. They're shutting a couple of refineries down. So that's California's problem, but it showed up in the numbers. And then, of course, the CPI, we just hope and pray that all the weak real estate and everything finally shows up in owner's equivalent rent, even though it only shows up in rentals. But there is a glut of rentals, and hopefully we'll get some relief, and we'll be boarding on deflation because we've got falling crude oil prices.
I want to hit on the data, specifically the BLS data. We did hear from Commerce Secretary Howard Lutnick on Bloomberg Surveillance earlier today. And a reminder, he runs commerce, not so he's not running labor here. But he did weigh in on the data. He said Donald Trump needs to rely on the numbers. America needs to rely on the numbers. We need accurate numbers coming from BLS. Do we have accurate numbers from BLS?
Not when they do the wild seasonal adjustments. I mean, I think the worst month is January, where they automatically increased it 600,000 for seasonal adjustment. I hope they're going to stop doing that, because that was, the holiday shopping and all that stuff. So I really hope they start just giving us the real numbers, not the seasonally adjusted numbers.
But do you have any reason to believe that the numbers that are provided to us by the government right now when it comes to non-farm payrolls in this country are incorrect in some way, that they weren't during a previous administration, as has been alleged?
I don't think it has anything to do with administrations. I think it has to do with the seasonal adjustments. And I think we just have to have fewer seasonal adjustments, and then we'll go on. But yeah, I mean, I remember when the June payroll came out, we were suspicious because they were all teaching jobs, but teachers get laid off in the summer months. Maybe it was just a line number, but we were all suspicious of it. Like, no, that's not right. Those people get laid off for a couple months. So that's the kind of thing that freaks us out. We just want raw data. We get it from ADP. I don't know why we can't get it from the Labor Department.
Hey, one of the things I want to ask you, because you think it's already the Fed has been too late in terms of cutting rates, and you talk about what we're seeing in the labor market. Having said that, at the end of the month, Bloomberg reporting, others, how U.S. consumer spending rose in July by the most in 4 months. And so we were seeing resilient demand still among consumers in the face of stubborn inflation. And then there's the concern that the president's tariffs, that is ultimately going to impact something. It's either going to be Americans paying more for things, or companies continuing to kind of eat it, and that's going to buy into, kind of eat into their earnings. So I'm just curious how you factor that in, the resiliency that we've seen in consumers, and that maybe the economy isn't as bad as everybody thinks.
No, it's not as bad as everybody thinks, but there's no doubt that the trade numbers are distorting the GDP numbers. And we got to get rid of those distortions. Obviously, we had a preliminary trade number this week that's going to impact GDP, and to the downside, actually. So I just think that the dollar should be appreciating here sooner than later. We hope the dollar's appreciation is going to largely offset the baseline 10% tariffs. As far as the reciprocal tit-for-tat tariffs, there's no doubt that they're still haggling.
How's the dollar going to appreciate, Louis, if we're cutting rates?
Because we're the last to cut. Europe's got cut 8 times last I looked. The other thing is America's not shrinking like Northern Europe is or Asia is because of a lack of household formation. Japan has the highest birth rate in Asia, and they're still shrinking, okay? And so we're still pro-family in the South. We're still pro-family in the Mountain West. We're still younger than everybody else, and we do assimilate our immigrants. I realize that President Trump wants, the legal ones. The raid on the battery factory, I think, is pretty controversial. Those people were working. You think they could just get extensions. So, I think, it creates an interesting tone. But the bottom line is we assimilate immigrants in America, and we welcome them. We need them.
Yeah.
So we're just going to grow faster than everybody else, but our rates are going to be higher than they are in Europe, and we're the oasis. You don't want to go to China. I mean, my goodness, the rates are below Japan, and they're going to have a currency devaluation soon.
All right.
So, yeah, we're the place.
We're going to wrap it up on that one. All right, Louis, thanks so much. Louis Navellier, Chairman, Founder, CIO of Navellier & Associates, joining us from Florida. Headline crossing the Bloomberg terminal, New York City Mayor Eric Adams to discuss the future of his campaign. Here, the mayoral race, obviously, he's talking about at 4:30 p.m. Wall Street time. So we're going to be monitoring that. A lot could be coming your way.
Wow.
We've got President planning to hold some things in the Oval Office around 4 p.m.
What happened to the shortened holiday week, Carol?
Yeah, I know. What happened to Fridays being mellow? Just going to put that out there. We are not mellow at all. Do not go anywhere. Counting you down to the close. Wrapping up the day and the week. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, we are less than 7 minutes away from the closing bell on this Friday, getting ready to wrap up the day and the week overall. There's a lot kind of coming at us on this Jobs Friday. I thought it would mellow out after this morning, but that is not to be the case. Just headed to the most read on the Bloomberg terminal in the past 60 minutes, and this is something that you've heard our team about Kenvue. Formerly, it was the J&J Consumer Health Division.
Yes.
Now it's known as Kenvue. Well, the stock falling after the Wall Street Journal reported that Health and Human Services Secretary Robert F. Kennedy Jr. is likely to link the company's Tylenol painkiller to autism. The company has come out and said nothing is more important than the health and safety of people who use its products. It believes there is no causal link between acetaminophen.
Yeah, causal link, right?
Why can't I say that? Tylenol, basically, used during pregnancy and autism. I've taken it a lot. I just can't say it. All right, so that is one of our most read stories.
HHS also out with a statement saying that any claims about the report's contents are, quote, speculation until it's released. So, yeah, once again, there's no causal link between acetaminophen use during pregnancy and autism. That's according to Kenvue.
Yeah, stock was down as much as 16% on this news, still down just shy of 10%. So, yeah, continuing to see that certainly be a big deal.
What else are you watching?
Another story that really caught our attention, again, your second most read in the last hour here, has to do with President Trump saying he will, quote, be forced to start a Section 301 proceeding to nullify the unfair penalties being charged, his words, to U.S. companies. So he's responding to the EU's $3 billion euro fine against Google.
He's been spending quite a bit of time on Truth Social this afternoon. He said, quote, Europe today hit another great American company, Google, with a $3.5 billion fine, effectively taking money that would otherwise go to American investments and jobs. He called it very unfair. The American taxpayer will not stand for it. As I've said before, this is President Trump, my administration will not allow these discriminatory actions to stand. Apple, as an example, was forced to pay $17 billion in a fine that, in my opinion, should not have been charged.
The back and forth continues. So interesting. And then the other story we wanted to bring to your attention, we should keep in mind that the president is expected to sign an executive order and make an announcement at 4 p.m. Wall Street time. So we're going to be monitoring that, and we'll see what ultimately gets covered there. In the meantime, New York City Mayor Eric Adams is expected to talk about the future of his campaign. That is expected at 4:30 p.m. Wall Street time. So monitoring that as well. We know that there have been some reports about offerings of jobs to the New York City mayor to join the Trump administration. Again, various reports and things. So we'll see
in
what
exchange
happens.
for leaving the race.
Leaving the
Adams,
race.
we should note, who is trailing in the polls, has denied the reports. And Mamdani has pushed back, saying that there shouldn't be federal interference in the New York City mayoral campaign.
Kind of interesting, right?
Interference from Washington.
Yeah.
Yeah.
I mean, as we
So
said,
I guess the idea with the president offering something for Eric Adams would be take him out of the race, push support behind Cuomo to defeat Mamdani.
Right.
Yeah.
Right.
We'll see if that would work.
And we should point out Michael R. Bloomberg, the founder of Bloomberg LP and Bloomberg Philanthropies, owner of Bloomberg Radio, TV, and all of it, has come out and endorsed Mr. Cuomo. So we just want to be fully transparent here. In the meantime, one other most read story in the Bloomberg, and forgive me, Talia, for not giving you a heads up on this. United States will deploy stealth fighter jets to the Caribbean after 2 Venezuelan military aircraft flew over an American naval vessel in the area. So a lot of things from different perspectives.
What's the deal, Carol?
About which one?
Sometimes right now we do kind of like fun stories.
Nothing light.
That was
pretty heavy.
That was around the world in 4 minutes with a lot of heavy stories.
Yeah. I'm just going to say, it's a lot of stuff going on. Anyway, we are expected to hear from the president. Sounds like we're going to be hearing from the New York City mayor, so we will be monitoring that and bring you all of the headlines.
I'm searching far for a fun story. I have not found it yet.
Oh, I have one.
What?
For the TV crew.
Well, yeah, but
it does have a DC angle.
That one later.
Right now, we're hovering just off our lows of this session. We're going to count you down to the close on this Friday. Wrap up the day and wrap up the week. The closing bell. Don't go anywhere. It starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Katie Greifeld taking you through to that closing bell with the global simulcast. It started. There's Carol Master. There's Tim Stenovic in the radio booth. Welcome to our audiences across all of our Bloomberg platforms as we close out this Friday with a lot of big questions here about the direction of the market, the direction of the economy, and the direction of interest rates.
So well said. Tim and I were just saying, it's not a quiet Friday. It just feels like a lot of things are coming from the White House right now. Lots of questions. We know the president is expected to speak maybe in a few minutes from now. In the meantime, I feel like the equity trade says it all. Some enthusiasm maybe initially over expectations of rate cuts, but now it's also maybe the realization that the economy is slowing down in the U.S., and that's not necessarily a good thing.
Yeah, we just spoke to Louis Navalier over at Navalier and Associates, who, when we asked him, is the Fed too late? He said, yeah, the Fed should have cut back in June. You know, he's citing the labor deterioration that we've seen in the labor market here in the U.S.
Yeah, and you can see all these questions coming through in the stock market, but a conversation we were having about when it comes to the bond market, the trade looks much cleaner, at least on this one day. Yields shot lower after we got those numbers at 8:30, and they've pretty much stayed there.
And it's going to be kind of interesting these next couple weeks because, I mean, earnings season is largely over. We do get Oracle and Adobe next week. That could have some impact on the market. The Fed in a quiet period as we wait for that September 16th, 17th meeting. But we get a lot of economic data in between that. A retail sales report, CPI, PPI next week, and consumer sentiment numbers at the end of the week.
Listen, we're counting down to the Federal Reserve's next decision, and all of those data points, we know that remain will be important.
We should point out the S&P here on the day did actually open higher. The idea here that with a weak job market, the Fed would cut rates and a drop in rates would underpin valuations here. But that enthusiasm faded. The S&P was down almost 1% on the day, pairing some of those losses, and looks like it's going to close down now by about 20 points or 0.3%. The Dow Jones Industrial Average, a favorite of Katie Greifeld's, lower by more than 200 points or 0.5%. The NASDAQ composite, we're just going to call it unchanged. It is a red arrow, but basically unchanged on the day. The NASDAQ 100 actually squeaking into the green, up 19 points or about 0.1%. And we've been talking about it all day, Carol and Tim. The outperformance that we saw today in the mid caps and the small cap Russell 2000, both of those indices up about 0.5% on the day.
All right, interesting to see that divergence in terms of performance. I'm going to go back to the big caps, if I may, the S&P 500. And folks, not quite an even split. 273 names, Katie, to the upside here in the S&P 500, 230 losing ground.
Well, it's a really interesting mix if you take a look at the sector breakdown as well. You take a look at the circle, there's a lot of red, but the green, real estate, is your biggest gainer on the day. That sector up about 1%. That has to do, of course, with what we're seeing in the bond market. Rates are coming down. That is good, theoretically, for real estate. Communication services and materials also joining in on the party. But then you take a look at the downside. Energy, your biggest loser today, then financials and industrials also having a pretty sour end to this week.
All right, let me get to some of the individual gainers. And Tesla, we saw this definitely some outperformance here, up 5% at its highs today, closing with a gain of 3.6%. Tesla proposing a new compensation agreement for its CEO, Elon Musk, potentially worth around $1 trillion. There's a lot of caveats around it, I would say, but it is a massive package with that president in corporate America. Tesla seeking assurances that Elon Musk would wind down his political work. So we also heard from a Tesla board member, at least
wind
CNBC.
Down his political work.
Well, you know what that
means. I think the Trump administration's already done that. But it raises a big question, Carol Massar. In all seriousness, we talk about a $1 trillion pay package that a lot of people, I think, Katie, you pointed out at the start of our show, to get all those incentives, it would actually have to take the market cap of this company to what, around $8 trillion. It's at $1 trillion now. I would also like to point out it was at $1.5 trillion at the start of the year. So I'm a little curious as to what they're actually paying for here.
It's a great question. It's a question I posed actually to our Ed Ludlow, who reminded us about NVIDIA just a short time ago and the small market cap it had and how it has certainly blossomed. So I don't know. I guess time will tell. So yeah.
NVIDIA makes basically the only chip out there to power the AI revolution.
Just a graphics chip processor, and the market cap wasn't as large. I'm just saying.
Okay, that's a false equivalency, but go ahead.
Okay. I'm just kidding. You must have missed me. All right, let's go to Zoomies. Zoomies, ticker is ZUMZ. Stock up about 15% in today's session.
What is this? I always hear this stock. What is
this? $357 million market cap. It is a small market cap. This is something that's probably in your wardrobe. There's sneakers, there's skateboards, there's a lot of things. Snowboards as well. Anyway, it reported better than expected second quarter sales, issued third quarter sales guidance that also topped estimates. And moving along, chips, definitely some outperformance among the semi area today. Broadcom, number one gainer in both the S&P 500, NASDAQ 100, gain of 9.5%, up more than 16% intraday here.
Wow.
We know the company reported its latest results, but it really has to do with that FT report initially, and then Bloomberg following up that the chip maker is said to be helping OpenAI design and produce an AI accelerator. For 2026.
Can I just say a few weeks ago on this program, I got a lot to say today, Carol. A couple weeks on the program, Jake Goldberg over at Seaport was talking about this idea of the chip space, all the focus on NVIDIA, and he was the one who flagged to me. He's like, look, take a look at Broadcom. It's outperformed NVIDIA this year. It's up 44%. NVIDIA's up like 25%. And he was really bullish on this idea that Broadcom really has an ability to make its mark in the AI space, and that investors hadn't really appreciated that. And I think based on what we learned yesterday, maybe he was right.
I have something to say, actually. I have also heard calls that Broadcom should be part of the Magnificent Seven. I'm going to say it here. Call it the Great Eight. We could come up with a new name because Broadcom really has proved its worth this year.
All right, we'll see if the Great Eight sticks. If it does, thanks, Katie Greifeld, for that
I stole it from someone.
Romaine, I know you're just... We were gone yesterday up at the Power Players Summit, so it sounds like you're making up for lost time with no simulcast.
We've been chatting up.
We actually did the simulcast. We just did it with.
Oh, you did?
Yeah.
Yeah. Okay. It was
Just
just the
me and
two of you.
Katie.
Just
Yeah.
the two of you talking to each other.
Pretty much.
Okay.
We got to keep our radio listeners.
Well, I want to keep things moving and talk a little bit about NVIDIA. On the Broadcom news, Broadcom's gains were NVIDIA's losses today, down 2.7%. Shares actually fell as much as 4.4%, falling at 1 point by the most since April. Once again, NVIDIA down by 2.7% today. And then a late mover, Kenvue, down 9.4% today. It's the former consumer healthcare division of Johnson & Johnson, down as much as 16.5% earlier this afternoon. Shares fell after the Journal reported that HHS Secretary Robert F. Kennedy Jr. is likely to link the company's Tylenol to autism. The federal government is expected to release its finding on autism this month. The HHS, though, came out with a statement after this Journal report came out and said any claims about the report's contents are speculation until it is released. We should note that Kenvue said, quote, nothing is more important than the health and safety of people who use its products, and it believes there's no causal link between acetaminophen use during pregnancy and autism. And finally, Lululemon shares down 18.6% today. This was the worst performer on a percentage basis in the S&P 500. The company's slashing its outlook due to weakening demand, the Trump administration's tougher trade policies as well. At least 7 analysts downgraded the company's stock.
Yeah, I was really shocked. I mean, we were on, well, that's right, you guys weren't here yesterday, but we were covering that in the after hours yesterday. And the idea, remember, this was like the untouchable stock. It seemed like it didn't matter the economic conditions, it didn't matter anything. They always seemed to grow sales, grow profitability. And this is like the third straight quarter where they've really surprised to the downside.
Do you think tariffs are really to blame here, or is this the fact that consumers have a lot more options here?
Yeah, no, I don't think
have a lot
that.
more options, and maybe they're not as interested in what Lululemon is offering right now.
Yeah, and we had an analyst on yesterday who kind of made that point, the idea that there's really just been some internal mistakes they've made with regards to marketing, with regards to pricing. But, you know, they're trying to course correct that, and we'll see. We'll see what happens. I do want to turn real quickly to yields, guys, because that, of course, was a big part of the story. Your 2-year yield, a massive drop on the day, and more importantly, a massive drop on the week. I just want to point, this is the 4th straight week we've seen the 2-year yield decline. So at least in the open market, in the secondary market, you have traders really betting on the idea that there is going to be a slide in rates pretty soon. But at the Fed, we'll start this rate cutting cycle. You also saw the 30-year dip on the day and on the week. It's the most meaningful decline that we've seen on a weekly basis in quite some time, down 16 basis points. Remember, we started the week, everybody was fretting about 5% 30 yields on the 30-year. That's now down back below 4.8%.
Yeah, pretty significant change in the narrative. All right, here's something kind of interesting that caught our attention from the Wall Street Journal. It has to do with a UFC cage match coming to the South Lawn of the White House.
The White House?
A little bit later this year, or next year, I think it actually is.
Wait, so Trump's going to fight in the cage?
No, it's not going to be.
No, mixed martial arts throwdown to be watched by thousands of spectators. There's lasers, there's fireworks to light up the sky. The UFC's octagon cage will be flanked by the White House and the Washington Monument. This is from the Wall Street Journal. I'm reading it right there.
Yeah.
As combatants punch, kick, and grapple each other.
Oh, yeah.
Many
That's
more
exactly
people could
what you wanna
watch
see
on
at the
jumbo
White House.
screens set up on the Ellipse, a park south of the White House, or other areas
this is
nearby.
very violent.
I will tell you, I'm going to tell you guys something.
All right.
Not a big UFC fan.
No, you aren't.
I am
Tim
not.
Stanovic,
Yeah.
a big UFC fan.
I think full disclosure, I don't understand.
What if they were on bikes? Would you like it more?
Not, control room's laughing about that, Katie.
It was a funny joke.
Yeah.
Well,
U.S. Open happening right now. Djokovic and Alcaraz playing as we speak.
Is there grappling in that?
There's not, no. And the president reportedly will be going to the final on Sunday in Flushing.
Oh, yeah.
Yeah.
Well, I'll be there, too. I'll say hi to him.
You guys.
Yeah. Yeah. Big tennis fan. You don't know that. Not so much MMA. I'm like you. I mean, I don't like to see people get punched in the head. I don't know. I mean, you know, teach his own.
All right, to each his
There
own.
you go.
And that, we're going to
Big
have a wrap
grappling
here.
event. I mean, I could see that on the subway.
Are you done?
That's
Are you
true.
done? All right, that's a wrap. Our cross-platform, radio, TV, YouTube, Bloomberg Originals. We call
Is
it
Carol's mic on?
I just couldn't get a word in edgewise. What could I tell you? Hey, guys, have a good and safe weekend. Enjoy the Open and other stuff, and we will see you again, same time, same place on Monday.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. I'm Tim Stenivek. That is Carol Masser. Mentioned the U.S. Open, Carlos Alcaraz playing Djokovic right now. Alcaraz took the first set 6-4. They are starting the second set as we speak.
Okay.
Yeah.
All right. What's going on?
You know who's a big tennis fan?
David?
David West, huge.
I didn't know that.
Not just
something big. Something, yeah. I was there.
Not just a tennis
I was
fan.
up there Wednesday night for the semifinals women's. Yeah.
Oh, I missed you. I was at
Yeah.
Tuesday night.
Yeah.
Next year we'll go together.
Okay.
Also a big tennis player.
No, I play a lot. There's
You
a
do?
difference. There's a difference between saying you're a big tennis player and that you play a lot. Yes, I play a lot every weekend. That's right.
It's great.
I love tennis. But I'm going to warn you right now, I cannot compete with Romain. I'm going to disappoint you here.
You're not going to disappoint
that much.
You are not going to disappoint me. You're all good. You're all good. We do want to talk about this evening's Wall Street Week coming your way shortly, 6 p.m. Wall Street time on radio and TV across our platforms. David, a lot to cover. You did have former U.S. Treasury Secretary Larry Summers on. There's a lot he talked about with you, including the composition of the Fed.
Yeah, well, very much in question this week. I mean, between Stephen Myron up there for confirmation, but also the ongoing litigation over Lisa Cook and whether she can still hold her chair. And I think the interesting question is, does she get to vote in September? And who gets to decide that? Probably the courts, I would guess.
We've been asking Mike McKee about this a lot.
Yeah.
Because there's a lot of confusion about to what extent she's actually able to do her job right now. As Mike reported earlier this week, she's basically doing her job remotely, but if she doesn't go to the Federal Reserve in person later this month to cast that vote, she will not be able to vote because those voting members cannot vote remotely.
Well, we'll see. I mean, I do think this will be up to the court.
Yeah.
The court will have to decide, and we're going to be in emergency stay action again. So it's pretty. But the broader point is, I said to Larry, listen, we're talking about one person. There are 12 people voting. What difference does it make? He said, no, this is part of an overall pattern. And the way he put it was, we're in the foothills of real uncertainty over the Fed's status. And that has profound effects, obviously, on the economy and the markets.
I heard someone talking about this ability that if he starts to replace some of these governors, and then there's the regional governors, that I guess either next year, like there's just a way that this could become such a bigger impact in terms of him adding people to the Fed that agree with the president.
And the proposals for restructuring the whole regional governor situation so that they don't get to just pick their own regional governors anymore. So there's a real move here. At least Larry's concerned that it is. And he points at particularly the 30-year and the 10-year. The long-range bonds would really get hit, in his opinion, by this.
Those are supposed to be the bond vigilantes. Those are the ones who are supposed to push back on policy coming from the White House.
Yeah, exactly. And an interesting question is, why not yet?
Yeah.
And we asked that, actually, Larry, why aren't we seeing it yet? If you're saying the sky's falling, but you don't really see it in the markets. And he said he thinks actually that they don't, so far, the markets don't believe that Trump will be able to follow through on what he's talking about. They're actually discounting that. At least that's Larry's theory about what we're seeing so far.
So there are some ultimate guardrails, is kind of the thinking, maybe?
Well, we think so. Yeah, I mean, we'll see. I mean, there's a lot of pressure on the courts. I mean, now I'm going to put my lawyer hat on now.
Yeah.
It is unfair, in my view, to ask the courts by themselves to step up to the president. If you go back in history, like the steel seizure cases, things like that, it doesn't work very well that way. And if Congress is going to just take a powder and sit on the sidelines, which it has largely been doing in all of this, because a lot of this are things that the Constitution commits to the Congress. So it's up to Congress. If the Congress doesn't say, yeah, we want to do it, it's really hard for the courts. And so the guardrails may ultimately be the bond vigilantes, to come back to your point.
Right.
It may be
the market, right?
Financial markets, yeah.
Yeah. Hey, speaking of markets, you dug into the Indian market in particular. So talk to us about what you guys wanted to
This ended up being much more interesting to me, maybe because I knew so little about it. What triggered it was actually the Jane Street. You remember the Jane Street trade that got revealed? Jane Street Court doesn't want anybody to know about anything that they're doing. They don't even tell their people inside who runs the place. I mean, they're very secretive. And they're making a ton of money. You saw earnings come out this week, actually, record trading earnings, and way more than any other bank. But they got their wrist slapped by SEBI, S-E-B-I is the regulatory agency in India, for derivatives tradings in equities. So we said, well, what is going on with derivatives, and it was a fascinating story. India, because Prime Minister Modi really wants to make them an economic powerhouse, really wants to develop capital markets. And they are developing them, but they are developing in sort of an interesting way with a lot of retail participation, particularly in derivatives. So we talked to a couple of experts actually about India to help us sort out some of this at least. One was a former IMF India office head, and the other is with Mahindra Asset Management. This is part of what they told us about the Indian capital markets.
Last year, IPOs in India accounted for about more than $20 billion US dollars. It was the number 2 IPO market in the entire world.
Josh Fellman is the principal at JH Consulting and advised the Indian government on economic and financial matters during his time as the director of the IMF's India office. To date, regulators have encouraged retail participation in IPOs, helping contribute to overall retail participation in markets.
One thing that they've been fantastically successful in, as opposed to, say, China, is they've managed to get household participation in the capital markets.
It's not all roses. Under the surface of India's blossoming capital markets is a risk that threatens its stability: derivatives.
About 40% of derivative transactions are conducted by households in India, which is an incredibly large number. So if you take the derivatives market in particular, the regulator, SEBI, did a study. They found that last year, about 90% of the participants in the market lost money. And they found that, again, about 40% of them were under 30. 3/4 of them earned less than $6,000 per year.
The growth in derivatives has caused a liquidity problem.
It is a fact that there are a large number of unsophisticated investors. It is a fact that they have very poor cash buffers. But what to do about it? You don't want to push these people completely out of the market. On the same time, you don't want to unduly restrict the professional participants in the market, because they're the ones who iron out the market inefficiencies.
So there you have it, a little peek into the, there's a lot more actually. It turns out that, I didn't know this, India historically has invested in gold more than everybody else. People in India, they buy a lot of gold. For a lot of years they've been doing this. And they're very conservative, so they're moving into this equity area. But the young men, particularly it started with the pandemic, as you might expect, the way it did here to some extent, they started going to derivatives. But as you heard, 90% of them lose their money. And that's in part what Jane Street has been trading, and they've been making the market in equities derivatives. They recognize a real imbalance.
And as Josh Fellman over at JH Consulting pointed out in that piece that we just played, there's this China element too when it comes to the way that China's looking at its own IPO market.
No, absolutely right. And one of the bright and shining spots for India is they've been very successful, been very active in IPOs.
Yeah.
They got a lot of IPOs going, and they've got a lot of foreign direct investments. There are a lot of things going well for them.
Do tariffs in the U.S., the increase in tariffs recently threaten that?
Well, it could certainly slow down their economy, right, as a practical matter, although India's exports to the United States are not that vast, frankly. And as far as I can tell from listening to President Trump, a lot of what's going on with India doesn't have to do with the economy so much, right?
Yeah.
You know, it's funny, you mentioned gold.
Yeah.
Gold stocks have been on a tear.
Oh, yeah.
I feel like everybody's talking about gold, and that's another thing that you guys dig into in Wall Street Week.
Exactly. We did go to Australia to figure out who's making the money off all this gold. And the gold miners are making a ton of money. Paul Allen, our colleague, actually did the reporting. They went to a big gold mine out in the outback, which is beautiful. It's fascinating. But they have a problem because this happened to them before, and they basically plowed it all back into mining, and the investors got really upset. And so now they are right now trying to decide. It's sort of like what happened here with fracking.
That's exactly what I was just going to think about,
like
right?
And now the investors are saying, well, wait a second. Let's be careful before we pull it back. Maybe you should give some of it to us.
Right, right, exactly.
Distribute some of this.
These boom and busts we've seen before.
I do want to point out, we have one eye on the Oval Office where the president is signing executive order. We had a few announcements this afternoon coming from the White House The president ended up combining two things. If we do hear from the president and he makes comments that are relevant to our audience, we will bring them to you live as we do get them. David, while we have you, I want to go back to this idea of politicization in the government. And it's, sort of an oxymoron to talk about that, but because Washington is politics and politics is Washington. But at the same time, there are bureaucrats that many would argue who work in politics, regardless of who's in the White House, regardless of who's in control in Washington. A lot of these are like the unsung folks who are crunching the numbers at the BLS and trying to bring investors the data. And I think over the last couple of months, there's been a renewed focus on politics within those numbers. I know you talked a little bit about that on your program.
Yeah, Molly Smith did a piece for us, actually, because she had done an earlier piece a few months ago about just the resources given for statistics in the government, BLS, focusing on BLS and how they've cut back on resources. And given what's happened with President Trump firing the head of the BLS and putting a new person in, we went back to say, okay, how does that work? And part of what she went through is part of it is a resource issue. They need more resources. Part of it is the methodology has needed to change because their response rates, as is true with many things, including the jobs numbers and things, the response rates have been going down, which makes the statistics less reliable and leads to some of those revisions that you have that really undermine the confidence. But then you also have the question of just politicization. And at what point is the government sort of putting their thumb on the scale, which is what President Trump accuses the past BLS head, in fairness. That's exactly what he pointed the finger at her for, whether justifiably or not. But it's a problem for us, whatever the ultimate outcome is. It's a problem for us because the markets are based so much on those numbers, particularly the jobs numbers. The jobs numbers drive so much of the markets. If you don't trust the numbers, you got a real problem. Now, there are private organizations that we covered who are trying to step into some of that, that gap.
Right. But no, U.S. economic data has been the gold standard for such a long time. But it goes back to kind of what you were saying, like the markets, the bond vigilantes, ultimately, is that the final say and guardrail where if we start to tinker around with our data and people can't trust it, do the markets get upset? Do investors get upset? And that ultimately will prevent the president from doing things going forward.
I don't know, but I think we got a small taste of it potentially in April. If you remember, we had that one instance where the dollar was going down and the stock market was going down. And then
I think the technical term is yippy. The bond market went a bit yippy.
That's right. That's what the president said. It's gotten yippy. And so he backed off the tariffs, if you recall. He claims he doesn't pay attention to it, but he definitely pays attention. And Scott Bessent, the Treasury Secretary, all the time says it's really important what the long bond is.
Right.
He really is focused on that yield.
But at the same time, he came out, it was an op-ed today, right? Putting pressure again on the Fed in terms of some of it should be taken another look at it.
Totally right. But, and it's not my place to defend anybody, but to be careful, what I read of it at least, he's focusing not on monetary policy. He's focusing on the scope of the Fed and some of the things it did that actually a lot of people admit. Larry Summers says when they got too far into diversity, equity, inclusion, taking into account in regulating banks and even climate issues, you could think what you want about climate, but is it really a bank regulatory function? And at least my reading, maybe I'm giving him too much credit, I think what Bessent was talking about was that, saying we need a fresh review. He said bipartisan.
Yeah.
That says what is the scope of the Fed? What do we want of the Fed? That's different from monetary policy, in my view.
But don't you think it's kind of interesting for a U.S. Treasury Secretary to be doing this when the president is so often putting pressure on the Fed? I don't know, like the optics
timing
of
of
it.
this?
Yeah, kind of. Is that unusual?
Well, first of all, he works for the president.
I know.
And he wouldn't have had the job unless the president had his confidence and he had the president's confidence, right? I don't think he would. At the same time, I'm reading way too much into this now.
I know.
It's one thing to saying, Fed, I want you to set the interest rates at this, monetary policy. It's another thing to saying there's a whole lot of other things the Fed does that are political. Why is it different from any other agency, the FTC, the FCC, anybody else? When it comes to a lot of the regulatory issues, it's not clear to me why it has to be totally independent for those purposes.
Before we let you go, because you have a background in law.
I used to.
Used to. Your background's still there. The courts are taking an outsized role in this administration.
I think they're being forced to. I don't think they're. I'm not.
Whether it comes to the Federal Reserve, whether it comes to the FTC, which you mentioned, whether it comes to tariffs,
immigration.
What do we make of this?
I think that this is just me talking now. Okay.
Yeah.
But I think that this is unprecedented for the judicial system. This is pressure on the judicial system we haven't seen, not just in some positions being taken by the administration that no administration's taken. That pushes it enough. But the number of these across such a spectrum, they are deluged right now. The court system is being just jammed up, and the Supreme Court particularly. And I don't think, at least I can't discern yet, that they figured out how to handle it. And what's happened is you've ended up with that shadow docket,
right?
Which is really, in my view, this is me talking as a lawyer, pernicious. I don't care how you come out in the merits.
Right.
But the essence of Anglo-Saxon jurisprudence is having the judge explain why they're doing what they're doing. When they don't explain why they're doing what they're doing, that goes to the heart of the matter.
I thought about the quantity, too, of cases. I was asking Greg Storr about it. Like, is it just too much coming at the Supreme Court? Like, how are they going to pick and choose or figure this out?
And they're all urgent.
Yeah.
We need to have a decision right this second. And it's too much to handle. And I don't think poor Chief Justice Roberts has figured out yet how to handle it. And I don't blame him for that, because I don't know if I were his clerk what I'd advise him. But they've got to, I think they're going to figure out, there is actually, the district court judge in Massachusetts in the Harvard case wrote a footnote specifically calling out Gorsuch, Justice Gorsuch, saying, you say we don't pay attention to you, we pay attention to you, but you have to tell us what you're doing and why you're doing it. It's a very pointed, I'm not saying who's right, but it was really something I haven't seen, I don't think, from a lower court.
Pretty remarkable.
David Weston, he's the host of Bloomberg Wall Street Week.
We're going to let you go now.
Tonight at 6 p.m. Wall Street Time on
David.
Bloomberg Radio and Television. He also is a lawyer, doesn't just play one on TV. He's a real
He is a real lawyer.
Who clerked for a Supreme Court justice.
I did.
Okay, yeah.
All right. Well, and certainly reminding us we're living in some interesting times here. Hey, folks, we do want to point out that President Donald Trump, speaking from the Oval Office, he has signed an executive order changing the name of the Department of Defense to the Department of War. We've been here before where we went from the Department of War to the Department of Defense. So anyway, we're going to monitor the president in the Oval Office as he continues to speak and potentially take questions from reporters and bring you any headlines.
In the meantime, let's head on over to Charlie Pellet, who's standing by with a business flash. Hey there, Charlie.
Hello there. This Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. New York City Mayor Eric Adams will be making an important announcement about the future of his bid for re-election. This according to an advisory sent by his campaign. Now, the announcement scheduled for just minutes from now at 4:30 p.m. outside of Gracie Mansion. It does come amid reports he has been offered an expanded array of job offers in exchange for leading the race. We'll have that for you live coming up minutes from now right here on Bloomberg Radio. Stocks lower today. S&P ending down 20 points, down 0.3%. Dow Industrials down 0.5. NASDAQ ended up little changed on this Jobs Friday, down under 0.1%. 10-year 4.08% with a 2-year 3.51%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We want to take you now to the Oval Office. The president taking some questions from reporters. This after he has signed an executive order changing the name of the Department of Defense to the Department of War. Let's take you there.
Are there any concerns about, the Pentagon's mission of actually cutting back on spending?
But not a lot. We know how to rebrand without having to go crazy. We don't have to recarve a mountain or anything. We're going to be doing it not in the most expensive. We're going to start changing the stationery as it comes due and lots of things like that. We're not going to be doing things like have been done in the past when they changed the name of forts that shouldn't have been changed. Those names of the forts should not have been changed, at least for the most part. And as you know, many of them have been changed back already. At the request of the communities, every one of those communities said, we want our name back, like Fort Bragg as an example. The people in that community wanted that name back. They refused to call it anything else but Fort Bragg. So we're not going to be spending very much money on that. Yes,
Sir, when you spoke with the Europeans and Zelensky earlier this week, did you preview this for them, and did you say what security guarantees they might be involved in?
This is nothing to do with anybody but the United States of America, the people of America. This is who I talked to about changing a name. This is a very important change because it's an attitude, and we know how to win. We've been winning, and we're going to win like you've never seen. Wait till these factories start to open up that are being built all over the country. You're going to see things happen in this country that nobody expects. We have over $17 trillion in investment coming into the country. We never did anything even remotely close to that. No other country has either, by the way. So you're going to see things that are pretty amazing, but it's really about winning.
And what about the security guarantees aspect of that with Ukraine, sir?
Well, we'll work that out. We'll help them. Look, we want to save a lot of lives, so we'll do something with that. I think people expect that. We'll help them. Europe will be first in by far, and they want to be first, and they want to see it end. Europe wants to see it end, and it'll end. It'll end all of a sudden. It's going to come together. You watch. Yeah. Did you want something right?
Right here.
Yeah, behind you, please. Yes.
Yes, sir. You haven't been shy about taking bold, decisive, offensive action to protect American values. Strikes in Iran, the strikes this past Tuesday on the positively ID'd Tren de Aragua narco-terrorists. Is that going to be a critical function of the Department of War moving forward?
It depends on the individual instance, you know. We don't want drugs coming in from Venezuela or anybody else or any place else, and we'll be tough on that. We don't want human trafficking. We don't want to see people coming in where they open their prisons from all over the world and they dump their prisoners into our country, which is what they did in the Biden administration, where they took insane asylums and places that held people that were seriously mentally ill, mentally incompetent, mentally dangerous, and they dumped those people into our country, and we're trying to get them out now. What they've done, what the Democrats and Biden have done to this country will go down in infamy. What they have done to our country, and especially that, you know, they created the worst inflation we've ever had. That's nothing compared to what they did with the people in our country right now. And we're getting them out, and it's not easy when you have the liberal judges destroying our country, but we've won them all. We've won it all, ultimately won it all. Hard process. It should be easier. We know who it is. We know exactly who we're looking for. We had 11,000 murderers dropped into our country. We've gotten a lot of them out. Or in some cases, they're so dangerous, we were afraid to get them out because they'd come back in. But for the last 120 days, 0 people came in. Can you imagine? This is me speaking, but these are figures developed by, they say, a pretty liberal group of people. They admit that 0 people came into our country. Think of that. A year ago, it was millions of people were coming in, millions. They were coming in. You could look at them and you could say, big trouble. And that's what we have in our country. But we're getting them out, and despite that, we're doing really well. Yeah, please, Brian.
Comment on the recruitment levels across the military branches?
Well, the recruitment's the most exciting thing. So when I was campaigning for the office, numbers were coming out that the recruitment numbers, generally, you can speak to it better than anybody, the recruitment into the military, all branches of the military, and police and firemen and everything else. Anything having to do with like a public service, the numbers were horrible, record-setting bad. And now they're record-setting good. We're setting every record every month for recruitment. We're packed in the Army, Navy, Air Force, Marines, Coast Guard. My beautiful I love Space Command. I see Space Command, but Space Force has been, we've got a waiting list of people wanting to go in. A year ago, especially a year and a half ago, you know, when I took the lead in the polls, which was very early, it really helped with the recruiting. And when I won from November 5th on, it's been amazing. And over the last 4 or 5 months, we're just packed. It was very hard to get police officers. Now the departments are loaded up. Everyone wants to be a policeman or woman. So it's been a great thing. General, do you want to talk about that?
Sure. As you said, serving our nation is an incredible gift that we give, and the reward on that gift pays back exponentially year over year. And I think the young people of America are seeing the importance of service, and whether it's in any of our armed services or in local police, fire, or rescue, service is an important thing that I personally encourage, and I know everyone else in government service sees that same reward.
And Pete, on recruitment, what do you think?
I was down at Fort Benning, the newly properly renamed Fort Benning, yesterday,
watching Army basic training, and they're so full they can't barely handle the
This is
throughput.
Defense Secretary
It is
Pete
truly
Hegseth
historic
speaking right
across
now.
all the services, as you said. It's been a surge into the, I was going to say the Defense Department, but I will say the War Department. And that you might almost call it a vibe shift, an attitude shift, a feeling that the country is back, that service is back. And there were military families last year, Mr. President, that said, I don't know if I can recommend, I mean, I wrote a book on this. I don't know if I can recommend service to my son or daughter, given what's been done to our military. You heard it over and over and over again. And I hear from those same military families right now, sir, and they're saying, I recommend to my kids that they go into this department, this Pentagon, under this commander-in-chief, who they know you'll have their back and they want to serve. So it is historic, and it's the biggest reflection of how motivated Americans are by your leadership, sir.
You know, really, it's nothing more than spirit, love for the country. I guess the esprit de corps, as they say, you have more of that than we've had maybe ever, frankly. But to see it turn over a period of less than a year, I would say, but to see it turn, nobody wanted to go into the military. Now everybody wants to go into the military. Jennifer, you wanted?
Yeah, there's some new reporting on North Korea and this Navy SEAL incident in 2019. Can you say if the administration has engaged with North Korea on that incident since it happened recently?
Yeah.
And then can you share some recollections?
I don't know anything about it, no. I could look, but I know nothing about it.
Can you confirm that it happened?
I don't know anything about it. I'm hearing it now for the first time.
Okay, great. And then on the Hyundai incident in Georgia with the arrest of some construction workers at the plant, have you heard any feedback from Hyundai?
I just heard about that a little while before the news conference, and I would say that they were illegal aliens, and ICE was just doing its job. But I know nothing about the instance. It happened a little while ago. Okay?
There has been some pushback on that, though, from South Korea already, and of course, they pledged to invest $150 billion in the U.S. when they were just here, last week. Are you concerned?
Well, and they have the right to sell cars and things in our country. It's not like a one-sided deal.
Are you concerned at all about, your immigration agenda potentially clashing with these economic goals?
Well, we want to get along with other countries, and we want to have a great, stable workforce. And we had, as I understand it, a lot of illegal aliens, some not the best of people, but we had a lot of illegal aliens working there. So, look, they're doing their job. That's what they have to do. These are people that came through with Biden. They came through illegally. They came into our country, so we have to do our job.
Mr. President. The now Department of War has been involved in the crime cleanup in D.C. You've tasked Congress with proposing and passing a crime bill. What are some things that you would really like to see codified in that crime bill?
Well, I think one of the things is the cashless bail. It's killing it. When that came out, the first time, that's when you saw the real big crime start to happen. Cashless bail, what a disaster that is. You murder somebody, you don't have to put up bail, and you go out in the street and you murder somebody else. That's what's happened. It happens so often, and that's one of the things. And other of the things you're reading about, it's a standard, but just a certain toughness. I have to say, one of the elements of fascination for people over the last period of time has been what's happened to D.C. So we've gone from one of the most dangerous cities in our country to what they call a safe city. It's a totally safe city. In fact, I set up dinner in Washington, D.C. next week. I wouldn't have done that, to be honest. I would have had an obligation not to do it before I came into office, or even at the very beginning when things were so corrupt and so dangerous out on the streets. So Washington, D.C. has had virtually no crime. We even have a mayor that's admitting to it, and she's a liberal Democrat, in all fairness. She's a person that hasn't gotten exactly along with Republicans over the years. And she said she's never seen anything like it. So Washington, D.C. is a totally safe city. We have virtually no crime. It's gone from the most unsafe city in the United States, almost, just about, to one of the safest cities, maybe the safest city in the United States. That's a tremendous compliment to our military, what we did. The National Guard's done a fantastic job. Yeah, please.
Mr. President, can I ask about Florida real quick? Florida House Speaker Daniel Perez was at the White House yesterday as part of a leadership summit.
Yes.
And we understand you met with him separately. Mr. President, what did you two talk about? And also, did you explore him running for Florida Attorney General?
I didn't. We didn't talk about that, but he's done a fantastic job. He's respected all over the country, really. He's a leader, and he's done just a fantastic job. We didn't discuss anything having to do with his future. I'm sure he'd be very good at that.
My second question, Alligator Alcatraz, sticking with Florida, a major ruling appeals court blocked a federal judge's order to close it, and it can remain open for now. Your reaction?
I think they've done a fantastic job in building it, the governor and everybody else that's been involved. It's an incredible facility. It's housing people for usually a very short period of time before they get brought back to their countries. As you know, we focus on criminals before we focus on anybody else, and we're taking thousands and thousands of criminals out every month out of our country, some of them murderers. And I think Florida's done a great job by building it, and whether it's Alligator Alcatraz or anything else you want to call it, I was there. I visited with the governor, with other people. I guess Nikki was there. Tom Homan's been there a lot. A lot of people have been there from, it's an amazing facility for what it is. It's not a hotel. It's not supposed to be a hotel, but they've done a great job with it. And I'm very happy with the judge's decision.
You also mentioned Venezuela. I want to ask one more follow-up question on that. On the U.S. strike on oath tied to a Venezuelan drug cartel, the Maduro regime is pushing back today. In fact, they say the U.S. seeks regime change through military threat. Your reaction to those words, and also, would you like to see regime change in Venezuela?
Well, we're not talking about that, but we are talking about the fact that you had an election which was a very strange election, and to put it mildly. I'm being very nice when I say that. I can only say that billions of dollars of drugs are pouring into our country from Venezuela. The prisons of Venezuela have been opened up to our country. They've taken their prisoners, the worst prisoners, murderers, Tren de Aragua. The worst prisoners that you can ever imagine are now happily living in the United States of America. Now, many of them we've gotten out. It's not easy to get them out because of the liberal system that we're working with in many cases, not in all cases. But millions and millions of dollars and billions of dollars of drugs are pouring out of Venezuela and other countries. Look, China, what they're doing with fentanyl is a terrible thing. It comes through Canada and it comes through Mexico, but a lot of it's coming through Venezuela. Venezuela's been a very bad actor, and we understand that. And when you look at that boat, you see the bags of whatever it is there. Those bags were, you know what those bags represent? Hundreds of thousands of dead people in the United States. That's what they represent. Yeah, please.
Mr. President, your reaction to the jobs report this morning?
Well, I'm going to talk about that in a minute. We have our great people here, so I'll talk that in a minute. Let's talk about this. We'll give a couple of because these two people want to get to work on the Department of War. So let's keep them first. Yeah.
Mr. President, the DOJ is reportedly considering a ban on transgender people owning guns after the Minneapolis shooting. Do you think they should...
Are we talking in the military?
In general.
Okay, I thought you were talking about in the military. I'll refer to that then differently. Because it's not a military question, I'll be able to pass on that very nicely unless you'd like to talk about it. No, Pete doesn't want any part of that question. Yes, please.
Mr. President, who do you blame for losing India to China? In your post earlier today in the morning, you did put that out.
I don't think we have. You know, I've been very disappointed that India would be buying so much oil, as you know, from Russia. And I let them know that. We put a very big tariff on India, 50% tariff, very high tariff. I get along very well with Modi, as you know. He's great. He was here a couple of months ago. In fact, we went to the Rose Garden, and the grass was so soaking wet. It was such a terrible place to have a news conference. I said, well, let's use a beautiful white stone emblematic of the White House, okay? And it's been very well received. But we had a news conference on the grass. That was my last news conference I had on the grass because everybody sunk in. You probably sunk in. Every reporter out there, they ruined their shoes. We made that change. It's been a really well-received change. Yeah, please, go ahead.
On Venezuela, you've sent F-35s out of Puerto Rico. You've sent naval vessels into the Caribbean. You're concerned about drugs being illegally sent into the
Yeah.
How do you describe this buildup, this situation?
Well, I just think it's strong. We're
War?
strong on drugs. We don't want drugs killing our people. I believe we lost 300,000. You know, they always say 95, 100,000. I believe they've been saying that for 20 years. I believe we lost 300,000 people last year. I know families that lost their son. Those families will never be the same. I know a family lost a daughter, a beautiful daughter. In fact, it was like she took something that she thought was like a minor deal, and it turned out to be riddled out with fentanyl, the size of the head of a pin, and you're dead. And no, we're stopping the drugs. We're going to save a lot of people. Look, whether it's 100,000, but it's not. It's 300, 350,000 people died last year from drugs. And we're not going to let that happen to this country. Think of that. Think if you're in a war and you lose 300,000. We'll lose 600,000 in the, pretty much between Gettysburg and all of that, the Civil War, we lost, what, 600,000. So we're losing half of that every year to drugs. We're not going to do it. We're not going to allow it to happen. You think of the wars. If we lost 600,000 people in a war, but we lose that every 2 years, more than that. So it's 300 to 350,000 people. And when I see boats coming in, like loaded up the other day with all sorts of drugs, probably fentanyl mostly, but all sorts of drugs, and we're going to take them out. And if people want to have fun going on the high seas or the low seas, they're going to be in trouble. I will tell you, boat traffic is substantially down in the area that happened. And they called it the runway. It's a runway to the United States. And boat traffic is very substantially down on the runway. You can imagine why. I think anybody that saw that is going to say, I'll take a pass. I don't even know about fishermen. They may say, I'm not getting on the boat. I'm not going to take a chance.
What happens if Venezuela flies jets over U.S. naval vessels again?
Well, I would say they're going to be in trouble. We'll let them know about that. We heard that happen, but it wasn't really over, not like they described. But I would say, General, if they do that, you have a choice of doing anything you want, okay? If they fly in a dangerous position, I would say that you can, you or your captains can make the decision as to what they want to do, all right? Sure.
Sir, How close did they get, Mr. President? You said they didn't go over.
Say it?
How close did they get? You said the planes did not
Well,
go
I don't want
over.
to talk about that, but if they do put us in a dangerous position, they'll be shut down. Thank you very much, everybody. So we're going to now cover the G20, and I'm going to let these people go back to the Department of War and figure out how to maintain peace. Okay? Thank you very much. Thank you very much. Congratulations, General. Thank you very much. Appreciate it. Great job.
All right, folks, you've been listening to President Trump live there in the Oval Office, answering a lot of questions about the change, certainly in the name of the Department of Defense to the Department of War, but really taking questions when it comes to the U.S., specifically on Venezuela, a story that we have certainly been tracking here at Bloomberg, that the United States will deploy stealth fighter jets to the Caribbean after 2 Venezuelan military aircraft flew over an American naval vessel in the area. So this U.S. strike that we know on a speedboat purportedly carrying drugs from Venezuela was followed by a Venezuelan flyby, which the Pentagon described as a highly provocative move designed to interfere with U.S. counter-narcotics operations. So the president saying specifically, we're strong on drugs, and talked specifically about Venezuelan President Maduro, not talking about a regime change, but said that the Maduro election was very strange. But again, saying that they will be tough on Venezuela. We've got a great voice on this. Bloomberg Intelligence Senior Defense Analyst Wayne Sanders joining us right now. Wayne, talk to us a little bit about what we got from the president on Venezuela, the name change for the department. There's kind of a lot coming at us. What caught your attention here?
Well, I think the biggest thing, it's coinciding, if you think about it a little bit. The Department of War, as well as what's going on in Venezuela right now, is the president is taking the fight to them. And part of changing the name to Department of War over Department of Defense is really being able to say that, right? We do a lot more than the United States military. They fight and win wars. That's what they do. You know, one of the things that used to be in the Army is, hey, we like to blow things up. And as part of that, it is that warfighter mentality that Secretary Hegseth has tried bringing back as well. All these things are part of that Department of War mentality back to 1947. That's what it was until 1947. There was a Department of War and there was a Department of Navy. And now, bam, here you have were coming back to Department of War from the Department of Defense. I think it's just providing a little bit more honesty and clarity about in the direction, the strategic focus on what the U.S. military is trying to do.
Does the strategy actually change, though?
No, I don't think it does from the standpoint. I think it's more of a culture. You heard the president mention about esprit de corps. It is under certain different administrations, depending on how things were going, is how aggressive the U.S. could be. I came from a cyber background, and how much I was allowed to gain and maintain access to bad guy networks and what I could do with them and all that was always going to be dependent on what type of authorities were granted to me. And so by changing it up and saying that, it's also a powerful message to not only our allies saying that we are going to remain strong in these kinds of ways, but also to our adversaries is we're not always just going to play defense and wait for something bad to happen to us before we respond.
Wait, can the president just do this, though, and just kind of rename, rebrand things?
Well, I mean, he has to this point. I don't actually know what it takes to be able to change the name on that, on whether or not somebody's going to come from Congress and say that requires some type of congressional approval. I think as long as you're not changing anything from like Title 10 U.S. Code, which is the military forces authorities to be able to conduct their operation, at that point in time, you're really just talking about a name change that affects culture, but you're not saying, okay, we're now going to change what our rules of engagement are. We're not going to go and change those. You talk about Venezuela, the boat that was hit, right? That took place in international waters, well outside of the 12 nautical miles. That would be considered that sovereign territory for Venezuela, right? So from that Navy perspective, and then being able to declare something a terrorist organization for narco-terrorism, it is something that has been done in the past. It's just now, because of everything that's going on, I think it definitely takes a front seat in the news.
And just to kind of build on, just going back to these name changes, and it was something we talked about with our David Weston, host of Bloomberg Wall Street Week. It seems like department names changes are rare, do require congressional approval. But again, with the composition of this current Congress, it's probably unlikely that anybody would oppose this initiative by the president. I don't know, Wayne, I just think about the stuff that's going on here, and we continue to see things that seem to pick away at geopolitics and national security. Is the U.S. more secure under a Trump administration?
I would say yes. I mean, if you look at the way, if you look at it from the head of state position that President Trump has, when he looks across different world leaders, they're taking the military in this a lot more seriously. From if you actually have military troops on there, where you're actually going to be. If you're looking at Putin or Xi or Kim Jong-un, right? Everybody just came together for that Chinese parade. They put those pieces together, but at that point in time, it was just something that's up there for a spectacle. In terms of what they're doing to actually engage and trying to tempt, some type of action from the U.S., it hasn't been seen as much underneath the Trump administration over the last 8 months.
I'm wondering about all of this in the context of the companies that you cover, Wayne. You're senior defense analyst. You cover companies including Boeing, Lockheed Martin, L3 Harris, and more, Northrop Grumman. The list goes on and on. What's the main shift that investors need to understand based on what the president has done thus far, especially with regard to culture?
Well, I think so. It's the team, right? I'm just one guy. Actually, my teammates are the ones who actually own the companies. But for the most part, the biggest piece here for that is there's been a lot of focus on being able to provide not only faster acquisition processes for being able to deal with defense primes, but also then bringing in the medium-sized companies, as well as clearing the way on working with some of the privates to get them additional contracts as well. So I think from that perspective, there's a lot of positivity that's coming from the U.S. side of the house from defense. You look at European defense spending and anything they're dealing with Russia, a lot of the same kind of thing is going on is, hey, now is the time to be able to invest not only in additional infrastructure, but you also have to look at then the capacity, even the lines for if you're looking at Lockheed Martin and PAC-3 interceptors, or you're looking at the Patriot systems, and you're looking at a lot of the different air defense components that are out there for radars and everything else. Now is the time that you're seeing people invest more, and you're seeing a lot of the primes coming in with additional capacity, realizing that the amount that we have isn't enough. And so we need to double down on those production lines.
All right. Thank you so much. Wayne Sanders, he's Bloomberg Intelligence Senior Defense Analyst, joining us here on this Friday following some of the comments off of President Trump in the Oval Office. He continues to make some comments. We're going to continue to monitor it and bring you any pertinent comments.
In the meantime, federal agents detained 475 people at a Hyundai Motor Company's $7.6 billion manufacturing complex in Georgia this week. It's the largest single-site enforcement operation in the history of the Homeland Security Department's investigative arm. We've got Miles Miller with us. He's Bloomberg News senior reporter. He covers Homeland Security and the FBI. He joins us from New York. Miles, what can you tell us about this raid?
Yeah, so this raid is one of two separate ones that have happened within the last 24 hours. It was focused on Savannah, Georgia, or near Savannah, Georgia, the electric vehicle plant that Hyundai had spent $7.6 billion on building. The crux of this case, and cases like it, is illegal hiring practices. ICE has been going in and doing what appear to be these workplace sweeps. And what they do is they go in and seeing if any of the people working there, whether they're direct employees or subcontractors, have the papers necessary to be working there. In this instance, we were told by Homeland Security investigations that there were a number of South Korean nationals who had come into the country to work here specifically, but did not have the right paperwork, some overstaying visas, others having more complicated matters. But that was really at the crux of this. I spoke with a source today, and they said, one of the things that they're looking for, that's going to be the big focus of the Trump administration in the next couple of months now, is going to be looking at illegal hiring practices, number one, but then to build criminal cases, checking the books, making sure that they're paying taxes on these employees. That's really the crux of the immigration push beyond the sort of immigration sweeps we're seeing in cities around the country.
Yeah, Miles, we're going to talk about Eric Adams in just a second. I just very briefly, a lot of our focus has been on, a lot of the Trump administration's focus has been on immigrants coming from South America and Central America and Mexico. These folks not from there, as you mentioned, South Korea mostly, all? What do we know?
Yeah, a good number of them are South Korean nationals. We actually heard from, the embassy and the foreign ministry, and they expressed regret that its citizens were caught in the raid, and so they were sending some consular staff to Georgia. Right, these are very complex electric vehicle batteries, and the president has made the push that manufacturers should be building in the United States. Hyundai making that great effort to do that here, but then you see, what is a very complicated issue on two fronts, the immigration side, but also on the diplomatic and state side. If companies are going to send people here to work, the expectation by the U.S. government is that they're here with proper paperwork, and that's going to be something that you see all around the country. There are a number of companies, whether here in New York or elsewhere in the country, that are investing in the United States. Well, the message from the Trump administration is that when they do that, they make sure that their workers have the right visas. And if they can't find people, who are foreign nationals to do it, that they're investing the time to find U.S. nationals who could do those jobs as well.
All right, and we'll see if we hear anything more on this, certainly from the company. The raid coming as Hyundai Chairman Eisen Chung is scheduled to speak next week at an auto industry conference in Detroit, so something we'll be following. We got to shift to Mayor Eric Adams. It seems like that he is expected to make some announcements this afternoon or later today, Miles, that he is going to stay in the mayoral race. He's already mayor, but he's going to stay in the race and not drop back.
Yeah, so I'm here at City Hall right now. This is room 9, where we work as part of the City Hall press corps, and the mayor is on the other wing of the building. One thing that was very notable today is that the mayor did not come into City Hall. He wasn't spotted here all day. He's been huddled at Gracie Mansion with his team, trying to figure out the best path forward, right? There are a number of reporting lines that he, is being courted by the business community to take a job and leave the race, and that also that he is being considered for some posts within the Trump administration. Now, what we've learned from Frank Carone, the chair of his campaign, is that he does plan to stay in this race. And I spoke with folks who are close to the campaign and people who are close to the president. Here's what they said. that the president was very clear that he thinks this needs to be a two-person race. And so I said, does that mean that he wanted Trump out? Does that mean that he wanted Adams out? Does that mean that he wanted Curtis Sliwa out? And he just said that in the conversation with Catsimatidis, John Catsimatidis, a billionaire real estate and supermarket and many other ventures a figure here in New York, is that he just wants this race to be cleared so that it's two people, Mamdani and someone strong, to fight till November. And Eric Adams is making it clear that he wants to stay in the race and wants to continue with what he's doing. And he told us just last week that he's staying in no matter what. And so it appears this is the message he's going to send again today.
All right, we're going to leave it there. Miles, thank you so much. Really appreciate it. Miles Miller joining us there with the latest on some of the news coming our way on this Friday.
That press conference was supposed to be at 4:30 Wall Street time. It's been pushed back to 5 o'clock. So expect to, when it does start, you will hear it and see it on Bloomberg Radio, Bloomberg Originals, YouTube.
Miles, by the way, Bloomberg News senior reporter covering Homeland Security and the FBI, joining us from New York there. I guess we're done. Hey, check out our weekend broadcast. You can find it on Bloomberg Radio at 8 a.m. Wall Street time. Also our podcast feed. Have a good, safe weekend, everybody. We will see you from the West Coast. That's coming up on Monday. Balance of Power starts here.
This is Balance of Power, live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Kriti Gupta, I'm Joe Matthew. Tonight, rate cut expectations jump on a weak jobs report. The disappointing jobs data released today validating fears the U.S. labor market may be on the brink of a downturn. Now the latest numbers, the first since the firing of the BLS commissioner last month, lifted expectations for a potential Fed rate cut less than 2 weeks from now.
Plus, the president now calling out India for working with Russia and China. The criticism coming from the White House against major trade partners in Asia as we get reports of Putin now threatening any Western troops on the ground in Ukraine. All the while, the White House renaming the Defense Department back to the decades-old War Department. More on the fast-developing news when former Secretary of Defense and former CIA Director Liam Panetta joins the program.
Also tonight, the president threatening a Section 301 trade probe after Google is hit with a $3.5 billion fine by the EU. We'll get into what Donald Trump said and the market reaction up ahead. Attacks on the CDC and the 2020 COVID response rampant in yesterday's RFK Jr. hearing on the Hill. Up ahead, we'll be joined by someone who was there for it all. Former White House coronavirus response coordinator Dr. Deborah Birx joins us. Up ahead.
And will Elon Musk be the first trillion-dollar man? We'll have the details behind the Tesla board's long-awaited pay package for Musk and what they're asking him to leave behind in order to get it.
We begin this evening with developments from the White House. The president convening the press in the Oval Office for the signing of an executive order that renames the Defense Department to the Department of War. Here's part of what the president had to say a short time ago.
I think it sends a message of victory. I think it sends really a message of strength. We're very strong. We're much stronger than anyone would really understand. And again, you know, having the great equipment, we have just so much better.
We should note the formal renaming of the Defense Department would require Congress to approve, but the order does say the new name can be used in official correspondence and in ceremonial contexts and documents, including the title of Pete Hegseth, who you can see there if you're with us on Bloomberg TV or on YouTube. Now the Secretary of War, as the president himself called him. Joining us now off the top, Bloomberg's Laura Davison with us in Washington, our Deputy Washington Bureau Chief. What do we make of this? The president was asked today if Congress would codify this. He said, we'll find out.
Well, he doesn't really need Congress to. Yes, officially to check all the boxes, of course, but he can call it the Department of War if he wants to. He can change it all on the logos, on the signs. You know, just legally, it would not technically be the Department of War. Okay. But this is a really this is back to the Truman era that this was changed. It's an interesting move, though, for someone who is openly campaigning for the Nobel Peace Prize, who also has said, he wants to be his top priorities to reach peace deals in both Ukraine and the Middle East. But this is, Trump likes things that seem big and powerful. Why we saw the video of the Venezuelan boat, being shot at, earlier this week is Trump thinks it's cool. Trump thinks the Department of War is a cool name, and that's why we've got that.
All right, Bloomberg's Laura Davidson, thank you so much walking us through at least the latest comments from Donald Trump. He had plenty more to say, including the latest on the jobs report. That's the other big story from the White House today after the jobs data was released. Now, the Bureau of Labor Statistics announcing employers added just 22,000 jobs in August, the unemployment rate rising to 4.3%. The figures, including revisions that showed payrolls were negative in June for the first time since December of 2020, setting expectations that officials will indeed need to intervene in the Fed's September 17th meeting to support the labor market. The president, however, even before the figures were released, called into question the credibility of the numbers. For more, let's bring in Bloomberg's Enda Curran, who, of course, covers all of it. Enda, was this a shock payrolls report, or was this just one data print?
Well, it reinforced the idea that the labour market is weak and probably weaker than most economists had expected. And you just outlined the numbers there. 22,000 gain is pretty tepid. That negative print in June, the first negative print since 2020, the depths of the pandemic, speaking to the idea that, there is, as some people describe it, it's not about mass layoffs, but there's certainly not a lot of hiring going on either. Now, within that, by the way, a lot of the hiring is relying on healthcare, on the leisure sector, some strength in retail, but other sectors like information services, financial services, and manufacturing, despite all the political focus on manufacturing, continuing to shed jobs.
What do we think about that? To see an outright decline in manufacturing while companies, some of whom were represented at the White House last evening in a dinner with President Trump, are investing hundreds of billions, as we continue to hear even from Howard Lutnick this morning on Bloomberg Surveillance. Where is all of that money going? If we're building out data centers, don't we need someone to build them?
Well, in terms of the actual data for right now, the reason manufacturing sector is losing jobs, some of it is down to attrition. So they're just not filling jobs that they once would have, and that's translating as a job loss. So that's the technical explanation. But to your point, and this is what the White House says, they say there's obviously hundreds of billions of investment coming down the line from companies, not just US companies, foreign companies. That will take time to get off the ground, Joe. I mean, if these projects are delivered, obviously that will deliver jobs over time. But in terms of next month's payrolls or next quarter, those are much longer term projects.
Yes, that's why the president said today it'll be another year before we see the job numbers he's looking for. Bloomberg's Enda Curran, thank you so much for walking us through it. Earlier today, the president responded to a $3.5 billion fine the European Union issued against Google. The union said the fine is because the company is abusing its dominance by giving its own ad exchanges competitive advantage over rivals. President Trump posting to social media, quote, "We cannot let this happen to brilliant and unprecedented American ingenuity. And if it does, I will be forced to start a Section 301 proceeding to nullify the unfair penalties being charged to these tax-paying American companies." In a second post, he said, quote, "The European Union must stop this practice against American companies immediately," unquote. For more, we bring in Bloomberg's Romaine Bostick for today's Power Moves. He's live at World Headquarters in New York. Romaine?
Yeah, and just a few minutes ago, Joe, Alphabet did respond saying that they plan to accrue that fine, roughly 3 billion euros, 3.5 billion US dollars. They will accrue that for the current quarter, the third quarter here of 2025. But of course, the big bugaboo in all this is whether Trump pushes back on that and whether he can push back on that to such a degree that the European Union would actually pull back on that. Remember, Google has had an interesting week, actually one of the best weeks, at least for the stock, going back to April. It's having one of its best years. It's up 66% since those April lows, more than 25% since the start of the year. Remember, we came into this week with a favorable U.S. antitrust ruling that basically means that Google won't necessarily have to separate its Chrome browser from the rest of the company. And then, of course, we learned earlier this morning about that fine coming from the European Commission as part of a long-running investigation. And as you see there on your screen, there are several other fines, several other potential fines that the company is facing. But now, of course, that has become a political football. And of course, you just mentioned that big event, that AI event at the White House yesterday, the Alphabet CEO, Sundar Pichai, in attendance there. So seemingly, at least for now, in the good graces of the Trump administration. And now investors are going to have to look a little bit less at the P&L for this company and maybe a little bit more to the political relationship that it has with the Trump administration and whether it can do something, if anything, to maybe blunt the impact of this European fine.
Bloomberg's Romaine Bostick in New York. Romaine, thank you. We've spent so much time talking about the impact of tariffs and the legal challenges against them. President Trump is discussing that right now with reporters in the Oval Office. Let's put an ear on this conversation live on Bloomberg.
You were the first Republican president over 30 years to win Miami-Dade County, and you did it because you followed through on your promises. And in Miami, what we're doing is we are following through on those promises as well. We've kept taxes low, we've kept people safe, we've leaned into innovation, we've grown 150% in the last 10 years. We've created one of the most intriguing ecosystems in the world. And this decision is not only generationally important for the city, but it puts the city on the map as one of the truly great global cities. So on behalf of all of the workers of Miami, those that work in the hospitality industry, I know you own many hospitality assets and properties, all of the small business owners who are going to benefit economically from having the G20 in Miami.
Tremendous benefit.
We're going to let this breathe for a moment here. Of course, this is when they change the topic. We've got ears on this conversation, as I mentioned. He's got the press pool in the Oval Office. The matter of tariffs has been coming up along with the renaming of the Department of Defense. I'm Joe Matthew in Washington, alongside Kriti Gupta with more analysis on the job numbers now from experts appearing today on Bloomberg, including one that we want to introduce who is with us here in our studios. Kriti, why don't you take it away?
Yeah, absolutely. 22,000 jobs was the number. As Joe said, we should bring in an expert. Wendy Edelberg joins us around the table. The conversation in the Oval today was fascinating. He says he needs a year for the actual jobs numbers he's expecting to show up. What changes in a year from the 22,000 we got today?
My guess is that that number continues to go down. And here's why. When the Trump administration and then Congress put in place the immigration policy that we now have, it was clear, to me at least, that labor force growth was going to slow. And that was going to mean that the kinds of numbers that we could sustain in a healthy job market were like the numbers that we saw this past month. And in fact, as labor force continues to grow more slowly in coming years, that number that this labor market will be able to manage over the next year or so, that number is only going down and may turn negative. The risk was that as labor supply was going to slow, it would take some time for the economy to catch up with that new reality, and we would get unwanted labor shortages, we would get inflation, we would get disruptions across the economy. Well, the transition has been somewhat easier than some people feared for a bunch of reasons, partly because less immigration has meant less demand for goods and services, partly because businesses are pulling back because of tariff uncertainty. But regardless of what it is, this is the healthy labor market that we can look forward to for coming months, coming years. It's only going to get, we're only going to see less employment growth over time if we keep this immigration policy.
Well, speaking of that immigration policy, you were talking about not having enough of a labor force. The argument from the White House might be that this isn't about eliminating labor, it's about retraining some of the skilled labor. Do we have the people, do we have the bodies, do we have the training to do that, if not in the next 12 months, say 5 years down the road?
I think the theory of the case is that somehow what we're going to see is a massive increase in labor force participation among prime age men. This is a group where we've seen declining labor force participation for decades in a way that, economists and other observers have tried really hard to understand. Trump is hoping that his policies pull those people into the labor force.
Yeah.
It could happen, but I'll say we've had really strong labor markets time and again, including in the past couple of years. And those very strong labor markets have not been enough to pull in the prime age men who don't seem to want to participate.
Yeah.
So I'm not sure that I buy it.
All right. Wendy Edelberg, Senior Fellow of Economic Studies at the Brookings Institution, walking us through some of the numbers we got. Let's go back to the White House, where President Trump is taking some reporter questions.
When energy comes down, everything comes down. And we brought down the price of groceries and specifically the price of eggs. You remember that first week when you were screaming about eggs? I said, I know nothing about them. I just got here. That's Biden's problem. But we got the cost of eggs down to really low numbers. So we brought costs down for people. And, it's something I said. And the Democrats have this false narrative. They say, costs went up. They just say things that it's just like incredible. If you look at energy, I think you're going to be at $2 a gallon with cars very shortly. $2. It was $4, $5 under the Democrats. That's a huge, it's like a massive tax cut. And speaking of tax cuts, we gave you the largest tax cut in history in the bill that we just approved. The largest tax cut in history. And there'll be no tax on tips, no tax on Social Security, no tax on overtime. One of the big things you get is you buy a car and you borrow money to buy the car, you're allowed to deduct your interest, which, Scott, has never happened before. You know, rich people like to talk about deductions. Middle income, they never gave them deductions. I got them one of the best deductions, an interest deduction. So it's great. Jennifer, please.
Yeah, a couple questions on the G20, sir. Is there any update on your plans to attend this year's G20? And then are you saying for next year?
I won't be going this year. It's in South Africa. I won't be going. JD will be going, great vice president, and he looks forward to it. But no, I won't be going to that.
And then on the guest for 2026, are you saying it'll just be exclusively the 19 countries, the 2 blocks? There won't be any?
No, we're going to invite other countries as observers. They call them observers, but they'll have something to say. But we're going to invite Poland. Already I've issued them an invitation. They're great. They were just here, as you know. Great leader, great new leader. One of the big surprises, I was so happy I endorsed him, actually, and he won. And he's going to be a great leader of Poland. But I've invited Poland already.
What about Russia? What about Russia?
Oh, that's interesting. I haven't thought of that. No, I haven't thought of that. That's an interesting question. I'm going to think about that for a little while.
India and Brazil.
Mr. President, you just mentioned that the tax cut bill. Why the rebrand from One Big Beautiful Bill?
Oh, I just save words. I said the bill. It's one big. I actually call it the great. I actually call it the great big beautiful bill. But it's a lot of words.
Is that how you want Republicans to kind of talk about it? When they
I don't. You know, I just want them to say what's in it. It's an incredible bill for the middle class, for the working person. You know, we are a party of the working. It used to be the opposite. The Democrats were for the working people, and the Republicans were supposedly for the rich. The Republican Party's taken in millions of people, and the Democrats have lost millions of people. They've gone crazy. Honestly, I think they're crazy. What's happened to them, I don't know. They suffer major Trump derangement syndrome, and it's turned out to be actually a disease, but it's a disease of weak people and stupid people, because all we do is we cut taxes, we create great policy. Their policy is so terrible. They refuse to acknowledge, as an example, I see today, it's a big debate again, the women, they don't want men playing in their sports. They don't want it. The Democrats want men to play in women's sports. I saw the great governor, we have Governor Youngkin, talking about it today, that the woman who's running against our Republican candidate, who's excellent, is like so much into the, men being able to use women's bathrooms. Okay, what's that all about? Men playing in women's sports, wants open borders. Again, they want actually, after what we've gone through with millions, I think 25 million people came in from prisons, from mental institutions, drug dealers, drug addicts. They're pouring into, they poured in, now we have none coming in. The border's been sealed for a long time, actually almost since I got into office. Remember when the Democrats said we need legislation? I didn't have any legislation. I said close the borders. And now the borders, for the last 4 months, not one person has been allowed to come into this country illegally, not one. Done by people that would normally like to see you look bad. Those are the numbers. So it's been an amazing job. Yeah, please.
Mr. President, this is going to be a major event and a major meeting for South Florida, for you, for Mayor Suarez. I know this is not until next year in Miami, but do preparations begin today? And if so, what is being done?
They've already begun. We first had to deconflict our Basel with the dates, and so we have already started doing that. And so thanks to the president's team.
He started a long time ago, actually. If you knew him, he was working on this long before this press conference.
Yes, sir.
It's in good shape. Going to be great.
Yeah, Mr. President, we learned this morning that we've lost 78,000 manufacturing jobs this year. How do you explain it?
Well, one thing we have is, we have the interest rates are too high. That was, a matter of the Fed. But the other thing is so many different elements aren't included yet. And one of the things we've learned, and we learned that the hard way, watching over the last few months, are the corrections that people have been making. They'll say you're losing jobs, and then they'll say, by the way, we have a correction a month later of, 100,000 jobs are missing. They actually had a correction once of 850,000 jobs. But I'll let Kevin just speak about that a little bit, because I heard him speaking about it this morning. I thought he did very well. Please.
Well, thank you very much, sir. Well, I think that if you look at the indicators, there's capital spending boom, industrial production at an all-time high. The Atlanta Fed says GDP now is north of 3%. And so all the indicators are saying that things are really strong. And what we've also seen is that Goldman Sachs put out a study yesterday that said that the August number tends to be really messed up because of seasonal adjustment things, and they tend to be revised way up. And so I think if they were revised up, which has happened on average over the last 15 years by about 60,000, then everything else would make sense. But right now we're puzzled about the BLS numbers and looking forward for new leadership there to make it so that the numbers are more reliable.
And again, we're building, they've started building all of these factories and plants, including car factories. Car factories are coming back. We lost more than 50% of our car production over the years. And I think we're going to get all of it back. It's coming back in really rapidly. Really, we're building a lot of car plants. Indiana, places that you don't think of it so much are taken, but also Detroit, lots of places it's coming in where I think we're going to get everything. We've lost it over a period of 40 years, and I think we're going to get it all back in a very short period of time. And big ones, big plants, incredible plants that were never going to come back. Without the tariffs, they wouldn't have come back. And I think without the election on November 5th, they wouldn't come back either. The election was very important also. Yeah, please.
As we've been here, Mayor Adams of New York has announced that he's staying in the mayoral race there. Can you react to that, but also tell us?
No, I mean, he has to do what he wants. No, I mean, he's free to do what he wants. It would seem to me, and everybody in this room, including you, that the only way you're going to beat the communists, because you have a communist running, which is fine. I'll have to deal with a communist in New York City. I never thought that was going to happen. This is something I didn't think was going to happen, Scott. You're going to have to explain this one, because we're going to have a communist mayor. It would seem to me that if he stays in, if you have more than one candidate running against him, it can't be one. If you have one candidate, if he's the right candidate, I would say that Cuomo might have a chance of winning if it was a one-on-one. If it's not one-on-one, it's going to be a hard race. And we'll get used to a communist, and he's going to have to go through the White House and get approvals for everything. And we're going to make sure that New York is not hurt. We want to make sure that New York is cherished and taken care of. And so I didn't know he was running or not running.
But you didn't offer him an ambassador?
No, I didn't do that. No, I wouldn't do that. It's nothing wrong with doing it, but I didn't do that.
We asked for the G20. We understand that it'll be held at Doral.
Yes, it's going to be a Doral, yeah.
You considered that with the G7 last time. You decided against it. Why go forward with it now?
Well, I think that everybody wants it there because it's right next to the airport. It's the best location. It's beautiful, beautiful everything. They actually requested that it be there because the location is the best. And we will not make any money on it. We're doing a deal where it's not going to be money. There's no money in it. I just want it to go well. And it's going to be each country will have its own building. I think it'll be really a beautiful thing. And Doral's been very, very successful. One of the most successful properties in the country. And, frankly, it's the problem is in December, that's the biggest month in Florida. So, using it for, you can't get a room in Florida in December, January, et cetera, that area. And that's the time we're talking about. So from that standpoint, it's not good, but we want to make sure it's good. I think Doral would be the best location. And again, they'll have their own buildings. It'll be incredible for them. And being like 10 minutes, less than 10 minutes from the airport, and it's a big airport, international, all of the planes will be able to land, go right into their quarters. So I think it'll work out very well.
Earlier on your Fed answer, sir, you said that you're looking at maybe 3 candidates or 4.
3 candidates.
Should we interpret that you like Secretary Vest in his current role?
Well, I like him too, but I had him as a 4th. No, I had 4. You were talking about 4. Now I'm talking about 3. He told me I'm not leaving. So he wants to be doing, and if he was leaving, he would certainly be one of the people I'd want. But I asked him specifically. I could ask him right now. Would you rather stay where you are as treasurer, or would you rather go to the...
Sir, I'm the only person on the planet who does not want the job.
Okay. He really told me, he said, I love what I'm doing.
But we assume
I wouldn't want to really take him because he is doing a great job.
are the top three still then
It's
Mr. Warsh and Mr. Waller?
I am looking at Kevin also, and I'm looking at, yeah, I would say you could say those are the top three. Good job. That's very good.
Just to clarify, so you're saying you believe Andrew Cuomo would be the best one-on-one candidate against Liz?
Well, I think if I'm only going by the polls. It's not an endorsement or anything. It just seems that he's second. And what you do to win is you take the guy who's second and you hopefully add one and two. But maybe if the one isn't getting out, then he's not getting out, and that's okay. I think the mayor's a very nice person. I helped him. He was got caught up in a scam by the Biden administration, what they did. So I helped him out a little bit, but I would understand why he doesn't do it. I do think this. I think if you have more than one candidate, we've got ourselves a communist mayor in New York. And I don't like communist mayors. I don't like them. Yeah.
You passed the One Big Beautiful Bill, sir. 5 months, all these slew of events next year. World Cup, G20, all America 250. Given this, what's your economic outlook for the year 2026? How much growth do you think is reasonable for us to expect economically next year?
Well, I heard, and we were on a very downward path with Biden, and I heard that the most we could do is 1% GDP, and now I'm hearing 3.2% and 3.5% and all. And our big year won't be really next year. I think it'll be the year after, because when these plants start opening up, it takes a period of time to build them. We're going to have tremendous job growth. It's unprecedented. We have unprecedented in history. There's never been anything like it, because we're going to have more than $17 trillion invested. There's never been anything like that. If we did $1 trillion in 1 year, and this is 6 months, 7 months, because we really focused on it over the last 6 months. But we're going to be doing, nobody's ever seen numbers like this. When this stuff starts opening up, our country's being rebuilt. And by the way, Washington, D.C. is being rebuilt. In addition to the fact that we have a safe city now, and our National Guard was fantastic and worked with the mayor, worked with everybody, we're also doing a refurbishing of Washington. We're going to redo some of the roads, the surfaces. We're going to redo the medians. We're going to take the broken tiles off the tunnels and put brand new tiles up. And we're going to regrass all the parks. They're going to be regrassed by people that build world-class golf courses and